Good morning. Good morning. Good morning. What's up, guys? How's everybody doing? I'm just trying to get a few things situated here. Just give me one moment. I was working. I have so much I have to do for this stream. I was trying to make an intro video yesterday. I've been working on that, to kind of get this thing out of rookie mode. But I hope you guys got your sleep. I hope you guys are doing well. I feel like we're gonna have a move today, and I'm gonna give you guys that move. All right, I talked about it a little bit yesterday, and look, here goes the spy. Look, isn't that funny? As soon as I say that, that's hilarious, isn't it? That's so funny. um, Thanks for joining us. If you guys stop by, if you enjoy any of the analysis, if you have any questions, throw them in the chat. If you have anything you're looking at, throw it in the chat. That way, we can all work together and come up with a game plan and make some money. That's the goal here. Um, I had I've had a good week so far. I didn't make any trades yesterday. 100% trade on the Qs on Monday. We gave out the SoFi trade Monday morning. Really good setups, really easy setups. So let's run through now and see what we have going on. See if we can't come up with something for the day. I'm not feeling too well, so I'm not gonna have the camera on. Hopefully that's okay. Nobody should really care about that. If you guys could hit the like button, subscribe if you haven't already done so. If you guys have any suggestions, anything I can do better, throw it in the chat. Let me know. I'm always looking to improve. Again, I've been feeling under the weather, so let's get right into it. Let me make sure everything is lined up correctly, because I want to get like today. I want you guys to have something every day that you focus on. Yeah, it's not too bad. It's good, right? I want you guys to have something that you can focus and work on, right? Not just trying to make money in the markets, right? Have something that you can work on, right? Do you need to work on reading level 2, right? Do you need to work on reading level 2 and time and sales and kind of matching up how how it reacts at that level, right? Things like that. Something to work on. Is it whether it's your entries or whether it's your exits? Maybe you've gotten, have you sat down for a week and literally just it started practicing your entries, right? Trying to nail entries. Like, you're not going to be perfect, but just working on that, right? Trying to enter and exit correctly. Maybe being a little bit more patient. Something you have to work on something, and I don't mean just like one day, one morning. I'm talking about all week. I mean, these are things that I've done and I will still continue to do, right? Working and progressing to be the best that you can be at this. You have to do those things. Have you sat and just watched different moving averages and it's just things like that. There's always something you can work on, whether it's from entries to exits, watching the dollar versus the S&P or the Nasdaq, or just there's a lot that you can do. I would seriously, if you haven't, I would start now. I would start working on some of those things and do it for a week straight, right? Even just watching time and sales throughout the day. If you trade in the morning, use the rest of the day to watch time and sales on level 2. I mean, I'm sure if you don't do this for a living, then you've already done it, or if you have time, if you have the day to yourself or whatever, take the time to do those things. All right, so the dollar's getting a bit of a pop here. It's still just stuck in this range from 105, 106. Let's go see where treasuries are. Give me the daily. Give me like a 4 hour or something. We're still just sitting around where we are. So nothing's really changed too much. All right, nothing's changed too much other than the 10 years pulling back. I'm still trying to see if this 30-year, if the long end's going to pull back or not. You have a bit of bearish divergence. So let's go through some of the news. AMD, right? A slight a slight downgrade on their on fourth quarter sales, right? The estimate was 6.37 billion, and they are estimating around 6.1 billion. I'm not sure what was said on the earnings call. FSLR, I guess, didn't do as bad as expected. All right, that's another one. So we're going to look at these. I have, let's see here. I have the, and Microsoft, yes. Wait, and Copilot. Yeah, Microsoft also had had news too. Caesar, something with a strike, I think. We're going to have Apple tomorrow, Thursday. Balance. It's going to start. Still going to get fun. We still have a lot of data. We have FOMC meeting today. I'm excited. I'm still excited. Today's Wednesday, so we have PayPal, Roku, Qualcomm's, SolarEdge, Airbnb, Etsy, Supermicro. First Source Builders is down. I haven't really checked up on these. I haven't really been too concerned with them. I want to just check out AMD and FSLR. So let's get into that. Now you do have some resistance here. There was prior support. Let's go into the SPY. Let's start there so we kind of have an idea where we're going. So check this out. I seen this earlier. All right. I seen this earlier. Now I want you guys to see something. I can take you to the futures. It doesn't matter. Right? S&P's futures. It does not matter. I don't know why it's like that. All right. Let's go to the SPY because it looks a lot better. So I was watching this morning and thought about getting a dip buy over here, but I'm like, I just didn't do it because I'd rather play options with it. So this was a really nice setup. All right, look what we did here. Look at Monday, Tuesday, and this morning. We have started the week off to the upside. We are in an uptrend. It's been a slow grind, but still, nonetheless, we're making higher highs and higher lows. You see this pivot here on what was this, Monday? See this pivot area right here, right? You bounce, you pull it back, you kind of, the lows of the day, right? The lows of the day. Kind of a double top there, and then you rally, right? And then I was looking at yesterday. I'm like, okay, what did we do? What did you do? You literally pulled right back to that area, the high of that area that was your dip buy. So I said, okay, let's see if they come in and start buying right here. That's like the low of the day. All right, that's our pivot flat top resistance, low of the day. That would be your support for a dip buy. And what happened? And literally what happened at 416.51. 416.51, guys. Start analyzing stuff like that. Look at that. You put in a double bottom there, tried to shake them out, wham, bam. Off running and gunning, guys. We're not getting the right hike today. So notice that. Even if you see something today where you pull it back, even if it's down here at 417.80, you know, and you get that low, and let's say if we rally and we just pull it back, you start hanging out, and then, you know, it might be a slow grind to the upside, so you may have to hold on to that trade. But if you see that, you know, start thinking about the long. Yes, we're up. We could probably get a bigger pullback. I'm just saying Monday and Tuesday, higher highs, higher lows. You're getting support on those pullback areas again, right? See that double top here at 414.07, 414. Where did you come down to? 414.22, right into that area, right in. You wicked right into it. All right, you wicked right into it. 414.23. What was the high of that candle? 414.26. All right. So me seeing this Monday, this area, right, the top of that area come in support Monday, or was resistance, not resistance, but that was the it's just your area, right? And yesterday we pulled back right into that little belly, and bang, you took off. And what did you do today? Here's your little area, right? And then bang. So we'll see what happens. Maybe you get a pre-market pullback of 417. Maybe. I doubt you do. We'll see what happens. I don't know what we're going to do today. I really don't, right? I have my areas, and we'll go over them real quick. So for the S&Ps, just keep an eye out for this 420 areas where I want to look to see if we get to. 420 on the S&P is my upside target. All right, we may not get there in one shot. We guys know how Fed days are. It can get volatile. I don't think this Fed day is going to be that volatile because we already are expecting, we kind of know what to expect. The market's already priced in some decently bad, or we have a gap fill here. Here's what I'm saying. You have your 200-day moving average. Where's that at? 423? Okay. So let's go to here. All right. What do you have here? You still have a gap fill here. And where's that at? That's right at the 200-day moving average. All right. So 420. What is this? 421, 422 to 423. Let's see if we can get up into that 200-day moving average. Remember, you have a gap fill there. Let me make sure I don't have to move this. And again, you can still reject this area up here at 422. Like this whole low 420 area could be an area of resistance. This is a low volume bounce back on the daily. Keep that in mind. It's been pretty low volume. Okay. Let's get into some stocks. First off, AMD. I'm still trying to figure out what I want to do with AMD because it feels like it has some strength. My instinct is like, or not my instinct. My instinct is like, don't just think you can short the bounce. But I want to look for that. Okay? I want to look for that. I got to find out a little bit more. Maybe there's a little bit more I need to know. But this 200-day moving average was double bottom right at it. We broke it. Let's see if we work our way back up to 100, which is that 200-day moving average. And let's see if that 99 to 100 area, it's like 99.50 to 200 to 100, becomes resistance. Okay, and if we cannot get up above there, then let's look for the short. And that short would take us right back down to like the low 97s. But I want to look for like 94. I want to look to see if we can ride this thing back down to the low 90s. I don't know if it's going to give it to us. But if it does, this could be a killer trade. Right? You could just hang on this down to like 90, 89 area. Right? This would, I would say you would start getting some buyers coming in like, as you're coming into the area, so you'd have to be taking profit, if this plays out. But it's not pulling back. So if you do decide to take a short on AMD on the bounce backs, remember, every time that it makes a leg down, you're probably going to have a bunch of buyers stepping in. And let's see what the overall markets do. If the overall markets are going to go to the upside, then there we go. There's our thesis to help AMD to the upside. Where do I look for this stock to go if this is a long? I want to wait for the pullbacks to yesterday's high or this support area of like 98 because it broke 98. Let's see if it can hold it. All right, looks like we're double topping up here at that 99 100 area. It's doing it now. I just think with the economic uncertainty, like if this thing doesn't sell off now, then you report a bad fourth quarter. Christmas doesn't go so well. Gaming consoles don't get sold as much as they thought that they would. Then you could really start to see some downside. But I think there's a lot of people that are still interested for, here's the thing you got to remember with a lot of these names is that a lot of these institutional holders that buy this, they're looking for a 5 to 10 year return. That's how they look at it. They're not looking at this as like a year, 2 years, 3 years. Like, what is their base case for a 5-year return? Okay. So I want to see how you do here at this 98.50. Really, it's 98. But 98.50 to 98. Let's see if you start finding support here at 98.50. Because if you look at the SPY, that's probably, or even the Qs, right? We could go back over the Qs. That's going to be your area for, maybe not. Again, it's got earnings, so it's going to be a little bit different. Yeah. You can see why, right? Resistance and support, all right? Prior resistance, right there. See how it's trying to find support there? Looks like, I don't see really too many big orders coming in there. It's more to the buy side than anything. Still early. Yeah, see how it's kind of like you're getting some dip buyers there that are just nibbling. I want to see what you do here. That's your support area. 98, 97, 99, 98. But if you start turning this resistance area 98.50 in the support, then upside target's going to be 104. That's where I'm going to be watching for this. And again, I put these circles there for when I do not have because I would like to be able to have pre-market like just this, right? I'd like to be able to I'd like to be able to customize it, right? To just have either like after hours from the day before and the morning of a pre-market, like just this, and have no pre-market prior. If anybody knows how to do that on Thinkorswim, I would love to know how. If there's a script that I could download or somehow make that possible, and if you could shoot me a message, or my email's in a link in the description, that would be awesome. If anyone out there that's viewing this knows how to do that, it would be greatly appreciated. All right, so again, it looks like you are coming into that. Where did we top out at? Right, where did we top out at? Right up at the 200-day moving average, guys. Wait, do I already have? Why is it so thin? That's hilarious. If I already have, look at it. It smacked it. That's so funny. That's so weird. I have two more. I have two of them there. That's hilarious. But it smacked that level. I might as well. I'm not gonna take it off now. But all right. So there was news with Microsoft. So that's AMD, right? I'm gonna look to get back down to these lows here. If it's a short, right? It's gonna be 94, high 93s. Upside 104. Upside is gonna be around 104. See, this could be a big resistance level here that was support. Let's see they may take this trade away from us. It is what it is. It's 9 o'clock. I need to go fill up on my coffee in just a minute. But what we have up here is another gap fill, just like the SPY, right? You see how I told you guys the SPY has a gap fill at 422, 423? Well, would you look at that? All right, would you look at that? There's your gap fill for the Qs. All right there. There's your gap fill. So I'm not too concerned about that. I'm not too concerned about it. I want to see if you get upside on AMD. I think you got to look for that 105, 104 area, right? That's what I'm looking for. Maybe if I take the half hour, you guys will see it. I need to hurry up. Let's see here. Give me an hourly chart. All right. See, that's just so. So yeah, that's support. That's going to be resistance, guys. It should be. This is if you do somehow get some upside, 104.97, 105. So it wasn't 104, it's 105. As you can see here, you can see why, right? Resistance. Jesus Lordy. I need a new mouse. I'm going to go buy a new mouse this weekend. All right. Now, I want to show you guys why would I say that area is resistance. All right. Resistance, support, support. This is a break. Tries to hold it. Breaks back below it. Resistance. Right. Support, support, support. Resistance, resistance, resistance. So, yeah. If you do, for some reason, get back up over this 100 level, guys, watch for some shorts to probably start to take profit. Or not take profit, but start to cover their positions and exit that short. And look for it to get to that 105, 104 area. All right, let's look at, I'm going to give it to you real quick right now. If you guys could, thank you guys for hitting the like button. If you just join us, do us a solid. It would help somebody find the stream that would like to be here and trade with us. We don't charge any money for it. So look at Meta. Like, share, and subscribe. That's all. So remember how I told you guys yesterday that we were like this moving average on Meta, it's coming in. I think that move's coming. whether it's today or tomorrow. Like, this is it. Like, you're stuck. We are stuck right in between that moving average. Look at it. All right, and it's only going to get tighter as the opening bell opens. They're going to close again right on one another. This thing is going to make a decent move in one direction or the other, to the upside or the downside. Remember Tesla? Remember when I told you guys Tesla? As soon as I said it with Tesla, what happened? Look at the move it made, and I told you guys it was coming in on it, and it's going to bust a move right on up to the downside or to the upside. It was right there. All right, it was right here. It was this move. Look at that candle. Right, you can see it's getting squeezed. Right, see how the moving averages is one side has to give, and what could have given you a heads up on the direction? Look at that volume. Look at that volume on the sell side, right? Versus your buying, right? So let's see if we can do the same with Meta. Like, look at that, 130, right? High 120, 130 million shares a day. The sell side was 100. So you can see here three consecutive days, and then that you just got that blow off, right? Kind of could have seen it coming there, and that was a nice move. 247, 262. Right, $12 move. We already know the ATRs on a lot of these names. So let's see if Meta can give us some kind of glimpse into what it's going to do. It just had earnings, so it could be a little, it could be a little tough. So I would kind of not. My thing is I would go with these two. I would keep the earnings out of it. I mean, you guys trade how you want. You look at it how you want. But I want to see what's going on afterwards. After the volume has left, what's really going on? Okay? So far, this was a nice bounce back to reclaim the 100-day moving average. And you had a light pullback yesterday. And we're just sitting there. Let's see. I think you still have a day or two. But coming Thursday or Friday, like, this move is coming. It's coming. It could be to the upside. I think it might be to the upside, guys. I'm going to look for 310. That'll be our first target on Meta. This is going to be another nice trade that I think is going to catch a lot of people off guard that aren't watching this name. Because they are not seeing, like, this. It's there. It's stuck with. It's got to make the decision. Because it's been in a consolidation for, like, months now. Right? This thing has just been consolidating. Back in, July? August? You've been sitting at this range. And that's okay. It's okay for it to sit there. But, like, at least get to, like, from 280 to 360. Why do I see 360, 380? Is because of prior highs, right? Or it's like, it's the range that it's in from previous. Yeah, here to there, right? That would be the range. I would say this, it's got a little bit of price action. So 350. Let's keep it 340. 340. But you have a nice couple double top there. But the major consolidations at like 340 area. So I'm looking for this to make a move. I'm looking for Meta to start to figure out a way to make a move to the upside. If I had to take an educated guess on that, I'm going to tell you that I think it would be to the upside if the volume continues. Now, it depends on what happens at the FOMC meeting today. What happens, right? Because that could completely change everything. If he talks about higher for longer, right, that's going to put pressure on tech names. And right now, tech names early in the morning were down. They were down, but now they've recovered their loss. And yes, it just went green. All right, so I'm going to watch Meta, the levels. Let me do this real quick. I mean, I've pretty much given you the levels. Hold on here. Yeah, so I have that level at 304. That's right up at that 50-day moving average. Let me take this off so I have that. I gotta take pre-market after hours off because you want to see gap. It's gonna paint the picture a lot clearer. This chart is just so ugly. It is. It's just a big consolidation phase. See, we've tried to break out, right? You tried to break out and you failed to hold it. You sold back off. Now you're trying to reclaim it. I wonder if we try to break out one last time and it fails. And it fails. I'm really curious to see if that happens. We have a gap fill. Like, you're seeing all these names have a gap fill. That's why I think we can get some upside. You know what? I may take a trade on this today. I may tear into this to see if we get it, if I get a dip buy. All right, there's your gap fill. Right there. Right, that gap fill is, to close that gap, it's up at 312.50. All right, 312.50 is that gap fill. And you want to see those things because they're important, right? And look at that. That's support and resistance area as well, right? This is why you want to use, if you don't, I would think about using, you know, taking pre-market and after hours off because things can come a little bit clearer. You have you wicked it. See, I don't consider a wick fill in the gap. Now, if I looked at it on the 5-minute, they may be different. You kind of have a gap fill here too, right? You have gaps all over the place on Meta. So this actually backs up my thesis that I think you could get a pull, you could get a bounce up out of this level to try and break out and get another failed attempt higher, and it fails to hold those gains because of the uncertainty of the future. And maybe these products that they release don't do so well, right? Maybe the sales just start to slow down, blah, 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 blah. Let's go to Microsoft real quick because they had news yesterday. We'll go to FSLR. Doesn't Microsoft look a bit like Meta? It's just consolidating, right? It's made its move out, made that prior resistance support. Let's see if it tries to bust a move higher. Let's go to the daily chart so we can really get a glimpse. I got to clean these charts up. I tried to do a little bit of that yesterday, but again, guys, because I've been sick, I've been putting in the work and then I fall asleep. You know, you know, so comes with the territory. But I'm looking to finish this week out strong. I really am because I feel like we're gonna start to get some opportunity. And I feel like a lot of people may have been put to sleep the past 2 days. There was a lot of opportunity Monday that you could have taken. So, 340. Did we hold 340? No, it's still resistance. 340 is still resistance. I mean, I would watch that, right? So 340 is still resistance. Microsoft 340, that's the first level, right? Let me write this down. All right, so Microsoft 340. We're going to watch for that level. We have like Microsoft also, right? Just like Meta, just like the rest of them, has a gap fill. There's a gap fill up here at 350. 347 is your gap fill. So if you can reclaim 350, come on. If you can maintain and hold 340 as support, I would look to take this move higher. When you're starting to trade, notice how Microsoft is making smaller moves, right? You notice how since earnings you had these big wicks, right? That's a huge day, right? Now it's taking it back. Look at this look at that following candle, 329, 336, right? And then 331 to 339, and then we have 334 to 338. See how it's getting smaller? The volatility is collapsing since the volume is leaving. You're having a decrease in volume. So, you know, your expectations have to match that when you trade these stocks. All right? I'm going to look at NVIDIA. So Microsoft, if you hold 340, I just want to see if we can bounce into 344, 345, 340 to 345 is the trade that I'm going to look at from Microsoft. I don't know why I have lines way down here. Like, it's killing me, man. I just have lines all over the place, and I hate it. I'm a stickler for having too much shit on your chart. So 345. 345. Let's see where we're at. Yeah, I need that. I need a 340 entry. All right, I need a 340 entry. You may pull it back here, right? Depending on what the markets do. If the markets pull back off of the bell, I would look for, because it looks like, so Microsoft regained the 100-day moving average, right? Tested the 50, bounced off of it, just sat there again on it, right? It didn't really, make the 100-day support. So maybe the short is the trade. Wait for a bounce back to 342 and look for a short. Because what do you have waiting up here for you? Right? What do you have up here at 342? You have a lot of sellers ready to get up out of this thing. All right? Just something to keep in mind, right? I'm actually going to do this in case we break through it, okay? In case we get there, I'm going to I'll make it this level right there, and I'm going to put it right there and make this the area. Because if you break and hold 341.75 to 342, you've seen here a bounce. You've seen here a bounce, right? You guys probably can't see it, right? Look, bounce, right? Resistance tries to sell off. Hold on, right? Reclaims it. But this was your other bounce, or right there. Right there was your other bounce, right? Bounce. Like off of that 342 area. You want to take, you guys got to, you don't have to do anything. I can't tell you what to do. This ain't financial advice. So when somebody tells you what to do, they need to realize they can get in trouble for that, I'm sure. Take notice on what is going on at what price area. That's all I'm trying to say, right? Because you can clearly see here, when you hold 342, that high, that 341.80, 341.70 level, you hold that level, you're getting buyers off of it, right? Off of it. It wasn't until we made it resistance is when we got the selling. So if we reclaim the top of this red box, watch out. It's going to make a run at those highs. It's going to go up and fill the gap is what it's going to do. So I would just keep that in the back of your mind because it's important. Just like AMD. When AMD starts to get up to this area, what do we have waiting? What do we have waiting here? Look at this. What do you have waiting up here? You tried to wick higher. Boom. You have a lot of selling that's up here. So, are they still there? That the question is unknown. We got to get there and find out. All right. Yeah, I'm hype. I'm ready for today, guys. I really am. I'm excited for today. We're gonna have Powell live. I'm gonna look to do what I said this morning, and that is nail entries, nail exits, stick to the plan. The thing is, I think people just press buttons at the wrong time, and then when they press a button, they start thinking, and they start worrying. They start doing this. They start doing things that they shouldn't do. Right? Have patience. You see that the S&Ps and the Qs have taken it's taken us 3 days to get to where we are, right? We're not in a hurry because the volume's been a little low, but we're still going to the upside no matter how you look at it. Whether this is a bull flag or a bear flag or not. And the higher we're going, what else are we seeing on the Qs? All right. Let's get in and read some charts. I haven't looked at small caps. Small caps started to make a make an appearance this week. All right, looks like Bitcoin's going higher, so we could look at some crypto stocks like MSTR. So take notice that you have, you know, the higher we go, we're having a decrease in volume. So, you know, don't have your watch list like 1,000 stocks on there, guys. You know, you want to stay focused. At least, you know, help yourself stay focused. Where's Tesla trade? Like, look at this. What is this? What is all this? I don't get it. What are you doing, dude? What are you doing? Like, get rid of it. Get rid of it. You gotta yell at you gotta get on yourself. I'm just saying, you guys gotta get on yourself if you don't. All right. What do you think would happen if you're on a prop desk or working at a prop firm? All right. Yeah. I'm going to the volatility. The risk manager and see if I can get some more risk for the day, and then he comes over to look at, you know, what you got going on, and he sees a chart looking like this. You can be like, wait, what? Wait, what? So that was okay volume on Tesla yesterday. Let's keep Tesla on watch. Here's what I'm gonna do. I'm gonna go. Oh, we got 10 minutes, guys. All right, Tesla. It's pretty simple. You got a triple bottom here, right? See what we do at this 205 level, right? 205 level. You get a break and a hold. Look for 210. That's a $5 increment there. Oh shit, man. Shit. Shoot. Flat top resistance. So that'll be the last. That'll be the last one. 215. Looks like is that the 200-day moving average also right there? I'm gonna need these levels, but I don't need them right now. I'm gonna go fill up my coffee real quick. But I'm gonna give us these levels. I'm gonna go through these levels real quick first, and we're trading right there. Well, I have time and sales up in level 2, so all right, let's see here. No. Jesus Christ. Sometimes Thinkorswim frustrates me. It really does. If anybody's here, and you guys know how to get just pre-market on, I would love to know how. Yeah, so we're at 204.63 now. Let's see. Looks like it's trying to make this area resistance. He did have some tails off of there. I don't know what the hell's been going on with Tesla. It did it Friday also, right, with these wicks. Sure, it's just something at the NASDAQ. I'm just going to keep that level there. I feel like this was your 206, really. Let's see if we can reclaim yesterday's high. See if you reclaim yesterday's high a day. That looks to be the area, right? 212. And I thought I noticed 212 earlier was support. Okay, and look, Mama Girl coming in. She wants fed too. Every day, guys, isn't it funny? Literally right at 9:30 when the bell opens, she wants to come in and get fed. Isn't that hilarious? Like clockwork. All right, there we are. There is the level. So I still want to look for the 200-day moving average on Tesla. We haven't even tried to get up here, and it's just rising. It'll start to flatten and start to go down, but if we start to see some upside, that'll bring the 200-day moving down. All right, let me go fill this coffee up. I'll be right back, and good luck today. AMD, I'm going to watch Meta because I think there's a decent move coming on Meta, but AMD is where I'm going to be putting some of my focus, all right? FSLR, see what I mean? See it holding that level now, right? That resistance level becoming support, 98.50. I still think it's a short. I'll be right back. All right, guys. 210 on Tesla. Watch 210. 210. I was trying to look up my charts real quick before the open. If you're looking at Tesla, look at 210. I'm telling you right now, 210 is the area. 205. If we can get there, we're at 205. That's a $5 move, and I think that would be what, like yesterday's. Come on. Trying to hurry up. Dude. Okay, I have it. No, I don't. Okay, that's why. 210. Oh my God. 3 minutes. Come on. Come on, come on, come on, come on, come on. I was watching Netflix too. That's hilarious. Yes. 210. No. 210.66. What? So it looks different here, guys, but trust me, guys. I'm telling you, I feel like, man, it might. You know, you're going to have some resistance. I think you could come into a bit of resistance at 205.50. It pulls back. Try to hold yesterday's highs, yesterday's close area at 201-ish, wherever it was, right? Pull it back here, right? See, it's starting to turn this into resistance. Pull it back. See if you can't catch along at like 203, 202.50. Turn it to the upside. Break this. 206. You know, that would be my game plan, and look to get like a 2-day run and try to get back up to 210 on Tesla on dip buys, guys. Good luck today. 1 minute to the bell. I'm going to use the restroom. Let's look at AMD. Let's look at Tesla. All these names are on the radar. Good luck today, guys. They were going absolutely nuts at the NASDAQ. Sorry, guys. All right, let's do it. All right, there's a pop. You know what? Give me this level here. All right, there's a test of the 200-day moving average on AMD. It's bouncing right into it, right through the 200-day moving average. Wow. Let me actually make sure that... I cannot believe I'm not ready. It is up. It is up higher. So just made the 200-day resistance. I would watch, guys. I would watch just getting short randomly. See if it turns that pivot high from yesterday and this morning into support. All right? Look for that 100 level to be support. Watch the SPY and the Qs also. If you guys could, comment in chat. What are you guys watching? What do you guys have on your list? God, freaking damn it, man. Come on. Alright. I think they're finally getting a clue that the market's going to go higher. That's my thought. Alright, that's my thought. So there's your dip buy. I'm looking to get to 104 on AMD. I haven't done anything just yet. Look at it. It's just ripping. There's no reason for that. Alright, and what did we say? There's the dip buy on Tesla. There's the dip buy on Tesla. What did we say? That's the exact game plan, right? You got a double top right there. It reclaims it. I don't know why Tesla's so weak. It's a low volume pullback too from yesterday. Yeah, 201. That's a shame. Come on, Abby. Come on, Boobell. Sorry to yell on the mic. Wow, that's insane, isn't it? That's crazy. I mean, I'm not falling for it, guys. I'm not falling for this. Dude, I don't know why this is doing this to me. Abby, what is it? What's wrong? You don't have nothing to yell about. You have everything you need. It's just such a mess here. It's such a mess there. Oh, Boeing was moving also. Boeing was moving also. Keep you guys can keep Boeing on your radar if you'd like. I don't want to so what did we say? There was the gap fill. So it just filled its gap. And it's struggling up here. All right, you may get a pullback to the 200-day moving average, this gap fill, and kind of see what it does from there. There she goes, rolling over.
NFLX Netflix traders circulating an old report now from the RAF mentioning that's from that's a similar report now from the RAF mentioning that.
And Netflix was another stock that we said.
Their air tier. That's NFLX.
It's a nice break, hold. Might bounce higher. Might get a nice bounce higher on Netflix. Let's look at Meta. Everything's just bouncing right off of the bell. Right off of the bell, it's ripping. All right. Like I said, guys, I'm going to be a bit patient. Now you're in the resistance areas. If we get a break above this 50 and can hold it, of course I would already be taking, I would have taken a piece of profit because I was like on the bell. I was like, go put in a small position on Meta. If we can get back down to this 100-day moving average, like towards yesterday's close, yesterday's pivot highs at like 300, 301. If we get back down there, I will start to put something on for Meta. Maybe I do it both ways. Maybe I see what they are. Maybe it's like the end of the day today or something. We'll see. We'll see what happens. Dude, Tesla's got to break through here. I should be watching AMD. That's the stock we need to be watching. That's where your liquidity. Look at that. Look at that 38.2, $1.50. Stepping up. Buyers stepping up there. Come on, babies. Come up here. Come on. Jump up. You want me to pick you up? You saying hi? Everybody can hear you. Why are you yelling at me? I know you want to play. Let me see. Let me get. Yeah, let me wipe it off. There you go. Good morning. Hey. Raise a hand. Who thinks AMD holds the 200-day moving average and holds this 9 EMA? Show of hands. Who thinks holds it? All right, let's see where. Let me throw up the cues, and I'm probably going to get a short on that bounce back. I'm just going to be a little bit patient. Tesla is still freaking weak. Look at it. There goes Tesla. It's just weak, guys. I think Tesla's got to get pulled back to yesterday's close at like 201. I'm still sticking with that 201 area for Tesla to, to think about turning itself around. Jim Cramer just said, who said we'd be safe in Philadelphia? You got that right. So I'm not in anything just yet. I just had to pull up. What I'm doing is I'm getting the cues and the SPY up on a different monitor real quick. And Tesla making pre-market pivot highs resistance. And here it goes. Yeah, that 101.50 area is a nice area of resistance. Man, if it gives me 101, please just give me a pivot high to 101.50 area one more time. Give it to me. Give me that area and see if we can't get back up through it. You're starting to get an increase in buy-side volume, guys. Starting to get some volume increase here. Let's see what happens. And listen, when you guys are, I would give you guys a hint to something to think about. There we go. Come on, get right up into that area. I want to see it reject this area here again. Reject 101.50. You want to know the high and low of those options. You want to know the delta. There's. Give me the reject. Look at that increase in volume, guys. Look at it. If it holds 101.50, that's a key area. I'm telling you. Still some buying going on here, guys. Now it's fit the bang. Look at that wall. The wall is selling. I just think. Give me a double top. I just think it might go higher. I think AMD goes higher. That's a nice pullback to 38.2 fib. Watch what NVIDIA's doing. You have a lower RSI. See what I mean? You're going to get people that are just going to try to. That's why I can't trade it. It's to the short side or nothing for me. That doesn't mean it can't pull back later on, and you're starting to see a short covering because that you guys see how I identified that 101.50? You didn't see me do it here, but on my other chart, I identified 101.50 as the area, not just because of this pivot high, but you're getting a lot of selling right here at this area for a reason. It's a perfect setup, as it's an area that is it's an area that is a heavy area of resistance, and it's a clear-cut picture of resistance there. I can try and show you guys here. I don't think these thinkorswim charts, I can't adjust them. I can't adjust them like I'd like to. But you can see there, you can only see it just a little bit, but this was the area that was resistance. Well, now you could start to get some selling in right here. See, on thinkorswim it's a little different. I'd have to show you guys like on my phone or something, like on a different charting software. It's crazy if you guys don't know. I would think about using, like when you look at a chart and you're looking at something. So there's another chart that I think I'm going to put on here instead of thinkorswim. I just felt like thinkorswim is a little bit more appealing to the eyes. Look at that volume dropping off. So we have, but I may change it because it's important to see the different areas that are support and resistance, and how different charts like can paint a clearer picture than some other charts. That's all. Like you can't see it on thinkorswim, but the other chart that I'm looking at on E-Trade, it is showing you a clear that 101.50 area is it's like it's a key area, and you don't see it on this chart. You don't see it on thinkorswim, but you really see it on another chart. If you can, because what it's doing is it's giving you pre-market and after hours at certain times. Like in the morning, it'll open at 7, right, when things really matter. And then I'd have to see what time it closes, but man, look at this. This is insane. Unbelievable. Damn, I should have taken it there. Fuck. Watch 9 EMA. You can see here orders are sitting at the 9 EMA. You did get a VWAP attempt there. So that's what we said. If we regained 100, I mean, I feel like we need to retest the 200-day moving average. I feel like we need to retest that level. Like, you broke above it. Now, when are you going to swing back below and test it? Like, you break through it, you got to pull back, hold it. Yeah, this is crazy. I don't understand it. I don't understand it at all. And are you kidding me? The SPY is already at that 420 level that we talked about? Are you kidding me? Already? Alright, now we're getting our sharp move to the upside. Alright, guys. Yeah, I think you still gotta wait for the pullback. Don't be foolish. Wait for the pullback. Now, I'm going to put this here. It doesn't seem like much. Yeah, that would be the level for 418.50. Yeah, 418.50. We have a double top there. Yesterday's high. You double topped up here. Boom, boom. Let's see if we can pull it back in and then catch along there. Again, remember what I told you guys this morning, right? I'm going to look. See, you did it pre-market. That's the messed up part about it. I still want to look for a pullback down to this area. You're not, I don't see how you get new longs in without pulling back to this area down here. This whole area that's, that you need more buyers. Like, this is not real liquidity. This isn't liquidity. This is, you have a gap. Now you have a gap fill to fill. You have a gap here now that we're going to revisit. All right, there's our gap. Now we have a gap. So, give me the daily. Looks like we're just going to go ahead and bounce. Here we go. This is a resistance level, guys. 420 is the area I'm looking for it to pull back. You could just continue with strength. And the stronger that it seems, the more likely that's going to hold. Right? Because you'll hear a lot, like in bear markets, like when you put in a bottom or this or that, you're going to get like this, you're just going to get a very strong run. And you'll see it just continue and continue and continue. You're like, man, I should have just bought it. And you're going to be like, is it too late? Should I wait for a pullback? And you never get the pullback. You just have to go long. Or be patient and wait for a different setup or a different move. This is telling you, in a sense, man, that this move is going. Like, it's not stopping. I'm sorry. This mouse has got to go. It's got to go. So we're running and gunning for the 200-day moving average. Here we go. Coming up into the gap fill. I mean, your 200-day is up at the gap. So that's crazy. 423.50 area is 423.60 is your gap fill. 423.60, yes. All right. Man, look at that. You just pulled back and held that area as support. That pivot low right there. Look at that. Unbelievable, man. Unbelievable. So, I still think you get a pullback before Powell comes on. I think we find ourselves back at... Hold on. Did they say NVIDIA or AMD? Come on. That's insane. It's so insane that AMD's doing this. And what did I say pre-market? I told you guys my instincts were that it goes to the upside, but I just can't play it. I can't play it to the upside for some reason. And that's why I was like, 104 is the target. 104, 105. Why do I not have lines up there? Unbelievable. All right, what's Tesla doing? That move's gone. Wonder if you guys caught it. I don't know how you take a long on AMD with... Like, can anybody explain to me, if anybody's here, what is causing AMD to go to the upside? Other than the fact that you cleared and broke that 101, that 101.50 level and that 200-day, You cleared this level. Now it's just about shorts getting, getting caught and trying to cover. Like, you have a ton of buying, and it's just the bids are getting higher. Like, you're getting a short squeeze on AMD. You really are, because there's no reason to be doing this. This is not like AMD is setting records. This is not like unless there's something on the earnings call that I missed, right? There's something I missed that I don't know. They've lowered guidance. It's not much lower, but they've lowered it. Did they say it? And it's not just about guidance, because you can lower guidance and still maintain you can, not spend as much money and then back it up with, you can, there's ways to, like, let's say if you're expecting to bring in I guess the guidance is the guidance, right? Your revenue is your revenue. But if you're able to see, I'm sick and I can't think of what it is that I'm trying to say. It's like maybe I don't know. Just forget about it. I'll tell you guys later. Just my mind hasn't been right since I've been sick. But companies that, like, you can miss on revenues and still beat on margin. You can increase your margins and still have an earnings per share beat. Things like that. So there's just different things that companies can do. I talked about it. If you go back a few videos ago, I give you guys like examples of what it is that I'm talking about. I just can't, I just can't think straight right now. Like this weekend when I was driving around, I had to go get some medicine and stuff, and like I was like literally just passing my destinations. All right, so it's still going. I'm not watching AMD just yet. Tesla, it's still consolidating. I was hoping for a move off of Tesla. I guess it gave you that move, right? It kind of gave it to you. But what is 201 to 204? It's like, So I'm going to scan around real quick. I want to look for the pullback before Powell comes on. Right? We start, because you guys know, right? I've said it before, and you've seen it. For those of you that have joined us, 12 o'clock, 11:30, 11:45, 12 o'clock, an hour before the meeting, 12:30, you'll get that pullback to the opening price, and it'll be like you didn't make a move. We could hold these gains. I think you hold these gains because we're pretty certain we're not getting a rate hike, right? We're pretty certain we're not getting a rate hike. So and look at Microsoft. I just talked about these upside moves pre-market. You got to be kidding me. And what did I say here? Right? You get above that level, you could get some upside. Let's see if it pulls back in to get a long. Well, at least we were over the long. At least we were over it. What do you need, Turkey? What is it? And look at Meta rejecting. Meta's rejecting the 50-day. That's hilarious. It just missed that 50-day moving average. Come on, Turkey Bot. I know. Oh my gosh. All right, so my plan again with Meta was to see if we pull back to like 300 or 301, 390 area. Let's see how that rejected the 50-day. If it rejected it with volume or was just a simple pullback, hold the high a day from yesterday. It's 302. It's a nice increase there. This could be a lot of selling pressure in that candle. All right. When you guys see, like, that's an attempt to break above the 50-day. That's not good. Wow, let's see if you get a rejection of VWAP there on Meta. Let me go back and see what the markets are doing. If we're starting to turn around.
Coming up, job openings expecting 9
Let's see here.
million. ISM manufacturing PMI for
All right, so we're struggling at 419.50.
September, plus 0.4%.
We're struggling there. Like I said, we have a gap fill. Let's see if we can bring it back. I know, Turkey. I know. So Tesla seemed to be the weak one. So if the markets start to pull back, if I feel like Tesla might be the name you want to look at short. Oh, I almost got into some AMD puts without knowing it. That's hilarious. What is TLT doing? I'll go right back to Tesla. I just want to see what treasuries are doing. Okay, or long term. You know, we looked at them. I just wanted to see market open how they were doing. Look at the volume coming in there on them. Come on. I may roll over my TLT calls that I just got. That I only have a piece of that position on. Man, look at that. That could be a nice. If the SPY. Oh wow, hold up. All right. That must be the Jolts just came out. All right, we're getting a lot of volatility.
Job openings, the consensus was 9.27 million.
Sorry, it's just a little difficult. I got a cat lamer.
In line.
So it was in line.
Manufacturing PMI 46.7 versus 49 expected.
All right, so let's go over this real quick. Joel's job openings 9.5 versus 9.25. That's not good. That's higher than expected for new job openings or job. Yeah. ISM manufacturing 47. So you have a mixed bag here. Right? You have a mixed bag. The manufacturing data is telling you that things are slowing, right? That's lower than expected, but you're getting an increase in jobs. That doesn't make any sense. So the market might like that. The market might like this. Wow. Let's see here. Construction spending month over month. 0.4 came in line. We have some crude data coming out at 10:30, but prices 45 or higher. Look, ISM manufacturing prices are higher. That's not good. Higher for longer. Manufacturing price. That's PPI, right? PPI. Is this a look into inflation numbers? The inflation data we get, is that a look into it, right? I mean, consensus was 45, expected 43, and it came in higher, and it came in higher month over month. New orders were down, right? I do have the remote. So you're seeing a slowdown, which is what the Fed wants to see, guys. The market might like this. It doesn't seem good. This is why it's a YouTube channel you need to tune into, because A lot of people don't know how to read the data. I don't know if this is enough to just continue higher. Um, but
AHL Apple London Tribunal rules that a lawsuit over iPhone batteries can go ahead.
all right, sorry about that. All right, so you have a double top there. You can see that's pretty clear that that's your resistance level. All right, let's go. Wow, so the SPY is moving higher. Let's look at the Dow. Okay, Dow's pulling back. Wow, the IWM is um, still showing you weakness. Still showing some weakness. Look at Banks. That's a nice. It might be a nice setup there, but I don't know if you're going to get. Let's see here. October 25th. That was last week. So we'll get this again today. It's just going higher and higher, right? That's not what you want to see. It's not. It's not at all. It's not at all what you want to see. All right. Yields are pulling back. You got a glimpse of that. All right, no comments. Okay. All right. All right. Gotta see if we can get ourselves a pullback in the S&Ps. I couldn't trade AMD. I can't trade it to the upside. I can't. I'm not trading it to the upside. Right? I'm not trading it to the upside. It can go up all at once, but I'm passing on it. Alright, I'm gonna find a trade. What time is it? 10 o'clock. Where's Meta? So Meta's just hanging out. It's not busting a move yet. Tesla's consolidating. AMD was the trade. No, it's pulling back now. Alright, this was the level. This was the level that I said to watch for a bounce back. That I would start to look for a bounce back. I just don't like that it... That sucks. That sucks. Tesla is not faring too well. It's all good. Maybe hello 180. Right? Maybe we're looking at 180. So... Yeah, 180. Is that a tail I see? Is that a tail I started to see? You know, I don't want to fight the trend either. I think you're going to start seeing traders really get up on this, on Tesla, and bounce. Boom. There's the resistance level on Tesla. I might take a short on Tesla. Let me get my stuff ready though. And I'm going to look to take it down to yesterday's low. Alright, so like I said, I think Tesla's a short now. You got to look for that 190. Got to look for like yesterday's low. We'll see. See if we can get a bounce back. I'm not going to short it here. It's just not what I do. I should have taken that double top here. Right? It's a small double top there at 205. And Bitcoin was going. So Bitcoin could be a trade. Like your stuff like Mara. Come on. Abby, what's wrong, Turkey? What is it? You have food. You have everything you need. You're fine. You're okay. I just can't play right now. You got to give me a minute. Alright, let's... Dude, AMD is such an asshole. I swear. That's ridiculous. Like, can anybody tell me why AMD is doing this? I would love to know why AMD... Maybe I'll ask Twitter. Alright, I want to know why AMD is doing what it's doing.
ALDX shares hitting the highs of $2.54, up about 48% after the company announced its exclusive option agreement with AbbVie for license to develop and commercialize Reproxalap. that's alpha beta delta X-ray.
Tesla's not even moving. I got her the fish that moves around, and she loves it. She's eating it. It's so funny. It should start to kick. Oh my god, she loves it. I'm so happy. She said, "Is it alive?" Turkey! Alright. Alright, guys, I'm gonna let the market sit. Look at this volume. This is insane. I think, you can't fight it. If the market's gonna go higher, let it go higher. I'm not getting whipsawed in this stuff. I need a pullback, even though it already gave it to us pre-market. I need a pullback. I need a pullback. I can't get long here. I can't get long here. And I'm okay with saying that. If it goes without me, it goes without me. I'm sure that pullback will come, right? Maybe Powell says something and everybody that was just long, didn't take profits, and then Powell says something, and then you just get this flush. And you can't get out quick enough. So, and look at the volume, right? Look at the volume. The volume isn't even that isn't that great either. What's up, buddy? How you doing today? I mean, you had some nice volume off the bell, but look at this. And Meta is let's see where Meta's at. So Meta's just getting back up to that area. I don't know why I'm looking at it on a 30-minute chart. And look at this low volume, guys. This is a low volume on Meta. We have a low volume today. I think you just have sellers just not here. They just haven't showed up yet, right? To really start throwing this market in a direction. I think you're just getting a low volume bounce, and that could spell trouble for a later trade for other people who don't take profits on these longs. $2 billion. Yeah, I seen this GPU revenue of $2 billion, but that's not an. There's another bounce. I was just about to say on the SPY and stuff, you can get another bounce. Gosh, I don't know what this. I know this girl wants to play, but she's gonna have to give me a little bit. What does that mean for Intel? So AMD takes Intel's market cap, and then Intel goes higher. Unreal. Tesla is just weak. Guys, I'm telling you, I want to take Tesla short. I do. I think you're starting to get the trend now to the downside on Tesla. People aren't watching it. That's a nice, recovery. Boom. Let's see here. Right? There's your flat top resistance. This was a nice level to get short at 205. Right? And then we bounced into it today. So if we get another bounce back to like 202, if we can get that, man, I don't know if it's going to give it to us because the volume's starting to dissipate. I mean, that's a trend, guys. That's something I'd watch. This is a nice trend on Tesla. Flat top resistance. So that would be my next area. Yeah, 201.95, 202 area would be the area I would look for on Tesla to take a short. Right? I mean, ultimately, I wish I'd have seen this. I thought I seen it. I know I mentioned an area on Tesla that was pretty key. Hold on. Or was it AMD? Yeah, it's just there's no volume. If we had volume today, I could probably assure you Tesla would be working on lows. It's not bad. The volume isn't bad. But you can see here, it's like you put in your base here. Man, if I can just get 205, I will take a short. Or not 205, I'm sorry. Man, I missed it. Yeah, it's in a downtrend, but I wouldn't say, I don't, I mean, it's trying to start its downtrend now, but the thing is like the overall market as a whole, like whenever you look, like looking at one stock, you have to look at the whole market, especially like a large cap, right? Yeah, like a large cap, like Meta, Tesla, Apple, Microsoft, Google. You want to look at the whole market. Like you want to look at the Qs and the SPY. Like how are things moving? Well, we know that the SPY has low volume. We know the Qs have low volume. Like ultimately, all across the board, we have low volume. That's why you're getting this bounce and this rip. Look at this volume. If I give you an hourly chart or a half hour, 15-minute, right? You're gonna see that it's early in the morning. We should have volume, but we don't have that much volume because of Powell and traders have just stepped away. Look at that. Look at how much volume we don't have. Look at this. It has just dropped off, right? 2.9 when you're usually sitting at 4, right? 3.5. This last candle here that we're working on now, we haven't finished 10:23, so you got a few more minutes. There's the increase, but you can see, right? You can just see even compared to the past couple days that it's not that great. It's not that great. But it will be. But it will be this afternoon. So I do want to see us, because we have our gap fill here. If you guys don't know, we have a gap up here. We'll just see what happens, right? I'm staying cool, calm, and collective, right? We're getting ready to come into the gap fill on the S&Ps and the Qs, right? There's your gap fill right there, right at the 200-day moving average. We talked about that this morning. So at the top. I'm not sure what you mean by volatile at the top of the trend. I mean, it's like I say with Tesla, it's just, you know what I mean. It's a break of that 205. Like 205 tried to hold, right? It held. The buyers did not show up, right? Right here, right? 205 was like 206, but they start coming in, right? 205, 205, 205, 205, breaks, couldn't hold. Now we pull back to that 205 area, 204.86, 205, right? We pull back into this area to bring in liquidity and then, see what happens. But it's not like, there's not volume. There's not that much volume in the overall markets. So it's not giving you like a move. We're still just consolidating here, right? Feels like it's making up its mind. Now we're coming in. There's support. I said this morning that this was where we would look to if you want to be long Tesla, you would think about buying it right in there, right in that area where that circle is. It dropped just below it. But this is where you would think about being a dip buyer on Tesla if you were to, if you're thinking long Tesla. This is where you want to be a buyer, right there. 201, 201.04. Yeah, it is. The volume's inconsistent. We have Powell, right? And I think that's why you're getting this rip on on the SPY and the Qs. Because just sellers have stepped away. That's all. Sellers have stepped away. It will get to a point where if you start breaking the 200-day moving average, right? If for some crazy reason you get, because remember that gap fill is up here at like 220, 422.50, 423 area. It's like right around here. You start getting up there and you break and you retest it and you start going higher, you will start to see an increase in volume, because then you will start to have sellers try to sell or step in and really bring it down. And if they can't, they will start to cover shorts from the move that we had the month of October. All right. Think about the people who were short up here. Right. Think of everyone who got short in this whole area, right? Even down to here on the break, right? Short. Like, look at the volume, right? There's your volume. So a lot of that volume started to come in here once we could not hold 430. Now they've gotten a what? We are down to 410. That's a $20 move in a week and a half, 2 weeks, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, not even. Right? Here's the low. 1, 2, 3, 4, 5, 6, 7. A week? Let's just say a week and a half, right? You're going to start to see them. If we reclaim this level right here, you start reclaiming that level and you start bouncing, watch. You're going to see this market rip its face off and you'll be back up to 430 before you know it by Friday, tomorrow. I guarantee it. You're going to start to see some short covering and you'll get a $10 move in the SPY, $12 move in the SPY, which is crazy. All right, $10 move is pretty nuts, but that's 2% roughly. It's about 2%, and we're only up 0.75. We're not even up 1% yet, and you've went $6, $5. So, because what happens is we get that gap, that pullback, which helps to really get those gains onto the from yesterday's close, looking at it from a percentage basis. But again, this morning, if you weren't here, Animal, what happened was I was talking about Monday, right? Here's Monday. We pull, right? You bounce, we pull back. You see this area right here where you have this pivot high? All right? See how we have this boom, boom, right? You have this like belly right in here, right? You have this like area right there. Well, what did we do yesterday? We pulled right in. And what do we have here? And this is what I said today. I said, let's pull back into that area of 416.50. We pull back right in here. We find support, right? Right at that resistance level. You see how we broke above it? Boom. And then we went. What did we do today? You pulled right into 416.50 and you got longs. What did you do yesterday, right? You pulled right into that level, right? So that's where your buyers are. That's where the market's getting higher. Like that's so this was giving you yesterday, like Monday and Tuesday's price action, no matter how we look at it, higher highs and higher lows. But the pullback, like where would the entry be? Where would the entry be? Yesterday, you didn't really get it until after you saw it yesterday, right? This level, you waited till yesterday, you pulled right into it. Look where my cursor is. We're right there. We pulled right into it. You pulled right into this area, and you start getting nibblers, right? Look at it bouncing, 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 bounce, and that was it. Once you hit that wick, it was off to the races. It even gave you a second opportunity. It gave you a second opportunity on that pullback to take a long, to get long. Again, listen, for anybody who wasn't here, I told you guys Friday was an outlier, right? I told you guys Friday was the outlier. I felt like the markets wanted to bounce Friday, like a low volume bounce, and we did not get it because of the news that we got. There was news for, oh my God, Abby, I can't remember what it was because I do not feel well, but Friday, there's a reason why the markets pulled back. You can see here. Look at the volume Friday. Oh, it was Energy and Goldman Sachs. Or not Goldman Sachs, it was JP Morgan. Jamie Dimon said he was selling stock. And then you had Exxon and Chevron report earnings that were terrible. So that sent the Dow down. And the Dow is what? Apple, Microsoft, all your high names that are in the SPY, which caused the SPY to pull back. Which causes the Qs to pull back. But the Qs didn't pull back. The Qs closed green. The Qs closed green Friday. Okay? And look at this volume here. Kind of like what we have today. You have a nice green volume on Tesla. Well, this is like Tesla I'm referring to. But Friday, I think the markets wanted to hold this level and start to itch higher and maybe close up around 414, 413 to see if we could start closing here to turn ourselves around. But then you got news Jamie Dimon was selling on top of Exxon, Chevron earnings terrible. The biggest waiting, or not the biggest, but the third is banks. So it put a hurting on the market itself. When you hear somebody, when you have Jamie Dimon, a person like Jamie Dimon selling, I mean, it's only going to put strain on the market. It's not going to help the calls to go to the upside, right? So I felt like, okay, that's out of the window. Now you're starting to see the markets turn around, right? But I think we wanted to do it Friday. So with that in mind, here's your dip buying, right? Today, I want to look to be a buyer in this area if we get it. If we get another pullback into like, you know what? I'm going to use pre-market. I'm going to use pre-market today. And I am not going to get long until I get back down to like 418, 417 in this area. If the market starts to go higher, let it go higher. I need a pullback into like this area, right? I'm going to draw a circle. Just give me this area right there. And I'm going to start looking to get long in this area here. All right. And it looks like we might get our pullback now. We'll see though. We'll see what happens. You know, a 3-minute volume candle, you are getting some nice volume, but it's just, to me, I just feel like it's just, I would just watch, because we could just end up, we could pull it back right to where we opened, and, you know, 11:30, 12 o'clock, 12:30 comes, and a half hour before the FOMC minutes, you see this market pull right back to where, you know, we opened. and we're flat on the day. Not necessarily flat, but, you know, flat from where we opened, not yesterday's close. All right. So pay attention to these dip areas, like the resistance, the breakthrough, right? You guys saw what I was trying to say. All right. You got these areas that's where the dip buying's coming in at. And after yesterday, coming into today, I seen where the buyers were really coming in at. Right? We pull back, resistance, you break through it, you pull back, during market hours, and you bring in that buyers right in there. And then what did you do today? Pre-market, same thing. The low resistance area of yesterday was an area of buyers. We're gonna look for that again. We'll look for like the pre-market, right? We'll look for like this area, 418. See if we can get to 417. This area right here is where I want to get long. Like if it gives it to me. The market could just start to go, right? You're getting the higher we're going, you're starting to see an increase in volume, but remember how much of that is actually selling. So if you watch like a 15-minute candle or 3-minute candles, notice when the volume bar starts to rise. Is it rising on the upticks or the downticks? And again, sorry for not having the camera up, guys, but I'm just getting over this cold. I'll have it up tomorrow, maybe later. Last night I tried to do the watch list and I felt I was just falling asleep and like things just take me forever. What do I feed her? I feed her cat food. No, I'm just playing. I feed her Merrick's. Merrick. And look, there's the break on Tesla. There it goes. There it was. Did it just give us an opportunity? And I missed it sitting here talking about the dip buys. Oh my gosh, I feel like it did. Oh man. No, I don't want 5 minutes. All right. So, I know it. Damn it. I had Tesla up too. I had the 95 put, or the 195 put up. I had the 195 put up. The 190s are actually really liquid too. There's 15 just under 16,000 and the volume's starting to rise on them now. 16 just under 16,000 for the volume. You're getting ready to hit 16,000. The volume's going nuts on those puts. For 190. 17.5 open interest. 16 you're at 16 pretty much now on the volume on the 190 puts. So you're seeing people pile into those off of that break. Again, look at that double top. Bang, pull it back. It gave it to us, and I was sitting here talking about the SPY. Unbelievable. It gave us the pullback to pre-market lows. You got to be kidding me. I just missed this trade. I guess it comes with the territory. Oh, God. That stinks, man. That sucks. That sucks. And look what you got. You got a nice increase in volume. Tesla had a nice setup today. Tesla had a really nice setup. But yeah, I feed her Merrick. Come on. Why is... Alright. Fuck. So the overall markets are going up. Tesla's weak. I mean, I would at least look to start taking, getting in this and looking to get it down around that 196 level. Yesterday's low. Into Friday. What is that? Monday and Tuesday's lows. Monday, Tuesday's lows. Yeah. Unbelievable, man. Unflippin' believable. Honestly, I'm going to tell you guys what. I think Tesla's in its trend. I do. I think you could see Tesla down to 180. I think that's where Tesla goes. It is really oversold on the daily chart. But I feel like once Tesla has been in a consolidation for quite some time, and I feel like it has, once it picks a direction, it can start going. Um, that we still have to wait and see, but I feel like the move's on. I can't take the short now, even if it continues to go. It's only down zero point 0.6. If we could get like the SPY and the Qs to kind of help us out with the downside, that could really get Tesla going, guys. So if we start to see the markets pull back, think about how that's going to help get Tesla to pull back down to the low 190s, right? Monday and Tuesday's lows. I mean, that's still a good $3-4 range there. I can't do it. I can't do it. I can't do it. I needed to be short up here at 201, 202. It gave it to us. I missed it because I was talking, but it is what it is. Comes with the territory. Um, and like I said, and I was just messing with you when I said that. When I said I feed her cat food, I was just messing. I don't want you. I was just messing with you. Come on. Unreal. Unreal. I love though how she literally on the dot comes in right before the bell opens. Literally every morning she comes in at 9:27 every damn morning, yelling at me. So, but she just wakes up at that time, whether it's like she wants to eat or she wants to, she's up. Like I feel like sometimes like when she wakes up, she just comes in and like either I don't know. Like sometimes I feel like she'll have like a bad dream and she'll like I don't know. It's weird. I don't know. AMD is still running, guys. 105. What did FSLR end up doing? FSLR. Nothing. Remove. Snow. So, look, snow's not even moving. Looks like. Ooh, that looks sound like they need new brakes. Looks like snow could be a short also. Um, looks like it's struggling here at these lows. 145. It just feels like it can't get any energy to get to the upside. Oh my gosh. This girl. That might be a nice dip buy right there. Let's see. Let's watch time and sales. See what we get here with snow. And see if you start to see a bit of a sell-off. It's really low in volume and it's kind of boring. But I feel like this is your inflection point right here. See if this tape starts to speed up a bit. Unless it's bounce, resistance regains. I think that's it. I think you're gonna get you could get a pullback in snow here. Look at the volume increasing too, right at this level. Yep, there it was. Look, it's holding it as support, bouncing. What are the Qs doing? That's hilarious. That is hilarious. No, she doesn't ever get lost. She's a home cat. She's inside. Dude, that's my little girl. I mean, she'd ever get lost. That is my little girl. You have no idea. Do you see how beautiful this thing is? You see how beautiful my daughter is? Look at her. If you see, even if you just seen her in real life, do I have another? I think I have. I don't know if I do. It's whatever. But that's awesome, dude. Oh my gosh. Wow. Wow. That's awesome. I'm glad you guys did that. And you know what's so funny is that she was also not to that extent, but she was found by my other half's dad. He actually brought her home, and he doesn't ever usually do that, but he brought her home, and it was cold. She was sick. She had sinuses, and like she was also about done with, And thankfully, he brought her home, and we took her to the vet and got her the help she needed, and yeah, I'm gonna go see what she wants because she's really needy right now. She's wanting something, so I just want to make sure she didn't eat all her food and she wants more because now she's walking back out to her bowl. So I'll be right back. Give me 1 minute. I guess she's all better now. This is crazy. I can't believe. I had a feeling pre-market AMD was going to go just do exactly just that. I knew it. I'm like, this thing ain't going to sell off. This thing ain't going to sell off. People are going to be like, oh, they lower guidance, this and that. I can't take the long on AMD. I can't. I just can't do it. All right? And I don't care that I missed a move. I really don't. Will I be there for the pullback? Sure. I'll be there for the pullback. Just don't know how much volume I just don't know if you're going to get that bounce back like you think. You know, like you just got this morning. For anybody that did catch AMD to the upside, great job. It's a beautiful trade. I am but again, that's awesome, man. I'm glad to hear that, man. We'll have Powell up whenever we get there. It's 11 o'clock. All right, let's see here. I cannot believe the market did not give us that fucking pullback, man. It pisses me off. Like, of course it just had to just go. And you're starting to see, like I said this morning, that, you know, once you start to get up to this area, so you're seeing this in volume increase up through here. I mean, that was a data set though, so I take that back. That was a data set that brought us those spikes in volume there. But that's like, and like right now we've been giving her some I just gave her a little bit of steroids, so she's been eating a little bit more just for her sinuses and stuff. I gotta get her back to the vet, but she just has some sinus issues. Baby, what is it? I don't know if she just wants to play or what, but I can't right now. Is Tesla still falling? No, not really, kinda. I think you got to give this trade some time. I think you get your move. I just think it takes time. You are getting a decrease in volume. That's the only thing I don't like, right? As this thing goes, like the volume is just decreasing, as it should with time, right? You're getting into lunchtime and stuff. The overall market's going higher, and Tesla is red. Tesla's closing red. Come here. Come here. Where are you? Come here. Where are you? What's wrong? Come here. Fuck, man. I wonder if you get some buying here. I wonder if you get some dip buyers in here. I wouldn't think so, but you could. It wouldn't surprise me if you start to see some buyers. Come here. Come on. Come here. I know you want to play. I know. You got to give me a minute. I know. I'm sorry. And look at NVIDIA go. No, over here. I don't want you getting sick. Come here. No. No. Come, you're okay. Come. Girlfriend, what is it? You know what's so funny? There was somebody in Walmart this past weekend that was walking around with this cat on his back. Swear to God. Swear on everything. He had it right on the back of his neck, and it was just hanging out on his shoulders, and he was just chilling. I'm like, So after I just picked her up, that's what reminded me of it, because I wanted to try it with her and see if she would just sit on my back, on like, sit on just like how he had his cat. So I'll have to try it and see if she'll do it. And I'm telling you guys, he's just walking around Walmart with it. It's a pretty big boy, black and white cat. It was funny. It was funny to see. Look at CRM go. CRM is having a day, guys. We said that could go to the upside. We played that short. Wow. That might. There's the gap fill. It just filled its gap. All right, BTAI. We can probably get rid of this. This thing did go higher. Wow. This was something we were watching earlier. Thank you guys for the likes too, by the way. It's really cool. Let's see here. How do I get rid of this thing? Wait. I want to get rid of these lines because I don't want to pay attention to this thing anymore. Look at this thing. It's just still going. Oh, I should have bought it. I should have bought it. Like I said, guys, I think, you got that daily candle above the 50-day to close like it did. That was a good sign. Nice full candle with a small wick. This is a little disturbing, You don't want to see it close like that. You want to see it try to get into that gap, because if you get into the gap, what did I tell you? You're going to have that 100-day moving average come right into that bear flag and into the gap of support that 100 days coming into. And that's still 100, just about 100%. Or 4 to 8 is what it's probably like 75, 80%, something like that, 70%. Gain on the stock alone, to get up into that area. But I wonder if you start to get the bounce now. I don't know if you do. I mean, look at this. Let's see here. Where are we at with it? Because you're at support. Like, if it's going to, it's got to do it now. And yup, look, guys, I think that's really good. You need volume. What you want to see is higher volume than the days prior. Right, so this day, you had a lot of volume. This day, you had a lot of volume. Like right now, the volume is not. You want to start to see it get up to like that 2, 3, 4 million mark. You want to start to see it take this day out, right? If you're going to hold this day, right? If you're going to hold Friday's high or Monday's high, then you need more than you need more than 2 million shares or 200,000 shares. You want to start to see 300,000 shares. And you're getting that increase in volume today. So you want to start to see this volume just through these next couple days. You want to start to see that volume increase to that, to get back to kind of like this day here, I guess you could say. It's just that as the days goes on, in order to continue to break to new highs, and those pullbacks if you want those pullbacks to hold the previous highs, you need an increase in volume. Chances are this may not hold. I hate to say it. If you had a strong day today, maybe it's FOMC that's messing you up. Because small caps were starting to take off, a little bit Monday and into Tuesday, I noticed. And today, you started to have the volume, but a lot of the traders weren't there because of a lot of the moves that are being made in the overall markets with earnings and AMD and FOMC minutes and stuff like that. So let's see what happens with Tesla here. Like I said, I thought we could get a bounce here. There was a time when I was started this that I couldn't do that. I couldn't say, yeah, this is where I want. Like, I think we'll get a bounce here. Like, I had no idea how the markets worked. I had no idea. I had no idea. You know, and to be able to go to the SPY, and it's not like you can predict every single move, but to kind of have a formulated game plan and watch it play out, right? SoFi Monday, Q's, AMD today. I said, like, the trade that I want to see is 105 to 100. What did I write down? I'll tell you exactly what I wrote down. Trade I'd like to see is 99.50 to 94 is what I'd like to see. And that was this here. That's Microsoft. Look at Microsoft go. And here's what I also said. What did I say, guys? We got above this level here. You would start to see upside volume, right? Because this is from here, from 340, 341.50 and below, 342, call it. Yeah, call it 342 and below, we're sellers, right? Anything above 342, those were the buyers, right? Trying to hold it up from earnings. I went through that right here, right? Every time you got here, you bounced, bounce, 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 right? And even the prior day, right? What did you do here? You pulled back, you bounced. You pulled back, you bounced. You pulled back, you bounced. Pulled back, bounce, pull back, bounce. Pull back, bounce, and then it broke, and then they just gave up, right? Then you finally hit it, and it's like, okay, what are we going to do? Burnt. So that told me, at this level right here, at 341.88, 342, call it, you break above that, you're going to see it go higher. And what did it do? It did exactly that, guys. Right? It did exactly that. So it's just, you got to go back and look at the price action because it'll tell you, right? If you just looked at it, right? It's like, if we regain this level right here, what do you see at this level? At 342. Buy. You come back, buy. Mix action, but still, what are you doing? Buying. You're back at 342. What happens? You bought. 342. You bought. You pulled back. What'd you get? You bought. What'd you do? You got bought. And then you broke it, and then they just gave up. All right? They gave up. So that told me that if we can get up to 342, you would see buyers start to step in there. All right? You would see buyers start to step in there. It's just after earnings, they gave up. The buyers just, they moved along. They went, Google, Tesla had earnings, something, I don't know. They moved away. They just, they left. Right? They left. But I said, if you get up here and hold, there's orders probably, what it is that there's probably still orders there. And anybody that's short from that level, and it starts to reclaim it, because this is what I've talked about this like a while ago. I haven't talked about it recently. This is like seller's remorse, right? Seller's remorse. Anybody who bought up here, right? Anybody who bought here at 342, which is all these people right here, right? Buying, 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 right? Buying, buying. I know it's ridiculous for me, it's annoying to hear me say that. But what happens is it breaks, right? And they're saying, I'm only going to sell the stock if I can break, if I get to break even. Well, what happened here? Right? It went right back, gave them that opportunity, and those buyers became sellers. But I said, if we can reclaim that level, right? Because now whoever was selling here is seeing it get back up to that level and go higher. They're like, man, why did I sell the stock? If I didn't sell the stock, I'd be up now. So then they start to become buyers again. But you don't have to look at the psychological part of the buyer, of the person, of people and institution and orders. The way order flow works, the psychology of order flow. Just look at the chart and say, look, what do I have here? I have buying, right? Buying, buying, buying. It's just we break it, it retested it, and those buyers stepped away, and it became resistance. This is an area that was support, right? Support during the earnings. And then they gave it up, right? And I said this morning, if we can get above that level of 341.70, that's why the top of that line is where it's at. The top of that box is where it's at. That I said you would start to see buyers like really start to step it up, and you do have some okay volume there on Microsoft today. It was expected. I talked about that this morning. right? That if we reclaim that level, and look at that wick, and look at the wick. I guarantee if we go to a 1 minute chart, it'll kind of tell you the story a little bit better, right? Look, there it is, right? They pull back into that level, and boop. Look at the candle off of that level. It's 341 there, but you know it's that area. It's that high 341, that low 342 area. It worked. It worked. I said if we get above that level, watch out. You're going to go higher, and it did. You get above that box, it's going higher. You went higher. Let's see if Meta's still consolidating. Nope, it went higher. It made its move too. This was the one today I was watching to see if it would get up to that gray box. Is the gap fill. Meta was an important one today because of what it had going on. It was stuck between its 50 and 100-day moving average. It was like getting wedged, right? It was just getting to the point. It was like, okay, you're going to have to make a move here because it's getting squeezed. And what direction was it going to squeeze in? And we said with yesterday's, I wouldn't pay attention to earnings because you could get like a lot of mixed implications with earnings. I was looking at this data, at that volume, and I'm like, man, we could probably go to the upside. It's just you got a lot of selling during like the selling came in on the earnings days, right? Like, look, this is earnings, right? What did you get? Selling. You got a lot of selling during earnings. But the day after and things cool off, what happens? Right? You don't have earnings here. This is a nice volume day with no earnings. You know, right? No earnings, and you got a high volume day there. You know, here's a nice selling day. No earnings, obviously. Another one there. Okay. Right? So it's kind of mixed. I feel like it's just in a consolidation, and Meta's it's gonna be a little bit before Meta really starts to give you a continuation to the downside or upside, because it's back at home. I feel like you could see this thing just stay at this level. I was hoping to see it get up to like 340 and then maybe pull back to like 280 and kind of do something like that, but it's just back in its old ways. Let's look at Tesla again. Actually, let's look at Apple. I haven't looked at Apple today. Why is it on the daily chart? Look at that. Nice. It's a nice pattern there. Oh my gosh. Long variable lags. I just had to let her out of the room. Man, this sucks. I'm upset. He's upset. That's brutal. Brutal. Unbelievable. I'm gonna probably just scan around and get ready for when Powell comes on. It's not like the day's over, fortunately. We still have FOMC minutes. I'm kind of curious if FOMC isn't as volatile as one might, unless he says something crazy. You know, I'm expecting him not to raise. I don't know if he's going to talk about balance sheet reduction or anything. Man, I got to get rid of these lines. I hate having like thousands of lines on my chart because it like, I just don't like to be that person. I mean, what do? We just are we just gonna continue to put in a lower high? Like, when does AMD start to finish this pattern out, right? Because look, right, you bounce, you pull it back, you bounce, it's just bull flag, and each rise it just gets bigger and bigger, right? Look, and then it just getting bigger. Boom, boom, boom. So I didn't want to keep going. I'd have a lot of lines to take off on my charts, but you get the picture. Is it going to start to like, I wonder if this thing is just going to sit here now. I think that's my thought, guys. I think you start to see AMD flatten itself out, right? And kind of like do something like this, right? To like kind of, see, I messed it up there. I messed it up. I want to see it pull back like this, right? And then start to go to the upside. It doesn't feel like it wants to, though. It feels like it wants to change directions. Doesn't it? If you try to, like, because look, it's going to the bottom right of the screen, right? Try to draw a pattern where the case is this starts to, you know, you got to put in a low. It's like it's. I'm trying to see if it's going to shift itself to the upside, right? I mean, it could, I guess, and then do something like that, you know. It doesn't seem like it wants to. We'll see what happens, guys. Let's see what happens with it going into the end of the year. And look, that did that 115, this area, up at 115, 120, took us into the end of the year. So, see what happens with AMD. I didn't execute this morning. That's a nice double bottom on AMD. That's another nice pattern. Maybe look for a pullback to the 200-day. See, now you're going to have the 50-day, you know, pull back to this 50-day moving average, which should bring itself up. It should curl itself. It should curl itself up to like 104, that high 103 area, and see if you find support there. I don't want to draw a line, but I should. Oh, man. What time is it? It's 11:12. So, can I ask why, like, why does Biden keep doing these stupid-ass, like, implications that really don't mean anything, right? This junk fee shit, like, what, like, I don't even know what that is. Don't even know what the hell, like, what, like, he is so out of his mind. Like, that's what you're worried about. That is what you're worried about. All the things that are going on, and that is what you're worried about. That's what you're going to hang your hat on. When it's like you can't tell a company what they can charge and can't charge. They'll just add whatever margin they need or whatever price that they need. They have a price that they need to be at. They will be at that price no matter what. They will. They'll be there no matter what. There are always different ways to do things. Right? And it's not like a lot of these businesses. Here's the thing. Here's the thing that does that nobody talks about. That takes away, let's say if somebody does has just like, you know, an awful business to where they're charging a bunch of fees, this and that. Well, guess what? You got to think that the consumer doesn't see that and know about it. That allows for another group of people to form another business to compete with that other business who isn't treating the customer well. This is how you get, you know, really, you know, you get other companies to come in and take over and do what the consumer wants to do. And the consumer finds a home in a place that they want to find a home at. Right? So I just feel like, me personally, these are the stupidest things that he should be worried about. There is so much other more important shit that he should be worried about than something like that. The dude needs to give it up. He really does. He really does. He is just, and we don't need Kamala Harris. We don't need it. The world doesn't need her either. It's just I can't believe they're even in the administration. I don't get it. I don't get it. I don't get it. I guess all these young kids didn't have to grow up with the war. They got away with the last 4 years of not having to like watch a Desert Storm and all the other wars that we watched growing up. Um, but they'll find out. I don't know. I don't know. I could go on a rant, but well, we're rallying. Looks like, man, that's crazy. Again, I had a feeling AMD was going to go to the upside, guys. I said it because this morning I just couldn't do it. I'm like, I just can't take that trade. I just don't feel right taking it. I just can't do it. I think it's going to do it. This resistance level here, I was like, man, if we start to hold it, watch it start to go to the upside, and that's what it sure enough did. Held yesterday's highs, pre-market, after hours highs. On that held pretty much held the earnings call and blast off. Let's see here. What did it make? 98 to 105. That's a $6 move. That's its ATR, guys. By the way, all right. AMD just did its like ATR at a high. If you go back, if you don't know what an ATR is, that's the average true range. Something that's really important, and something you guys should know and include in your trading, because it's going to help you with your entries and exits, and if you get a nice volatile day, does that put you at resistance, right? Is the stock usually around $3 ATR, and does that $3 move take you to a support or resistance area? Chances are there's your entry and exit, right? So just implementing that can really help your trading.
Hamas has countered, saying that's not the case, and we haven't seen any physical evidence on either side. But again, the idea of saying that not only have they taken out this leader, but multiple members of his team, and so that's something they were targeting in that area. In the process, they have acknowledged that they hit a refugee camp there. Dozens were killed, apparently, in that strike, and we now know there's been a second strike in the region with 20 civilian home structures that
Man, this Palestinian place, like there's so many, like I see all these people here, and it's like, why are you guys I mean, like, the truth is, from what I've seen, because I'm not Jewish or Palestinian, but they both hate each other apparently underneath, you know the underneath the service, I guess. We don't do that over here, which is great. But I guess it's just something that is. I guess they've both been grown up in that type of situation. But anyway, why can these Palestinian people like start to really stand up to their leaders, right? Taking matters into their own hands. It's like today. If you like pull up Twitter, you're gonna see all these people coming to the United States from like Argentina and South America and stuff like that. Can I ask you why they are not spending that energy and time in building up their own place of business? And look, oh no, that's the shit that I don't even want to talk. It's just crazy. Kids just holding up signs thinking that's gonna do something. Since when has holding up a sign ever gotten anything done? Anyway, let me tell you how I feel. Is that going to solve the problem? No. Anyway, there is a ton of people marching up here to the United States, and they're carrying like their flags, and so what I was saying is why, like, the people that are charging, I'm telling you guys, it is a ton of people coming to the border. Why are they, like, what are they unhappy about? And why are they not taking that energy that they're using to walk to fix their place of residency? It is beautiful weather. There you can create beautiful things out of the place you live. It's like it's like the time that was spent to do the things that are done here. It's like, are they too it's like it reminds me of just like instant gratification, that they want to go to a place that's already built and they don't want to spend the time. It's like laziness. It reminds me of laziness. If it's not that, then they're, what is it? Is it they're not happy with the laws? They're not happy with what's going on? So spread the word as citizens. Stand up. I don't care if you got to make. I don't care what you got to do. Right? You got to load. You got to armor up. Take it over. Right? Have a what? See, I got to remind you guys that I'm sick, so I can't think well. But whether you have to have a war, right, to get rid of what it is that you don't want and fix what you want to fix about your place. But instead, they're going to take that time to march through multiple, like, south, however far they got to go through South America, then Mexico, to get up to the border here. It's crazy. It's crazy. But the point is that they're holding up their own flags on their way here. I don't get it. If you're so, it's not even about being proud. It's like, it's okay to be proud of where you're from, but like, just then don't leave. Like, have the faith and the heart to fix whatever it is that you're unhappy about, of what's making you move. Like, am I crazy? Am I crazy? I am. If I'm not happy with the United States and I leave, you think I'm going to hold up the United States flag? Like, if I'm going to a destination that I think I want to be, I'm probably going to be like holding up that flag, because there's obviously something there that I think that I could obviously contribute, or would much rather be. I don't know. I mean, that's just me. Those are just my thoughts.
At least in China, and that has named Young China Estee Lauder down this morning. We'll talk about that story next.
Plus, the CEO of First Solar joins us. That stock heading lower this morning after missing revenue estimates for the latest quarter. That's it. Back in a moment.
All right, so we have AMD here. Pulling back. Sorry, guys. I didn't mean to cough in the mic. Wow. It's just crazy. It's just insane. What is SoFi doing? I'm just curious. Look, it regained its highs. Did we have anything yesterday to think about? Because you could get these day 2 trades. Large buyer has been stepping up in pre-market Tesla. I don't know. Yeah, I don't know about that, Steve. I don't know about that. Large buyers. Mass illegal immigration of criminals gained for zero trust. That could be anybody, but it wasn't. But it's fucking candy. You ain't got $5-10 to go buy your own candy? Like, seriously? That is crazy. That is crazy. I don't know. I hate Twitter, X, whatever it is. I hate it. Shows me all kinds of shit that I don't even want to see. Man, what a trade. That's I just can't get over. That's a picture perfect SoFi trade. So what I'm looking for today, we have some more of these setups that I'm going to look for during earnings. So I'm going to be really focused tomorrow and obviously the rest of the day today with Powell. But PayPal, Roku, Qualcomm, but more so like Roku. I'm excited to trade Roku for some reason. Guys, it can give you some really nice gains, and it can give you the really nice setup that you're looking for. I'm going to start planning that trade out later on today. Let's see what it's doing. It's pulling back. PayPal. So I'm going to just kind of scan the overall markets. And if you guys have any questions or anything, throw them in chat. Thank you guys for being here. Thank you guys for the likes. It's greatly appreciated. See if we can't. What I'm going to look for going into Powell is see if we pull it back. I want to see if the markets pull back, and which we're starting to do now. Right? I want to see us pull back to right around where we opened and kind of take it from there till the FOMC meeting. So, do we get summary of economic projections today also, or is that year end? I don't think we do. I don't think we get. I don't think we do. What is this? Johnny. What?
European markets poised to close higher today as we await the Fed's rate decision here in the US.
Shorts flushed, longs flushed. What? Oh my god, I think some of these people like smoke crack or something. What the fuck are you even talking about?
Meantime, Aston Martin is a mover falling by double.
FOMC type of day. Oh.
Over supply chain issues, volume
Oh, okay.
lingering debt as well. On that note, we're seeing manufacturing struggles
What?
across the globe. PMI data missing expectations in the UK, in China, and in India this morning. All this ahead of the Fed meeting here in the US, where the central bank is expected to keep rates steady. A theme we're seeing globally.
No, I'm not even gonna comment. I can't comment. I cannot comment. So what are you saying? You have a lot of money? Have you made $100 million yet? And how long has it taken you to make $100 mil? Have you created a $100 million business? That's my question to you. I like. Did you guys like see this stuff? Crypto educator and a Bitcoin believer. Minus 25 basis points mega pump. Neutral small pump. Dump. Like what? I want to comment and be like, dude, I hate all of you. I'm sorry. Like, I don't hate, right? But still, I just can't get over these people. Like, some of the shit that is on here, I just can't. I can't with this. Like, why is everybody on Bitcoin's dick? Can I ask you that? Why? Like, I don't know. Okay, it's Powell Day. Are you ready, X-Fam? I'm not sure if I'm ready. Like, this isn't bad. You know, I can deal with this. This is cool. Shout out to Canada. Okay, please advise. Praying. He's praying. Oh, Bitcoin. Oh, my God. Take profits, dummy. Okay. Dude, I have no idea what that is. I don't know. It's just some of the stuff I see on here is absolutely crazy. Did they have him on this morning? We're giving nothing. Oh wow, they did have him on. Wow, that's funny. I guess because of this video that surfaced. All right. I'm gonna just get ready for this meeting here. I think, like I said, guys, I think we just pull it back to right around where we opened. If you can't hold VWAP, the move's starting now. Oh, what does that do to Tesla? Does Tesla not doing anything? Man.
years old who smoked heavily within the last 15 years. Lung cancer is the nation's top cancer killer. And
Wow.
Michigan's largest for-profit college is facing
All right.
$38 million fine.
I'm gonna go make something to eat. I'm gonna go get a bowl of cereal, and I'm gonna get my levels. I'm gonna erase a bunch of levels, and I'm gonna look to get ready for this meeting. We'll have it live. Thank you guys for joining us. I'll be here all day. So if you guys have any questions, throw them out. If you guys see anything, have news. If I see any news or anything, I'll let you guys know. Shout out to you, and let's finish off today strong, guys.
Betty payroll product is doing to certain billable items and a portion of services and unscheduled revenues. Investors and analysts growing a bit bearish. 8 downgrades and counting today, although most are to hold. We've had a few earnings blowups. That's today's.
That is today's, down almost 40%. The Federal Reserve expected to hold rates steady at 22-year highs here between 5.25% and 5.5%. Our next guest thinks we could be here on pause for some time, noting that the Fed could see the recent rise in long-term rates replacing the need for additional hikes. Joining us now on the Fed and how he's positioning through the end of the year is Principal Asset Management Global Head of Investments, Kamal Bhatia. Principal has $480 billion in assets under management in the U.S., $170 billion outside the U.S., big player in fixed income, real estate, and equities. Kamal, so how are you positioning for the Fed from here?
Good to be back here, Sarah and Carl. I think there's probably two data points for us as we'll process the 3Q earnings and the Fed actions. I think, as you said, I think it's probably pause is the right term. I think the events this morning were probably more of a non-event from our seat. I think there is a lot of Fed commentary coming our way, and everybody's processing it. But from what we look at is there's probably a pause on the Fed. If you look at the 3Q earnings, there's probably a couple of interesting data points that jumped out at us. Earnings did not disappoint or did not exceed expectations. They're kind of, for the first time, in sync with economic drivers. So you kind of see that. There was probably a sense that financials performed better than expectations, and something like healthcare underperformed expectations. So you kind of see a bifurcation in the economy. So what that means is there was a view that more interest rate sensitive sectors, more credit sensitive sectors would be suffering as we look forward. That hasn't played out as much. And sectors that were probably not as indexed to interest rates would do well, and that's not true. So I think there's been a change in that dimension.
But what are you doing with bonds now? Are you buying if you think the Fed is paused, and is it a final pause?
I think we are at a very interesting juncture in bonds. I think for the past, I would say 18 to 24 months, it has really just been about the coupon. And for the first time, I think you see this subtle period of transition where you are smart if you become a total return investor. For the first time, I think you can manage duration actively and generate quite good active returns in bonds. We are not there fully, but we are at an early dawn of that transition. So I think it pays to be more active management in bonds, looking beyond just the coupons. And the credit environment is not bad for particularly investment grade.
You mentioned financials. There was a moment where we were looking at the KBW flirting with the March lows.
Yeah.
Is it value there or not?
I think value is an interesting word card. I think the way we think about it is quality is a better word than value. I think if you look at the other transition that's happening in the marketplace, and the big mega cap names have reflected this, is momentum was a big part of market growth across the world. And we see momentum kind of slowing down. You still more volatility, but everybody assumed high volatility meant high momentum, which meant higher returns. And I think there is probably a subsidization of momentum and quality coming back into works. And I think things like financials and energy clearly play into that quality theme. But you could look at other sectors where that return of quality is probably what I would highlight.
What, such as?
Such as, I would say, we are pretty much a very big global investor. And if you look across the world, one of the things we have observed is industrials there are a lot of industrials who are in the quality sector. And we are big fans of those names. I think the other thing we are probably a bigger fan of is historically people have assumed a small cap premium over large cap premium. We are for the first time seeing a permanent large cap premium across the world. What has happened is, going back to the conversation Sarah was having around Fed, when the Fed had this low rate environment, many of the larger names, not just here, but across the world, refinanced on the longer term at a level that they are very liquid rich. They have enormous free cash flow. And the change in rate policy has almost insulated them from outcomes. And the small caps are really bearing the brunt of it. So in this cycle, I do think this idea that historically small caps rallying, I don't think so that's going to play out. So we are in a very different world where the large cap premium becomes more permanent than before.
Globally, where do you see the biggest opportunities then?
I think one of the places we have been bullish for a while and remain bullish is parts of LATAM, particularly Brazil. I think in Asia, there are pockets of strength. India has been talked
I
about
said
a
the
lot.
same thing.
But I do
Brazil's
think
cutting
Japan
rates
is
actually
a
too.
great
That's
place
so
to
funny he
invest. I
said
think
that.
the rate
Dude,
environment
I've been watching
obviously
Brazil.
has changed after
That's
many
so funny he said
generations.
that.
But when
That's
you
so
look
funny
at the
he said
earnings
that.
growth of Japanese
so
companies,
funny.
it's actually been sustainable. So I think that's another area we've been excited
About Japan.
Japan.
So what should be the right balance now on U.S. equities
World.
versus U.S. bonds?
Look, it's
We
been,
are
it's
pretty
been
much
green
neutral
for
across
the past
asset
2 weeks.
allocation. I
brought
think we're
that up
generally a balanced
last week.
investor, 60-40. Our view remains you kind of remain overweight large caps, as I said. You
But more
definitely want
importantly,
to
because they're
overweight
cutting
quality
rates.
over momentum. And you can see the sectors that play
You have
out
to
that
know
way.
that different countries
On fixed
don't
income, as
do
I
what we
said,
do in the
we
United
would take more
States or
duration
with
risk
like
moving
Europe
forward,
or
but
Canada.
slowly in
They
that
have a
regard.
different
And
type
we
of
have been very
system that they
optimistic
use.
on credit for a while,
But
particularly investment grade
to
credit,
just put
because
it
I
in
do
plain
think it
terms,
doesn't
it's
deteriorate
like
at
cutting
all,
rates.
even if the economic conditions change.
Kamal, thank you very much for sharing some of the views from Principal. Appreciate it.
Thank you, Sarah. Thank you, Carl.
Kamal Bhatia, Principal Asset Management.
When we come back, Airbnb is set to report tonight. We'll take a look at how some of these rising rates have impacted that company. Stocks up about 38% for the year. Back in a moment.
She's so funny. Wish you guys could see her. Oh my gosh, she was like nibbling on my hand, like she was like pulling me into her, and like playing. All right, looks like AMD's headed for that 100 day, that 100 day moving average. That's around a buck ten, a buck 10. Man, what a move! I couldn't do it again. I said this morning. You know, I said it pre-market that I think AMD goes to the upside, but that's not what I want to see. It's not what I want to trade. My trade, I wanted to see it go to the downside. I think there's just way too much going on here in the future that this is not, and like I am not a perma bear. I'm not any of that. I'm telling you guys. I just think that them raising guidance in a time that we're getting ready to come in is not the brightest of ideas. Because what happens is, this would allow you to be able to get a pullback, stay in this $80 like range,
Peacock.
right? As a CEO, I think Lisa
It's an
Su
important
is
print for
making a
Airbnb
big
tonight as
mistake.
investors watch for
This
how
is my
rising
personal
rates
opinion.
have impacted the company. That's the
You,
focus
you
of
get a
today's Tech Check with
pullback, you
Deirdre
kind of
Bosa.
just sit in
Morning,
this
Dee.
area here.
Hey, good morning, Carl. So
Right?
earlier this year, speculation
Because
that
what
the quote
happens is,
Airbnb bust is upon us. It was everywhere.
allow
You've got a housing
you
market in
to-
limbo, higher
let's say if you get
interest
your-
rates,
you
make it
pull
more
back, maybe
expensive
you
to
buy
finance the
stock.
short-term rental property.
Okay,
lower-
maybe you buy stock. Maybe you just sit here and you load up yourself. Allow investors to load up on lower prices. Because what happens is when you get to here, okay? When you get to we'll just say like here, okay? When we go to report fourth quarter earnings, and you do not like meet up to any of your expectations, you might go from here to down here because you didn't, and it might be worse than you thought, right? And you may get people to take profits up here knowing what I'm telling you, that things may not be going too well. Like, this was a dumb move. Like, there is uncertainty in the markets, and just the future is just so unknown. And for you to make bold statements about estimates, if you're right, you're right. Okay, how far does that get you to the upside, though? Is my point. Why not get that pullback and then you beat expectations, and then you go from 80 to 140? Or, I'm just saying, like 80 to 115, 120. Do you guys know what I mean? And make your shareholders happy. Allow them to be able to keep nibbling on lower prices, and then good things come, and then you just find yourself higher. I just think that it was a pretty big mistake to start giving out guidance like that, even with, whether it's just one chip or one product. Sorry. This girl, I should put the camera on her. She's just looking at me with these eyes, like she's like, "Dad, you better get away from my tail, or I'm gonna get you." So, and she's like she was smacking her tail. She's not smacking it, but she's just moving it. And I bring my hand closer to her, and her tail will speed up. Just funny. So, I don't know. I think that's just my opinion. I could be wrong. I think it's a big mistake to try and call a higher price, to pretty much raise your price target and raise your guidance and stuff like that in a time of uncertainty. That's all. Oh wow, Tesla is making a recovery here. Um, I do want to see. This is a nice break and retest. Like I was looking at this on the daily chart, and you know it's pretty bullish. It's pretty bullish. Um, you wick down. You know, you wick, you bounce, you come down, you bounce. Right, bang, support 404. The 205. You bounce, taken back by the original pivot low. Right, so you bounce. Here's your, or you pull back, you bounce off that area, boom, right? And now we're rolling it over, boop. And then let's see if we can get down to 180. I don't know if we can. You got to get through this level here. You do got some support there. You know, I don't know if I don't. Let's just see how this plays out. I'm going to sit here. I'm going to watch this pattern. It could take a little bit to play out, but I do want to think about staying short-minded Tesla. But the volume is 50-50 on this. Like, let's be, well, not really. I mean, if we just look back the past month, right, of October, you know, obviously earnings come out, sell the news. Um, I don't know what that was. I don't know what the hell happened there. Some nice volume bounce there. You know, like this here, right? We're still on Tesla. I just wanted to make sure we bounce. And that rejection, right? You bounced into it. And that rejection day on Tesla to break to a new low with an increase in volume. I mean, just keep it in mind. We'll see what happens. I just don't. What I'm trying to say is, like, I don't think there's enough there to get momentum, right? I want to get a nice trend day, which that's what we had Friday, unfortunately. Or Monday. Monday it was. So we should start to see these stocks pull back to right around where they opened, right, in that area, and get ready for this FOMC meeting.
the Inflation Reduction, an enduring domestic supply chain that will enable cycles of innovation and will also enable the U.S. to be a technology leader and to export into international markets. So that's the only complaint I would say I would have right now is it needs to be a more vertically integrated supply chain. Again, First Solar is vertically integrated because our technology is different, but I'd love to see the balance of the industry to emulate what we're doing.
Yeah, plenty of businesses finding the benefits of being vertical. Mark, appreciate that. We covered some good ground. Talk soon. Thank you. Mark Whitmore.
Thanks very much.
Finally, a U.S. jury finding realtors liable for inflating commissions. It's having a big impact on shares of several real estate brokerages. Our Robert Frank here with the details. Robert.
Well, Sarah, shares of Redfin, Compass, and Douglas Elliman all down this morning after that verdict. Brokers calling it, quote, an earthquake in the real estate industry. That's because a jury in Kansas City yesterday awarded $1.8 billion in damages from the National Association of Realtors and several real estate companies. The jury found they conspired to drive up broker commissions. That award could be triple to over $5 billion under antitrust law. Now, at issue in this case is the requirement that the seller's agent pay the buyer brokers, which many say inflates commissions. The NAR and brokers will, of course, appeal. But a second lawsuit against 7 other brokerage firms, including Compass and Elliman, was filed yesterday right after that ruling, essentially with the same allegations. And the Justice Department also looking into the brokerage industry. Now, brokers earned over $100 billion in commissions in 2021. The U.S. has by far the highest brokerage fees in the world at about 5% compared to 2% in most other countries. Carl, we'll see if that starts to come down after this ruling.
Fascinating. Robert, thanks. Robert Frank. Let's get to Diana Olick with more on the stock reaction and some comments from Zillow. Hey, Diana.
Hey, Carl. Yeah, I spoke this morning with Zillow, which, to be clear, was not a part of this lawsuit, but its stock took a huge hit on the news nonetheless. They said Zillow CEO Rich Barton will have a lot to say about this in the earnings call when Zillow reports after the bell today. But for now, Zillow's position is that buyers and sellers deserve independent representation, and they want it paid for by the seller. If a buyer has to pay directly, they say that's yet another expense in an already very pricey housing market. They also gave me a formal statement from a spokesperson saying home buyers need agents who work only in their best interests. Part of that is making sure consumers are well informed of agent fees, who's paying them, and their right to negotiate them, while ensuring agents are paid fairly for their valuable work. Zillow is in a strong position and will always focus on serving the needs of consumers. Again, expect to hear more from Zillow's CEO after the bell today. Back to you guys.
Okay, Diana, thank you very much. Diana Olick. Taking a look at the markets ahead of the big Fed decision, Carl, we are going strong. And I think the part of the big setup here is that we've seen bonds rally with yields moving south. And that offers some relief, first of all, to equities, but also potentially to the Fed because it comes from weak data, the ISM in particular. People are focused on that weaker manufacturing number, prices paid, new orders all weaker. And then the Treasury refunding announcement as well. We got a little less worry there in terms of just how much the Treasury is going to sell and issue debt at the long end of the curve.
Man, we're working our way through so many things right now. It's earnings. It's the data you just mentioned. We haven't even gotten to Jobs Friday, where it's going to be a lot about the overall strength of the labor market and wages, right? Even with some of the ECI data this week.
We expect a step down in terms of the pace of hiring. I think the estimates are around 150, 170. Remember, last month we got 336,000 jobs added. But as long as wages can continue to moderate, at least, that should be good enough for the Fed. They don't want to destroy the jobs market and the economy, but they do want to get inflation under control, which is why I'm very eager to hear how Powell describes what's happening with wages right now. We heard from Jeff Lacker, former Richmond Fed president, earlier this last hour, and he was saying, yeah, we've seen some progress there, but wages are still strong, and they've stagnated at these higher levels, and that's a problem for inflation and the Fed.
Yeah, just look at what the auto workers were able to put together as they put those tentatives together. Yeah. Let's get to post 9.5.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The jump in stocks, the drop in yields, what the Fed might do in a couple hours from now that could impact both. The investment committee is with me for the answer. Joining me today, Joe Terranova, Bryn Talkington, Steve Weiss, Richard Saperstein, Hightower Treasury Partners CIO. Let's check the markets. We are green across the board, except for that important thing there at the bottom. That's the 10-year note yield, and it dropped a lot this morning, 4.79. All right, Joe, First trading day in November, best month of the year historically. Decision 2 o'clock, news conference after, gunlock after that with me on closing bell. So there's a lot to look forward to, but it's really the other big event today that you were waiting for. That's the Treasury refunding.
Yes.
It moved the market because it came in lower than expectations. Now, there was economic data as well. Bond yields on the long end went down, and that's where we find ourselves today.
Absolutely.
You got what you wanted?
Yes, in fact, we did. We learned what $2 billion is worth to the market. It's worth 15 basis points lower. $2 billion is the difference between the increase from the Treasury refunding in August. $114 billion should have been the number if they kept that pace. They slowed the pace down to 112. Just the fact that they're acknowledging, just the fact
they're doing it on the short end too, 2 and 5 rather than on the long end too.
Well, they're recognizing that on the long end, the TBAC is recognizing that the long end, the demand is beginning to wane. And that's comforting to the market. That's all we needed. It's inconsistent with Treasury Secretary Yellen's remarks last week, but I like the actions, not the words.
All right, so Bryn, it's good to have you in the house, by the way. All right, so as we said, first trading day of what is historically the best month of the year for stocks. Now, it's not so much what the Fed does today. I think we all can agree on that. It's what Powell says. How do you think we're set up here for the next, let's just call it 2 months?
Yeah.
I think people are content with knowing what's in store for the next 2 months, or at least having an idea.
I think the mutual fund selling is over. That's very important. That October 31st, that selling has ended. Seasonality is a real thing. And actually, if you go back to 1985, the median return in November for the NASDAQ has been 3.85%. So you're definitely setting up between the mutual fund selling done, seasonality kicking in, and we'll see what happens with Apple, which we'll get to later. But I think today with the Fed, I think Powell, as the market's saying, is not going to raise rates. But ultimately, where I think there's a ceiling on stocks longer term is that the Fed and fiscal policy are at a counter trend. They're fighting each other. And the massive amount of fiscal stimulus we've had over the last 3 years is still working its way through the economy. And I don't understand how the Fed can say, we want to slow growth, while you still have billions and billions of dollars being spent locally with different programs inside of the American Recovery Act. And so I think that means higher inflation, higher yields, which ultimately puts a lid on stocks. But seasonality is real, and so I think if I were to trade, I would be going long NASDAQ for November.
Okay. Let's turn to Dracula and the Grinch. The Grinch first, because I hear from Dracula a lot. I mean, you have been negative stocks for a long time, right? I mean, the balance of the entire year. Have you come around at all to a more positive view, or no?
No, the bite of the Fed tightening, the lag effect is only going to increase. And we're going to see further slowdown in economic activity, leading to lower earnings and more disappointments and pressure on the stock market. Stocks probably seen their high for the year. And the real focus right now for our clients is going to be in the bond market. And that's where the action is. And as Joe mentioned with the refunding, it was positive. But the fact is that the federal government's running a $1.5 trillion deficit, and the bond issuance is going to accelerate and put pressure on yields. However, where they are now is a very, very acceptable level for investing.
So what happens, Weiss, if later today Powell acknowledges what's happened in the bond market to a significant enough point that he leads everybody to believe that they are done, that they don't have to do any more because the bond yield backup has already done a lot of the work and the heavy lift for the Fed. And yet he's confident about the economy enough that he leads us to believe that soft landing's still a possibility, that he thinks inflation is going to continue to moderate. How does the market take those comments today?
Well, I think given what the sell-off in the market we've seen in NASDAQ over the last 3 months, that the market's looking for any reason to rally. But I don't think that'll be the case. I think it's unrealistic to assume that Powell's going to go from being super hawkish to even giving the doves something to hang on to. So he will give a nod possibly to the tighter credit conditions and to the slowing economy. He may say we're going towards soft landing, although I don't think he's going to predict it. That's not what they do. I just think that, to his point, that he's right, that it doesn't matter if the Fed's done. What matters is where rates are, how long they've been there, and how long they will be there, and that die is cast. So the economy is going to continue to slow, and it doesn't matter. We don't have to declare today that we're going to recession or not. I think we are, but the fact is that's the direction. Markets trade on direction, and that's where, so I don't think there's much upside to the market. Well, it pops here and there, but the market's brutal underlying the averages. I mean, it really is. Single stock volatility is a killer.
All right, well, we'll get to that in a second. Market right now is pricing out any more hikes. 21% in December, 28% in January. That's, that moved a little bit, I think, after that data came out. Steve Leisman, our senior economics correspondent down in D.C., obviously, because he's going to be in that room asking Chair Powell a question today. What do you think's likely, Steve, that we get today from the chair?
Well, I think that there is some risk here that the chair tries to be a little bit more hawkish than the market is. And I want to just talk about the idea he's got a couple problems here. The first problem he has is that, remember, the committee statement is still sort of leaning towards additional hikes. So is, as far as we know, the most recent forecast. Then he's got this strong economic data that still seems to be out there, a bit weaker today. The bigger problem, though, is how the market is priced. You guys were just talking about that. Take a look at the probabilities here. 0 on November, that's going to happen today. And then a very small, that's not the one I want to talk about first. I'll come back to that, or I can talk about that right now, which is, look at what after the September meeting, there's the one I want to talk about. 21% probability in December, 28% in January. Almost no chance in the market that the Fed hikes. But now look at the change from December, where he had the market on at least an even chance, or 46% probability of a hike, and now it's just 21%. And so what is the question here? The question here, I think, is does the chair try to move the market back to a place where he has some flexibility to hike? Is he concerned that the market has gone too far along in pricing out hikes and then on the verge of pricing in cuts that he may not see to be necessary? So the first question is, does he sort of lean hawkish? The other question is, does the market really take in or embrace that hawkish and say, you know what, you may talk hawkish, Powell, but we're done with you. You're done. We're over.
Well, I wonder how many times today he uses the word patience because of what's happened in the bond market, Steve, and where yields have gone, and that currency that he probably feels he has now because of the bond market, as we just suggested, and you've said numerous times, doing a lot of the work for him.
Right. But you started the segment saying it's not what they do, it's what they say.
Steve does just make a great point,
it is
guys.
what they do. And
Listen.
The question is, Mr. Chairman, do 2 pauses equal an extended hold? This will be the first time they haven't hiked over a 2-meeting span since early 2022. And if they set this up for a third one, well, you know what? The market's going to say, okay,
listen to what he
you're
says.
talking tough, Mr. Powell, but at the end of the day, you're not acting tough. So I'm going to start to price out that hike. Now, that may be okay in the sense that if the economic data weakens, I think he's okay with that. I just don't think he wants to emerge from this meeting with the market being more dovish because of things he said.
Great point you make, especially underscoring the fact that it would be 2 pauses in a row.
Right.
We need to get our arms around that, too. We'll see what happens. Steve, we'll look for you in the room, too. Can't wait for your question later. And I'll see you on Closing Bell. Steve Leisman down in D.C. ahead of all of that. Okay, now, Rich Saperstein, to something you alluded to. You said, I think the exact words you said, the real actions in the bond market. So Stanley Druckenmiller, right, legendary investor, recently bought what was described as a massive position on the short end in the 2-year. So he was on Squawk Box this morning, talked about rising deficits, what it's going to take to fund that as a result, this sort of new environment we're in and what it means for the markets. I want you to listen.
It seems that bonds are adjusting to a post-QE world, but for some reason, equities haven't. So that's part of the problem. I think, given everything I just talked about and given the geopolitical situation, everything else, I don't think it's unreasonable to think that we're not going to continue to sell at 20 times earnings over a long period of time.
So this, to me, smacks of almost exactly what David Tepper told me a couple of weeks ago. From QE to QT, different environment, different multiple. The greatest wild card is, what's the right multiple? No one really knows. But Druckenmiller's point is that that multiple, 20 times or near then, is definitely too high in this new post-QE, rising deficit, slowing economic world. Make sense?
Total sense, because you're having pressure on corporate earnings. Rising rates are putting pressure on borrowers, both in mortgages, student loans, auto. But I think there's a framework to look at. Take a client that is wealthy and wants to stay wealthy, and you have a targeted rate of return there. So let's say they want to double their money in 10 years. They need a 7% tax-free rate of return. Well, last week, we were generating 5% on 10-year lockout munis. So if I've got 5% nailed on tax-free rates of return, how much risk do I have to really take for a client that wants to double their money in 10 years on the equity market? Couple that with where multiples are based on expectations of 246 in earnings on the S&P next year. Don't see it happening. So it's a good time to pull back on risk and focus on where there's opportunity, especially in the tax-free muni market.
This is what you hear. There's better risk reward, Joe, outside of the stock market. Whether it's Stan Druckenmiller, one of the greatest ever. Dubravko Lakos was with us yesterday, J.P. Morgan, when I said, what is the best idea you have right now? And he said this.
It's
right now.
Very simple. The whole year we have been saying cash is king. Why? Because we're saying you can basically clip roughly 5% yield at zero risk. So the Sharpe ratio of that proposal is pretty darn good. Equities better give you 12%, 15%. Not that easy.
All right, now I got one guy saying bonds. I got another guy saying cash. What do you make of that?
So for the answer to be cash, you have to believe that the environment over the next several years is stagflation. I don't see it that way. I don't think we have stagflation. I think we have a deflationary force that continues to emanate from technology. I believe that when you look out over the next 12 months, what you're witnessing is that the better opportunity absolutely is in the bond market. I think that's clear. And a lot of the reasoning behind that is, yes, you have that you have that deflationary force of technology, but in fact, you also have, in addition to that, a slowing economy. So manufacturing, 12 consecutive months now in contraction territory. Canada Goose, what did we hear from them this morning? Estee Lauder, what did we hear from them? Charles Schwab announcing a very unfortunate, significant reduction in headcount. It's beginning. The lags are taking hold, and the economy is going to contract, and therefore you have two powerful forces that work to the advantage of bond investors.
Well, because Bryn Druckenmiller, thinks that you're going to get that re-steepening of the yield curve, right? The short end's going to start going down on economic concerns more than anything else. So you buy a massive position there, you get a re-steepening of the yield curve, which is a precursor to the recession, which he must think is on the horizon based on what he said.
Well, I mean, we've already seen a steepening of the yield curve because the short end's only going to come down if the Fed brings it down, right? The steepening's happened on the long end of the curve. And so I think that a macro trader like Stan says, over the next 2 years, I can have a bird in the hand 5%. I'll take that all day long, and that seems to be a very good trade. I think outside of some munis that you see on the longer end and then in the money market world, I think bonds, long duration bonds, you're going to grow poor safely. They're a terrible hedge against inflation. So I'll take cash and some munis all day long on the short end. And then equities, longer term, are the best hedge against inflation in the public markets, which is what this show is talking about.
Scott, here's the risk of cash right now and short duration bonds. It's simply reinvestment risk. So anyone who buys a 6-month or a 1 year or a 2 year and getting 5.25%, 5.5% taxable, what's the reinvestment rate going to be if the economy starts slowing and then the Fed starts cutting? So what I'm trying to do is get out past that and say, look, I'm happy locking in longer term, and I don't want to take the reinvestment risk of shorter term paper.
But there's still, investment advisors, Weiss, who make the argument you're still, if you're a longer term investor, going to be better in equities. You're going to get, reasonably good earnings growth over that period of time, reinvestment of dividends and the like, and you're going to do just fine in equities. Now, we're not playing for the 2-month time frame. We're playing for the 2-year time frame at minimum.
I find the ones that come on this show and other shows that say that, they're not the asset allocators. They're only equity. So that's what they're going to say. If you go back to 2022, right, they're saying, and it said, in a year we'll be fine. And then, no, in 2 years you'll be fine. 3 years you'll be glad you own this. But, you know, as I've said repeatedly, your return is defined by your point of entry. This is not the time to go into the market.
But you've also made the point on numerous occasions on this show that stocks go up like 80% of the time.
And there's that other 20% where it can be brutal. So I think when you have, I think this is a fat pitch on a declining market, frankly. We're seeing it in the data, as Joe pointed out. We're seeing it in monetary policy. We're seeing it in a lack, frankly, of fiscal policy, right? So now is when it's the perfect storm for markets to decline. So look,
which is some would suggest also there are too many people now on that side of the boat.
But they're not. You know, and just go
even
back.
Stan himself said.
Stan's been negative.
But he made the point that, yeah, I've been negative. I've got the bond market right. I got all that right, but I got the stock market wrong. Because the stock market still went up in the face of all that.
He got 7 stocks wrong. He's playing the market. Look at all these other stocks. He got it very right. But if he's playing the S&P futures, then of course he got it wrong. But the point is, Scott, is that you don't have to invest. You don't have to every day put money in. You could still make money. I'm comfortable going 2 years out because I think that if that happens with the Fed cutting rates because the economy's going into maybe not a tailspin, but definitely towards a recession, and then the market will move higher at that point.
Let's talk. Hold on real quick. Let's talk about somebody. He knew this was. He knew this was.
Oh boy.
Let's talk about somebody who has to be invested. He has to be invested.
100%.
Long only.
Long only.
Long only your Joe T ETF.
Yes.
Which you rebalanced because it was the end of the quarter, and now we have the moves that you made, which I want to go through them because there are several interesting ones, as there usually are. Many tech moves. Probably saw this coming, at least in some respects. You sold Tesla, down 23% in 3 months. Take me to that first.
So that's just a breakdown in momentum, and I think it's a great example of the lack of momentum, as Bryn, you and I talked about before the show. You're going to go through periods, and remember, this is a momentum-based product with a defensive layer being added upon it, which is the quality factor. There's no momentum. There hasn't been momentum.
And the fundamentals broke down, too, in addition to the momentum.
There has not been any momentum in the market. So Tesla is a perfect example of where you've witnessed that breakdown in momentum. We re-entered that mega cap name in July at a much higher level. And now, because of the breakdown in momentum, we're getting out of it here. The rules dictate that that's exactly what we should do. We're still maintaining exposure to a lot of the mega caps that we put back on in April, which have worked out nicely.
Yeah, there were no other mega cap moves. I want to make sure the viewers are aware of that.
We're still holding NVIDIA. We're still holding Microsoft. We're still holding Meta. Those 3 have worked out incredibly well. We're holding Apple. That's basically a wash. Alphabet, we're down a little, and we haven't been in Amazon since July of 2022.
Okay, so you sold AMD.
Yes.
That's down 12% in the last 3 months. Price targets cut today after earnings. Stock did reverse, though, higher, but nonetheless, you obviously feel momentum's lost.
So what's interesting about that is there are, as our good friend, Adam always tells us from Trivariate, there are
Adam Parker.
Adam Parker.
So I was going to say, he's such a good friend, we can't remember his name.
No.
Yeah, what's his name again?
There's facts.
My best friend, what's his face?
Yeah. There's facts, and then there's feelings. I was going to call him Adam Sandler, by the way. So
that's a compliment.
Yeah. So there's facts and there's feelings. So when you think about AMD, the feeling that I have, I listened to Josh yesterday. I think AMD is going to be fine. I think AMD is going to participate in generative AI, and I think over the long term, it will be an AI winner. But as you point out, momentum has broken, but something else is broken. You can't ignore the fact that there is a deterioration in revenue. Revenue's down 18% in the previous quarter.
Okay.
It's down 9% over the last 4 quarters.
Tell him,
and now
Joe.
Compare that to with it being up an average of 52% over the last 36 months. The revenue is in decline.
So you sold Ansys, you sold Keysight, you sold Texas Instruments. That stock's gotten really hurt.
That's really taking that's taking the semiconductor exposure down. The semiconductor industry was the highest single industry weighting that we had in the ETF. That comes down now. It's the second highest industry weighting.
In terms of what you bought, Autodesk, Checkpoint, Cognizant, Gartner, Palo Alto.
Yeah.
So you're getting bigger in cyber.
Palo Alto is the one that stands out. I obviously own that personally. Being added recently to the S&P 500, we now have the ability to take a position there in what clearly is a very strong momentum winner.
You want to touch on any of the others? I mean, Autodesk, as I said, Gartner, Cognizant.
Each one of those, Scott, I think have to prove themselves over the coming quarters. You could define each of them in particular. Cognizant as having very strong balance sheets. I think it's the quality factor more than the momentum factor. We're studying two factors here.
I thought they had to have both.
Well, they can have both, but one could be more of the contributing factor into why it is added into the portfolio than the other. But there is, in essence, a hybrid between the two, which is being nurtured, and the reason why they're being added.
Okay, so Bryn, from the committee, you want to take a shot at any of these? What you like, what you don't like? You obviously have Tesla, which you got rid of, but what are your thoughts?
I mean, Tesla's a good example. I mean, I think I traded Tesla really well. I think from a trade, I like to match fundamentals and technicals. So I bought it at 115. I think 115 when all the Tesla hullabaloo was going on, and then I think I bought it at 150 and 170. I then sold calls against those positions because I see the energy, and I think it's a hard company to value, right? Because things change quickly, and they were cutting back on prices. And so both those two of my positions got called away at 220 and 190. So I'm comfortable that way. I think on momentum, I mean, you run the strategy. It's like we traditionally have had momentum last multiple quarters, if not years. And that this has just been this strange market where the past year and a half, momentum is just breaking down very quickly. So that's where I think if you just look at the big sectors in the market, outside of energy, every sector is technically broken. And so I think that makes it tough right now. And that's where I think we can get a seasonality rally. But technically nothing looks great except for energy, which is still negative for the year, but holding in there on that perspective.
We have, in the segments coming up, we're going to go through other sectors because you have a lot, whether it's in energy or healthcare or in some cases retail too. I also want to be clear. You said on the air the other day that you're underperforming the market, the S&P. You're not benchmarked though against the S&P, right? Aren't you benchmarked against the factor of momentum?
Look, I have the privilege to sit in this seat, so the viewers are going to benchmark me versus the S&P.
Well, there's no question that they're going to do that.
Okay, I understand that, but the benchmark is against momentum itself. And just so to be clear, momentum investing is real. There's billions of dollars in momentum ETFs, nearly $10 billion in momentum ETFs. And if you study a factor of momentum relative to the S&P, over the last 10 to 15 years, it outperforms. You're just going through this period of time in which you're seeing the underperformance. It's probably because of the normalization of monetary policy. But yes, in fact, I look at where we are and I measure us relative to momentum. I also, I disagree with the premise that we should be benchmarked to the S&P, and I'll share with you why. The median market cap on the S&P is $183 billion. The median market cap in this strategy is $44 billion. Why? We're equally weighted. So when you're equally weighted and you don't own the mega caps, guess what you trade like? You trade like a small cap.
Yeah.
And basically, we are correlating right now to the Russell. That's what our correlation is currently.
All right, I'm glad you explained that. Let's take a quick break. We come back. I said Joe's got many moves in many sectors. We're going to go through them. We'll find out how the committee is positioned. We'll do that next.
family business.
All right, welcome back. Told you we have a lot more moves to go through from Joe's rebalance. Energy. It's tied for the third largest sector holding for you, right near 13%. That's well ahead of the market.
Yes.
Right? You bought Oxy.
Yes.
And Pioneer, PXD.
Correct. Adding to the energy exposure. And let's be clear, the overweight exposure within the strategy to energy, there's no other sector that can compare to that. By the way, the activity in this rebalance was the lowest that we've experienced since January of 2021. There's only 22 names that went in and out. So I said the other day, less is more. But we really maintained the energy overweight exposure. But I'll say this about energy. This is a prove-it quarter. This quarter, coming up, it has to happen for energy, or I suspect that you will begin to see the strategy reduce significantly the exposure to energy. I think we're at that moment. I think we're at the moment where we've witnessed so far relative underperformance in the energy sector to the other sectors year to date, and now it's time for energy to step forward and advance from here and begin to outperform.
I mean,
it has to do that.
Brandon, it's the worst sector in October, down 6%. You obviously have a ton of exposure there. We get a ton of earnings tomorrow, before the bell, after the bell, even today after the bell with Marathon. What are your thoughts?
So I think from actually a momentum strategy, this is interesting because there's a ton of dispersion of return. So like this year, a Diamondback's up 18%, crushing the S&P, by the way, right? Energy Transfer up 10%. You see a lot of individual energy names have done
My
very,
favorite,
very
I
well.
was just looking at
with
that
the
FANG.
juxtaposition of a Devon, which I also own, is down 25%. So I think it really matters what you own. We prefer to play RSPG, which is the equal weight, because I don't want to have 40% of the portfolio in Exxon and Chevron. I want to have more smaller and mid-cap exposure, like the Marathons, like the Diamondbacks, and RSPG gives you that. And so you don't have just such a big, I think, headwind of what those two companies do. But I think it's a great momentum strategy going into the end of the year.
We're equal weighted as well, so we look at it the same way. It's not as if we have excessive exposure to ExxonMobil and Chevron, which market cap weighted would.
Rich, you have a lot of exposure here. Canadian Natural's your biggest, but you're in Exxon, Chevron. You do have Oxy, the XLE.
I think there's a very bigger picture here in the energy space. First of all, it represents 4.7% of the S&P market value, but it's contributing 11% of the earnings to the S&P. Secondly, in the last 5 years, all the energy companies have really found religion and reduced their exploratory and CapEx activities in geopolitically unfavorable places, and they brought it home. They've conserved cash. They've cleaned up their balance sheets.
They've been more shareholder friendly.
They are way more shareholder friendly, but also we have companies generating 10, 12, 14% of free cash flow. Look at Shell right now. So Shell got a new CEO January 1. They bought back 10% of the company in the first half of the year, and their free cash flow, not their operating cash flow, is approaching 18% a year now. The one you mentioned, Canadian Natural, it's 10% a year of free cash flow. Exxon, $430 billion company, $46 billion of free cash flow. What are all these companies doing with it? They're returning it to shareholders through dividends and CapEx. In an environment where we have 5% structural interest rates, okay? Capital allocation is going to be very important for companies, and those with free cash flow are the ones that I want to own. Energy is the place.
Okay. Let's get the headlines now with Bertha Coombs. Hi, Bertha.
Hi, Scott. 5 Americans are on the list of foreign passport holders that are expected to pass through the Rafah crossing in Egypt today, according to a list compiled by the Gaza Border Authority and confirmed by NBC News. The State Department said U.S. citizens will be assigned specific departure dates out of Gaza. Jordan's ambassador to Israel is also leaving the region. The country recalled the official to express its disapproval of the war in Gaza. Jordan's deputy prime minister and foreign minister said the ambassador will only return once the war is halted. The statement added that Israel's ambassador will not be allowed to return to Jordan under current conditions. And here at home, a rescue operation is underway in Kentucky after a shuttered coal preparation plant collapsed. Workers were removing machinery to prepare the facility for demolition. At least one man was killed and one is trapped in the accident, missing at this point. The governor declared a state of emergency while rescue efforts continue. Scott.
All right, Bertha, thank you. That's Bertha Coombs. Coming up, a check-in on healthcare. Humana shares pulling back. Weiss is in that one. We just showed Joe T because we're going to get his takes, too. You got anything important on there you were looking at? You good?
Just
all right. We're back after this.
Their greatest potential.
All right, welcome back. Our chart of the day today is Humana. Earnings beat, but what's the deal, Weiss? They only affirmed their outlook, or reaffirmed it. So is that why there's some disappointment in that name today, down 4%?
Two reasons. That's one, because said, okay, you had this beat. Why didn't you raise it for the beat? And the other is the loss ratio. They moved that up slightly in the range. I think both are ridiculous, candidly. I mean, the stock's at about 16 times, 17 times earnings, which is pretty cheap for this company, pretty dependable. To me, it's a buy, but unfortunately in this market, sort of got to wait around because the market's unrelenting in terms of not just one day down, with the exception of Meta. So I like it. I still think that this is the place to be, both Humana and United Health. United Health's my much bigger position, but this one, you know, I mean, it's painful watching it.
It's been a tread water trade, right? I mean, year to date, it's done nothing. It's not like it's down a lot, but it's just not up.
It's not been a tread the water trade for me. Again, your point of entry defines your return.
Well, that's just true.
I got it in a pretty good spot here, so I'm pretty happy with it. I'm not selling it. I'll look to probably add when it settles down.
Okay. Bryn, in terms of healthcare, AbbVie, that's your best one? maybe your only one.
Yeah, but I mean, healthcare was my stock summit sector for the year. And so like going into 2023, I felt we're late stage economic cycle, and the three sectors you want to own are staples, utilities, and healthcare. I thought both staples and utilities were really expensive relative to their history. So I felt healthcare gave you that like kind of GARPy, growth at a reasonable price. But you know what? The sector's down 9.5% for the year. It just hasn't delivered as I thought it was. That being said, I'm going to stick with it. I mean, I think AbbVie had numbers last week. They're actually good numbers. But in this market, this quarter, if you miss anything, if there's anything even remotely that the market doesn't like, you're going to get sold off. So I will add to AbbVie at some point this year. But I think as a purchaser of equities, I'm going to wait a little bit longer on that because the chart doesn't look great.
What jumps out to me the most, Joe, in terms of your moves,
I'm ready,
is that you sold Merck.
Yep.
A long-standing name, personally and in the T.
Yes.
Why?
June of 2021, we entered Merck, both personally and in the strategy. 74.50 was the entry price, so we're getting out at 102 here, again, personally and in the strategy. The momentum in Merck has broken down, plain and simple. No further explanation needed. The fundamentals are still in place. It's a quality company, great balance sheet, a lot of great drugs in the pipeline, but unfortunately the momentum is broken down, and that's the reaction.
Okay, so you bought Lilly, Viva, and Zoetis.
Yes. The interesting one is
Lilly, because of what you got rid of it in a prior rebalance. Now you add it back in this one.
All right, so let's kind of walk through the process, and I'll ask my good friend Stephen Weiss to see if he agrees with this. Buy the stock in April of 2022 at 290. Buy the stock there. Sell the stock out in July of this year at 453. In August, that's why I said August. August is on my mind. August, stock gaps up to 500, okay? Takes off from there. Everyone says, well, you got out of Eli Lilly. Now you have the quarterly rebalance. The stock is at 553. What do? Do you just sit there and lament that you got out of it, or do you follow the rules and you go back in again?
Me, in this market, I'm not going back in.
Okay.
You got to follow the rules.
You
got to follow the rules.
You have to go back in again. You can't sit there and lament the fact that you got out of something, all right? You were in it for in excess of 15 months. You rode it from 290 up to 453 is a great trading lesson there. Now it gaps away from you. You're out of the stock. You don't sit there and go, oh, I feel so bad for myself. I was in the stock and the stock went higher. I'm not in the stock anymore. No, you have to react. You have to go back in the stock. Why? Because the stock's 553 and the stock could go easily to $700, $800.
I don't see momentum. I see down. I'm looking at the chart right now. I'm sorry, did you say you shorted? Because it's all downside momentum. Or are you saying you're long it?
Oh, boy. Where do you see the downside momentum in Lilly?
I'm seeing the stock coming down, as you said, from 600 to 553.
Look at the chart over the last year. How could you say that?
I mean, yeah, the chart looks great, by the way.
And by the way, the reason,
even though I'm an investor, you think that chart looks great?
You don't think that chart looks good over the last year. The reason why it was sold, by the way, in Q2, it was sold in Q2 because it went basically flat.
I love this. I love what they're doing.
The momentum was incredibly strong.
I love it. They do it all the time.
From April of 2022 into April of 2023.
That's an ugly
chart. Then the momentum kind of goes
sideways. It's a good-looking
sideways,
yearly chart.
Right? And you're responding to the sideways nature of that momentum. That's where you need to the sidelines of the stock.
Why'd the stock gap up?
You don't think that chart looks good, Weiss? It's like...
That's funny.
It's like a double.
What were the fundamentals specifically? It was on a drug, right?
Okay.
Yeah.
Right?
It's on the weight loss drugs.
The bloom has come off that rose a little bit.
How do you know that?
Well, I'm not just saying it. The stock's saying it.
How is the stock saying it?
The stock's down 10%.
Hold on. Where did it gap from?
What's the multiple?
What was the gap price?
445 is where it started before it gapped.
Where is it now?
550.
So how is that the stock price is telling you?
I see their support maybe down another 10%.
Okay.
Yeah.
And to answer your question, trades at 78 times. It's richly valued. Momentum doesn't take that into account. Quite candidly, we talk about value. We talk about valuation all the time on this show, right?
Right.
Is valuation really the catalyst for where future returns are going to be and where you want to be?
It's not momentum either. It's fundamental.
I didn't ask that question.
Short term.
I didn't ask that question. I said, is valuation? Because you asked me what's the valuation.
One part of it. Absolutely. It's one part of it. I look at valuation of every stock I buy, bottoms up fundamental. Charts are fine. I do look at them a little bit, but basically fundamentals can control what I do.
Okay. Does not work in all cases, from my opinion, when you look at valuation. You have stocks trading at single PEs for a decade, and the stock goes nowhere.
Yep. As I said, fundamentals also.
All right. All right.
That was a good debate. There's nothing wrong with that.
It was fine, but it's like time to end it now.
He wants to move on.
Right.
I was getting bored of it.
Well, you were talking, that's why.
Yeah.
Mike,
Oh, and I
Mike
was so
Santoli
nice
is
to do
next.
this show, Joe.
They didn't say nothing. What an ending. Oh, man. There's somebody who we can listen to. Jeffrey Gunlock. We'll get to hear from him today. So I'm going to go back through it. Like I said, I was working on the SPY, the Qs, kind of just getting my game plan going. We're almost at 1 o'clock, guys. We're going to have one more hour. One more hour. What is it, 2:30? 2 o'clock, I thought. I thought it was 2 o'clock the paper comes out and 2:30 my guy comes on, or is it 2:30 and then 3? Let's see. I'm pretty sure I'm right with the 2 o'clock. 2 o'clock. Thought so. I don't. Year after year, month after month, quarter after quarter, I always get this. I'm always like 2:30. No, it's 2 o'clock. So we have about an hour and 15 minutes, folks. Get your levels. Let's get ready. It's almost game time. We're going to get some volatility. They'll probably keep it the same. Canada kept it the same. European Bank kept it the same, I thought. Brazil and them, they're cutting, blah, 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 blah. So I think we're just sitting in our pause phase. ISM manufacturing, they're going to watch that. 46 contraction. That's pretty. That's what they want. This is what they want. Right there. That 46, that's what they want. Job openings. It's not really what they want. You know, they want that number to come down, not up. ISM manufacturing employment, 46 versus 51 and stuff. So how do we get Joel's job openings? So you have like job openings, losses, and I forget what the TS is for. Quits or something like that. I don't know. Anyway, job openings 9.5 versus 9.2, and last month's 9.4. It actually went up, while ISM manufacturing employment is down. It's contracting. So I'm going to go back over the levels, blah, 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 all that fun stuff. I think we get a little bit of volatility. Let's just see how we end the day. Remember, watch going into positions tomorrow, because you have a lot of stuff tomorrow, I think. Unit labor costs, non-farm. Oh my gosh. Initial jobless claims. But we have factory orders. We have non-farm payroll on Friday, I'm pretty sure. Yep, that's the big one. Friday's the big one. Friday's the big dog. All right. Yeah, I'm going to go through my charts, get my levels ready, crack open a Red Bull here in about 10, 15, 20 minutes. Get my ass ready.
About how term downtrend. We did have some broadening out. Some of the most laggard groups did get some relief, but if all we're doing is working off the oversold levels and then getting put up on a T to get smacked again, that's the question. Another 1.5% higher on the S&P 500 probably is a hurdle to prove that this could be a decent low for now. I do think it's going to be about whether Powell decides he really wants to work to put that December meeting more live, make it more live, make it more like they still seem vigilant, as opposed to the predominant feeling being that the Fed finished in July.
Yeah, because as we showed at the top of our program with Steve Leisman, 21% chance in December, 28 for January. So the market's all but priced this out.
It has. And, again, the 25 basis points on the short end wouldn't be that big a difference, but it would keep us on this treadmill. The sense out there that the Fed wants to bring the economy to a significant slowdown and have it operate under potential for a while. And while the market has been bracing for something like that, you still have to kind of wait around to see if it came to reality.
Yeah, I'll see you in a couple hours. We'll see how this whole thing unfolds. I'll look forward to that. Mike, thank you. Mike Santoli, our senior markets commentator. Coming up, we're hitting more of Joe's moves. Got 2 retail stocks he just sold. You need to know about those. We'll do it next.
I think that's a good place here. This might be a decent area to think about a long on TLT, just to put in like a position here at like 84.30, 84.40 area. You can see it starting to try and bounce now. All right, you can see the tails. See how the tails are coming in here? All right, pop, pop, pop. See if you get that little, you know, shy rack going on and shit starts popping off. All right. Excuse my language. Sorry about that. For anybody that has kids or is at work, all that fun stuff. Just going crazy here. Not really. Still thinking about AMD. Not really. That's another lie. I lied to you twice. I'm not thinking about AMD. Again, I'm going to repeat it. This morning, I'm like, man, I think this thing goes to the upside, but I can't do it. That's not what I want to trade. I can't do it. I can't take this thing long. I can't do it. You know, I can't do it. I couldn't do it. Like, who's to say I would have been able to stay in the trade? Do you know what I mean? If the short would have worked out, that's a trade I would have been able to stay in. Sounds like he's telling on him. You sold Nike. So yeah, that... I don't know where AMD wants to go to from here. I don't know if you get one of those move-to-moves where it made that rally. It makes its move. It consolidates. Does it make that move again in the afternoon? I don't know. I'm really curious to see where this thing goes. Right.
All right, we're back. You sold Nike. Give me that first before we get to the other one. No, but I mean, anytime somebody sells a blue chip name like that, or what was perceived to be a blue chip, I don't know. It's just like a big deal.
Yeah, no, I understand that. And I know a lot of committee members are, have traded Nike and are still long Nike from the long side. But there's been a significant impact on revenue from the slowdown in Asia. And then in addition to that, it's been reflected in what we're seeing in the price action. And the rules are, having us move clearly to the sidelines on it. We entered the trade at a poor price. I will acknowledge that. There was a significant run-up earlier in the year, and the strategy turned the green light on, if you would, so to speak, to the stock because of that run-up. We entered at a very high price point, somewhere around 124. So we were punished on it immediately from date of purchase.
You also sold Ulta Beauty, which today Oppenheimer said buy the dip.
Listen, this stock is a stock that over the years I've discussed on the show. I've owned it on the show. It is a quality company. It is a company that trades at a reasonable valuation, but it is also a company that has been in the strategy since July of 2021. The entry price was $335. The stock is pulling back. The exit price is $381. The strategy doesn't like turning winners into losers. That's not what when you're identifying momentum as a factor you want to be seeing, bearing witness to. So I understand why the liquidation occurred. As I said, it doesn't change. It is a very good company.
Rich Saperstein, what do you think of these?
I don't own any of them.
You own Costco and Home Depot. That's it.
I don't really go into areas where I can't see it and touch it every single day. So Costco is a name I've owned since '98.
You don't own any Nikes?
Wow. Don't own Nike. Don't own it.
I mean, you don't own any Nikes?
I go to the gym in Nikes every day.
You said you need to feel it, touch it. I mean, you can see it.
It's not a name apparel and footwear. It's not something I want to invest in.
Okay, Bryn, he got out of that real quick.
Yeah.
See that?
That was good, huh?
That's good.
Can't blame him there.
I just think
Can't blame him
there
there,
are so
though.
few stocks
I'm with
that
you.
outperform even the 30-day T-bill, by the way, over long periods of time, much less outperform the S&P. And so we have a high hurdle, right? And so I think these consumer names, I mean, I was looking at Ulta technically, like you had to sell that. That looked terrible. So if you're like a momentum base, Nike also. And so I do think it's important to read the room. And the market's saying Nike and Ulta are sells right now. I think as an investor, I would want to wait till that turns, because the rule is don't buy a stock making new 52-week lows and don't short a stock making 52-week highs. Ulta and Nike would violate that first rule.
Weiss.
I think it's very tough to buy a consumer stock. I'm going to bet you own Home Depot for a long time.
Yeah. I've added to it. But the theory there is that homeowners are not going to get out of their house because they can't
They got
move.
to spend to redo it.
Right. So they're going to remodel their homes because they're stuck in their homes with low mortgages, low interest rate mortgages.
Yeah, Home Depot's, it's a permanent compounder over time, so it's on my buy list, but the consumer's tapped out. We see it so many times. The one-off retail numbers aside, I just think you got two issues. You got to predict taste and trends, and then you got to predict the consumer health. Consumer health's not good.
All right, quick break. Final trades after that.
Oh, no. see if we get a bounce here.
It's opportunity.
3 o'clock Eastern today. Oh, man. Right after Jay Powell, Jeffrey Gundlach joins. I hope you'll join me then.
Final drink.
Yeah. You guys are too much. All right, let's do final trade. Rich.
Should we go to Weiss first?
Rich. Rich, final trade. What are you looking at me for?
Aqualung, no. Canadian Natural Resources, CNQ, 4% dividend yield.
All right. Yeah? Oh, you finished up. I mean, I was like, oh, you got more to say? Like, what,
10%
like it was like yield, like there was more to come.
Cash flow yield. Oil
Normally, it's
sands,
like I finished yield. No, yield, like there was more.
Oil sands company in California, in Canada.
Weiss.
Tesla, short.
Okay.
Buy the puts.
Microsoft.
Yesterday we bought Apollo. We also bought Train Technologies.
Okay. Just to reiterate, right after Chair Powell's done, Jeffrey Gundlach will join me on Closing Bell. I hope you will as well. I will see you then. The exchange is now.
Oh, we're gonna be there with the bond king.
Thank you very much, Scott, and welcome to the exchange. The House has a new speaker, but as the clock is ticking on a potential government shutdown again, will Congress be able to come together to get anything done? The U.S. government will run out of funds in less than 3 weeks, and another stopgap funding bill is likely. You know, I thought that felt like a little detailed about the machinations of Washington. Welcome to the special edition of the Exchange and Power Lunch, everybody. I'm Kelly Evans alongside Tyler Matheson.
Welcome, everybody. And as we enter this final 60-minute countdown to the central bank's decision on interest rates, a pause once again expected today. But it's Jay Powell's comments that investors will be paying close attention to. Less what they do, more what they say. And as always, we've got team coverage from the stock market to the bond market to the economy and how rising rates will impact the consumer. Plus, the view from Congress. Representative Brad Sherman, Senator John Kennedy will join us to talk about the legislative challenges ahead and much more. This as the clock once again started ticking towards that potential government showdown.
A lot of moving pieces for the markets today. Here's a quick glance at the Dow, up 25 points pre-Fed. The S&P up 1/3%. The Nasdaq up 0.5%. Lower rates have a lot to do with the complex you're seeing so far. We had economic data that, other than jolts, was largely on the dovish end of things. The Treasury's refunding announcement, same kind of deal. We'll dig more into that later. Look across bond yields where you can see the 10-year note was below 4.80, now 4.82. The 2-year look just over 5, and the 30-year is now below 5, 4.985%.
Well, he was here earlier in the morning, but now he has gone over to the Federal Reserve. Let's kick things off with Steve Leisman. Hi, Steve.
Hey, good afternoon, Tyler. Ahead of the Fed meeting, the 10-year yield, as Kelly was saying, falling sharply, taking 2 steps down. The first one came on a somewhat better than expected Treasury announcement on refunding the debt, and another on the economic data, especially the weak ISM and, of course, a weaker ADP payroll report. Here's how the Treasury responded to all of it. First leg down in the morning with that Treasury refunding, where they leaned a little bit more towards the shorter end of the coupons and also suggested that there was only one more quarter of increases in coupons to come. And then the other leg down came at 10 o'clock with the ISMs coming out in some of the other data. But here's how we go into the meeting. Here's the setup. The probability for rate hikes in upcoming meetings, of course, this one is 0, and for upcoming meetings is very, very slim, just 20% for December and around 30% for January. But that's a big change from the last meeting when there was roughly an even chance of a December hike. Now you can see, as we saw, just 21% down from 46%. So the big question for Powell is, do 2 pauses, assuming we get one now, equal to hold? Possible answers from Powell that could affect the market. He says, yes, the Fed is on an extended hold, which he's not going to say, but if he did, that'd be a big rallying point. More likely, he says, maybe meetings are live, but we continue to be in a wait-and-see mode. Then there's the idea of the most hawkish answer. He'll say, no, the committee continues to forecast a second hike. The Fed needs to do more. Don't expect that. Looking more for the maybe, keeping the Fed on edge. I think there's a chance Fed Chair Powell tries to redirect the market towards the greater possibility of another hike. The market may be close to deciding that, hey, whatever Powell says, it doesn't mean it's going to happen.
And Steve, to what extent is all of this overshadowed by what's happening on the supply side of things with bond yields? With the Treasury's announcement this morning, and really its announcements going back to Monday, a little bit lighter issuance than expected, and that's being taken as a positive.
It is interesting. I don't remember a time when Treasury issuance basically was more important than what the Fed may or may not say. You remember in August with that announcement, it seriously moved the market coming after the Fitch downgrade, and then the surprise on the coupons on the long end of the Treasury market, and then again coming this morning a little bit lighter. And also the idea, Kelly, that they're not going to go so much further in terms of increasing coupons into the third quarter. So they're the bullet points there. Maybe a little bit lighter on that 112 in terms of the total amount that's going to come to auction. But I think the more important point was the idea that there's only one more quarter of increases left. We'll see if they hold to that. But you're right. The market is very focused on these numbers from here on out. I don't think they go away.
All right, Steve, for now, thank you. We'll see you soon, our Steve Leisman. Now, about that strong third quarter GDP number and the still tight labor market, will it force the Fed to raise interest rates again today, or will they pause and let the bond market do the work for them, so to speak? Let's have that discussion with our special Fed panel. Here with us in Washington, D.C. is longtime Fed watcher Paul McCulley. Welcome to you. Former chief economist at PIMCO, currently adjunct professor at Georgetown McDonough School of Business. Also with us here, Subhadra Rajappa is head of U.S. rate strategy at Societe Generale, and Nancy Tangler is CEO and chief investment officer at Laffer Tangler Investments. Welcome to all of you. Paul, I'll start with you. What are your expectations, and how do you think the market setup looks?
I think Chair Powell is going to say the Fed's in a good place. There's lots of details about this whole thing, but the general conclusion is that the Fed's in a good place. They're restrictive, unambiguously restrictive. The labor market is moderating. The path towards a soft landing or a soft normalization is proceeding apace. I think the Fed's in a very good place. I think he will say that. I think, as Steve was noting, he will also note that if they're not in the perfect place, it will be because they need to move up a little bit more. But I don't think he's going to show any urgency whatsoever about getting off the good place and embrace the notion that the market is not fighting him anymore.
The market's doing some of his work.
Exactly. They've been fighting him for the last 18 months. We inverted the curve over a year ago, and the market not fighting the Fed makes the Fed's job easier.
He's not going to say we're done, but he might use code that says we're done. What would those code words be?
There's a line in the statement that we've had for the last 7, 8 months that he could change a little bit when effectively he says that, we'll be, as we evaluate the need to tighten some more, we'll be looking at this, this, and this. But, the presumption is the next move would be a tighten. So in the statement, he could effectively soften that presumption that the next move will still be in the up direction.
Words like sufficiently restrictive.
Oh, man, that's the big phrase, and I don't think they will say that in the statement. But dollars to donuts, he's going to get asked that at the press conference. Sir, are you sufficiently restrictive? And it's going to be interesting to see how he handles that question. But I doubt that they would say that. Yeah. Very much doubt they would say that.
Okay.
He certainly, Subhadra, has a track record, or the Fed does, of the market kind of taking the initial decision in stride, and then to Paul's point, seeing more of the sell-off or the risk-off move happen during the chair's comments at those press conferences.
Yeah, we don't really expect much of a change in the statement. I think you're probably going to hear Chair Powell talk about proceeding carefully from here on. But for the most part, I think following on the heels of the ECB as well as the Bank of Canada, the focus is going to be on delivering a hawkish pause and keeping their options open to hike more if needed. I mean, we've had very strong data thus far. Today's data, of course, was a little bit weak. Manufacturing has been on the weaker side. Employment remains relatively strong. And inflation is coming down ever so gradually towards perhaps 3% by the end of the year and 2.5% by the middle of next year. In that sort of context, I think it's a little too soon for the Fed to really guide the markets towards any sort of a pause, even though the rise in long-end yields is already doing the work for them.
Subhadra, let me just jump on that ISM manufacturing report, which wasn't supposed to be the scene stealer today, but it was really bad. It felt, it had been improving the last couple of months. We thought maybe it would go back into expansion territory above 50. Then it fell all the way back to 46. These kinds of readings are historically consistent with a recession, aren't they? I mean, shouldn't we be making more of this?
Yeah, absolutely. And I think that if you ask me, if you look at the data in aggregate, ISM manufacturing has been weak for a while now. So we've been in a manufacturing recession for quite some time now. It's a question of when this is going to spill over to the services side, and when the consumer, if anything, is going to be retrenching from the spending splurge that they've had during the summer months. And I think that that's going to come in the fourth quarter because the consumer is starting to come under an increasing amount of pressure. Student loan moratoriums expiring, as well as higher gas prices are all eating into disposable income. So I think the fourth quarter, you're going to start seeing the consumer start to pull back.
So, Nancy, notwithstanding those numbers on manufacturing, the economy has been remarkably resilient. So why has the economy been as resilient as it has been in the face of a Fed that has been very persistent in raising interest rates? Why hasn't it slowed more?
Yeah, Tyler, I mean, I think this is the first time in my career where we've had a Fed and fiscal policy at odds. You've got the federal government spending a tremendous amount of money, and the fiscal thrust continues. And so that's provided economic growth that may be the wrong way, but economic growth nonetheless. And then I would also argue that although the consumer may indeed pull back at the low end, what, in my experience over the last 4 decades, is that individuals spend, U.S. consumers spend out of net worth. We are at we are above pre-pandemic highs. So we're at 175 trillion in net worth. Half of that almost is the baby boomers at 77 trillion. So this is a cohort that, for the most part, doesn't have mortgages, and they have time, and they're spending. And I think that surprised a lot of investors. Happily, we've been increasing our exposure to consumer discretionary, but of course, the trick is to know when to decrease it. I think it continues for a while, sort of defying those who think we may pull back.
I thought Nancy's comparison with the 1990s there, too, was interesting. Paul, what would you say about all of that?
The baby boom is doing incredibly well. I very much agree with her on that.
Said the baby boomer.
Said the baby boomer, talking to another baby boomer. But I think in a more narrow sense is that the household sector and the corporate sector locked in generationally low interest rates in 20 and 21. Or put differently, they shorted the bond market. The household sector shorted the bond market. So essentially, they're sitting there, with mortgages that have a market value of 75 cents on the dollar. So they really haven't been bitten by what the Fed's doing. Now, for the new generation,
and their liquidity picture is much better than it would otherwise be.
Absolutely. So essentially, the bite of monetary policy is for the bottom half of the income distribution and for the younger half of the distribution. And I think that is a key reason the economy has been so strong is the household sector sitting in a short position in bonds effectively, or put differently, the household sector has got a rent control department.
Very well put. Subhadra, what would you add to that, especially as we turn our attention to the details of this decision? And what do the projections say about how likely the Fed is to move at all from here in terms of hiking going forward? And if not, when that first cut might be?
Yeah, no, I think we believe that the Fed is done, especially given how much long-end yields have risen. We believe that the long-end rising, as much as it has really effectively delivered a 25 or even a 50 basis point rate hike. So it's a matter of when, it's not a matter of if the economy is going to slow down. But to Paul's point, for sure, delinquency rates are rising in credit cards as well as in auto loans for the lower income cohorts, as well as the younger population of the U.S. consumer. And given that sort of haves and have-nots economy, I think the Fed is going to really proceed carefully from here on, and especially when it comes to hikes. And as Steve was pointing out earlier, the market's not really priced for the Fed to hike again, in the next meeting or even the next couple of meetings. And the market, if anything, is starting to price in more cuts for next year.
So, Nancy, you say that technology is the new defense. These names are the new defensive names. Why do you say that? And am I going to need defense over the next year?
Well, Tyler, I mean, I think the economy is definitely slowing, and that is a time when you want to own reliable earners. Remember, we talked about last October, we were adding technology names back into our portfolio, but also they've held up pretty well this year. And if you look at some of the names we like a ServiceNow, they beat and raised this last quarter, just as they did last year, by the way. They got punished in the near term. That's when you want to take advantage of, the price of the stock being on sale and step in and add to your holdings, because the secular tailwind behind technology, I mean, look at the JOLTS numbers. We've got a lack of labor. And historically, when we've had a tight labor market, spending on technology went up and the technology stocks rose. And then the last thing I'll say is, as an analog to the 90s, which is my thesis, we were in an environment that was very similar. We had a recession, we had a geopolitical shock, we had a war, we had higher interest rates. They hovered above between 4 and 8%, and averaged 5 to 6% the whole decade. And we had inflation above 3%. Yet the NASDAQ was up 800%. Now we know what followed that, but I think we're in a different position. NASDAQ was up 800% during that decade, said the baby boomer, and all the other two indices were up over 400%. So 800%, 400%. I think this is similar. I think stocks can continue to perform. Companies can continue to deliver earnings in a higher rate regime. And this is really not out of line with those of us who have, and in fact, I think Paul and I worked together in the 90s, but those of us who have been at this for a long time know that you can make money in stocks and in technology, which have historically been long duration, but are now companies that are providing more defensive posture in a slowing economic environment.
And we haven't even gotten to the geopolitical situation around the world yet. That's for another part of today's conversation, because that is an issue that is lurking there one way or another. It's going to affect psyches and investments around the globe. But thank you. Anyhow, Subhadra, thank you very much. Nancy Tengler, thank you. And Paul, you're going to be around for a while.
Stay put.
You're going to be back.
We're just getting started on the CNBC special edition of the Exchange and Power Lunch.
Coming up, an inside look at the rising shutdown risk on Capitol Hill. We'll speak with Democratic Representative Brad Sherman about that and more after the break. Plus, will the housing market be the biggest casualty of higher rates? We'll look at the Fed's impact on the mortgage market and prospective home buyers.
We're also tracking what's on the agenda in Washington with Republican Senator John Kennedy and strategist partner Dan Clifton. He'll tell us how to position for pretty much any policy scenario. Quick look at markets. Dow high was up 228. We're only up 70 right now. It's the underperformer of the major three, but the small cap Russell 2000 once again continues to be the laggard. It's down 0.5%. The 10-year note hovering around 481. We're back after this.
I go to FabLegs.com.
Welcome back to the Exchange, everybody. The House has a new speaker, but as the clock ticks down on a potential government showdown again mid-month, this as funding for Ukraine and Israel could hit a snag over its hit to the deficit. Joining us now to discuss that issue and more, his view on the Fed, the economy, is Representative Brad Sherman. He also sits on the House Financial Services Committee as well as the Foreign Affairs Committee. Welcome back, Congressman.
Good to be with you, Tom.
Very, very good to have you here. Let's start with your view of the American economy. It is quite hot, actually. If you looked at the last quarter, 4.9% GDP growth. You represent a district. I don't worry too much about the folks in your district, Bel Air, Brentwood, Malibu. I'm sure things are doing okay there.
Canoga
but how
Park,
do you
not
see
so
the
much.
U.S. economy?
Most of my folks are in the San Fernando Valley, which is not exactly the same, but I think things are good. The actors' strike is a problem out our area, and you know, people are not satisfied, and they're often not satisfied. Prices are higher, and you notice it. And it's nice to say that wages are up, but they're only up if you happen to have gotten a raise.
Let's talk about what's been going on in Congress and switch gears a little bit. We didn't talk in our first segment about geopolitics, and there is plenty to talk about there. I guess you have a new speaker. You have a speaker who has made it clear that he's not particularly in favor of funding additional monies for Ukraine. You have a package that may be put forth, maybe it already is, to help fund Israel's war effort, Ukraine's war effort, and maybe border security. What's going to happen here, and how does the speaker get his caucus to come along?
Well, not the way he's doing it. He's got, for the first time ever, he's going to make Israel a partisan issue. And that may be in his short-term political interest, but it's really a disaster. I mean, I've been a pro-Israel activist for 60 years.
What do you mean he's making it a political issue?
Well, what he's done is, instead of just having us vote on foreign policy, or better, or perhaps just on aid to Israel, he's marrying with it a cut to the IRS positions.
That was only to fund that, though, to make it
well, it doesn't fund it. CBO says it actually costs more money.
But the intent was not because that was the goal, but just simply to get the package passed without increasing the deficit.
I think his intent was to split and to say Democrats are voting against Israel. He's not funding it because the Congressional Budget Office says it makes it cost more. When you cut IRS positions, you cut revenue. And I think it's just because every time a billionaire cheats on his taxes, a member of the Republican caucus earns his wings. They really hate IRS enforcement because they know that wage earners have to pay, and business people have more complexity, and without an IRS, they don't have to pay.
As I understand it, the president has put forward a proposal that would marry aid for Ukraine and aid for Israel under one umbrella. Is that likely to carry?
In the Senate, yes. And frankly,
Biden
if
didn't
it's
put
split
together
in the House,
shit.
I think they both carry separately. They both carry together.
Straight.
I think
right. Biden
there'll be a
didn't do
smaller
shit.
number of Republican votes for the Ukraine than for Israel, but
there's
I think,
no way he put together
in general,
anything.
Their support
I'd be surprised
for
if
meeting
he
our
ties his
international
shoes. That's
responsibilities.
about all he can do.
Just because it raises this
So,
question about the deficit,
let's
we've had all
not
these
say Biden.
treasury
It's
supply
somebody else
announcements and
doing
so
it
forth.
for him.
This isn't the time and place to probably kind of fight that battle. That aid obviously needs to happen. If it's not passed, we'll probably need more down the road. But on the question of balancing this deficit, which now seems to be persistently with us, what would your ideas be on that front, or how is that going? How is that effort going to at least get started?
Not a penny will be spent that the Republicans in the House don't vote for and the Speaker doesn't vote for. And if they have ideas on how to cut spending, that's the place to do it. Likewise, and Republicans won't go for this, we actually need to collect revenue. And some of the cuts that Trump had in his first year have to be rolled back. And then you have to actually enforce taxation, particularly our enforcement on multinational corporations is very weak.
So let me I just want to circle back. You believe that one way or another, aid for Israel's war effort and aid for Ukraine's war effort will be passed by Congress this year?
Probably, because while they each would pass together or separately on the floor of the House, it's up to Mike Johnson to determine whether we get to vote on the floor of the House.
You've been an astute observer of and sometime critic of cryptocurrency. Is cryptocurrency being used to finance Hamas?
Yes.
I like what they're doing here, though.
Well, Hamas
I like how
solicits
they need to do this more often.
contributions. They've collected over $100 million, not so much from donations from individuals as transfers from from Iran and others. And crypto, if it ever really becomes a currency, look, it's not a currency. You got sandwich place downstairs from the studio. You can't buy a turkey sandwich there. But if it ever does become a
Wait till
currency,
you hear what he just said.
then it's going to be much more effective because it says right in the name. Cryptocurrency literally means hidden money. And with unhosted wallets, it means the know your customer rules that apply to banking accounts can't apply.
It's coming up right here.
Let's talk a little bit
Listen to
about
this.
the possibility of a government shutdown. It would seem odd to me, but there's a lot of things that are odd to me, that a new speaker would want one of the first things to happen on his watch to be a government shutdown. Is that likely to happen or not?
More likely than not, we will have a shutdown. And
More likely
the
than
last
not, we will
speaker
have a shutdown.
First
And
tried
what do
to
you
pass
think
a
comes with
highly
that?
partisan
More
bill and couldn't
downgrades.
pass it to just keep government
All that
going.
fun stuff.
And then the last thing that
there's your next leg to the downside.
that Kevin did was pass a bipartisan bill just to keep the government going to the 17th of November, and that's what cost him his speakership.
Cost him his job. So you expect that there will be?
It's 60%er. I'd like to think otherwise, and at the last minute we might at least be able to keep the government open into December or January. But
does it matter to your constituents?
Oh yeah.
How?
Well, it matters to people watching this show. The SEC stops all IPOs if there's a government shutdown. And not just the IPOs for the smaller companies, but an awful lot of the additional offerings of stocks and bonds by some of the major companies.
I think
that's got to matter to people who watch the show.
Congressman Sherman, always good to see you. Thank you for coming back.
Thank you.
Brad Sherman of California. All right, coming up, it is no secret that mortgage rates have skyrocketed in the past couple of years as the Fed has raised rates.
And our next guest says the housing market will be the biggest casualty of the Fed's higher for longer mantra. Moody's chief economist Mark Zandi joins us to make that case after the break. About 34 minutes until the Fed decision, and we're back in 2 of them.
YieldStreet.com.
Welcome back to our special Fed coverage. From what you pay for your car loan to the APR on your credit card, consumers have been hit hard by rising rates. But our next guest says the biggest casualty of the Fed's rate hike cycle so far has been the housing market. Just take a look. Everyone knows the rate on the 30-year mortgage is currently just under 7.9%, nearly 4 points higher than the rate we saw the week before the Fed's first post-pandemic hike back in March of 2022. Here for more is Moody's Analytics chief economist Mark Zandi, and on set with us is our very own Diana Olick here in Washington. And Diana, I'll just start out by saying, for a lot of people, the recent strength in the housing market had been encouraging. The home builder stocks are rallying. Now there seems to be some worry that's being snuffed out a little.
Yeah, and that was started at the beginning of this year because rates actually dropped back a little bit in the 6% range, and people came flooding back into the market for the spring. There was more inventory coming on, and home prices had also bottomed out in January, so people thought, okay, it's more reasonable. Then when we got that 8 handle on the 30-year fix, and you talk about the difference between a 3% and an 8% rate, you're talking $1,000 difference on the monthly payment of a $400,000 home.
Mark, it was striking, though, to hear Paul McCulley make the point last segment that it's almost as if homeowners are living in a giant rent-controlled apartment because most of them locked in super low mortgages for the life of that mortgage. The joke in my neighborhood is no one's ever moving, and so they have not directly been hit yet.
Yeah, no, absolutely. I mean, I think the average interest rate on existing mortgages is about 3.5%. So that's, obviously pretty low. A lot of homeowners were very aggressive in refinancing down their mortgages when interest rates were at rock bottom, and so they're sitting in a pretty good spot, right now. I do think, though, over time, people have to move, right? Life happens. You've got job change, you've got children, you've got divorce, you have death. And I think we have a lot of pent-up life out there. People aren't moving, even though increasingly the home they live in isn't exactly what they need. It's not consistent with their change in their living circumstances. So they'll have to move. And once they start to move at these mortgage rates, even if they come down a little bit, I do think we'll see some house price declines. And we've been fortunate so far. House prices, as Diana mentioned, have not fallen significantly nationwide, but I think that's ultimately going to happen.
Diana, under normal circumstances, you kind of think, one would kind of think, wouldn't one, that as interest rates rise, prices would stabilize or even fall to compensate for the higher payment.
Which is historically how it works.
Which is historically how it works. Why not this time?
Supply. Lack of supply. This is just a crazy, strange housing market, and I hate to get too, clinical on you for it, but in most markets you see that happen. But we not only were underbuilding well before the pandemic because of the Great Recession, builders still weren't up to their normal historical levels of production. Then the pandemic hits and everybody wants to move, everyone wants to buy, and you're buying with a 3% mortgage rate. So let's all get in on home ownership. And then
what up,
you
Chris?
have
nothing else to
supply.
do.
There was nothing else to do.
I don't know when you said it, bro.
I was stuck in my home. I might as well have a better home.
But I would also add, I'm curious for Mark, because he talks about people have to move, but we're seeing a lot of people now who are selling their homes and renting single-family homes. That single-family rental market is just taking off. Mark, do you think that that's going to be, a product of this? People who say, okay, I have to sell, but I don't want to buy at an 8% rate?
Yeah, that's a strategy, Diana, but I don't think that's for most people. I mean, that takes a lot of energy.
The builders think it is.
What's that?
The builders think it is. Build for rent is huge right now.
Oh, yeah, well, in the grand scheme of things, it's pretty small, right? I mean, in terms of the percent of the housing stock, it's still pretty small. But you're right. I mean, that's one of the amazing things. Builders, others in the industry, and homeowners are incredibly creative, and they'll try to figure out ways around actually having to drop price. But take the builders; they actually have dropped price, right? I mean, one of the ways they've kept their sales up.
Pause this, and we'll go back to it. We got a few minutes until Powell. Or until we get the statement, but here's your dip, right? Get that little bit of resistance there, and it breaks out above it. Whoa, wait, yeah. So this is the Qs. It looks a lot different than the S&P. The SPY looks a lot different than the Qs. Wow. So it just held yesterday's low. Also yesterday, yesterday's lows held Monday's lows. That's funny. All right. But yeah, so I'm just getting my levels ready. That's what I'm doing right now.
And that's where the builders are buying the rates down to. They're buying down to 5.5%. That's where buyers are getting in. So I think they need a little more than 6%, especially because home prices are still rising, up 2.6% year over year.
Yeah, the only thing I keep thinking about is Mark's comment that there's a lot of life pent up at this point. And then after a long enough period of time, that is certainly true. Guys, thank you so much. We appreciate it today. Our Diana Olick and Mark Zandi.
All right, still ahead. Today marks 595 days. I know you've been counting, right? Every single day since the Fed enacted the first of what would be 11 consecutive rate hikes since early 22. In that time, the S&P is down only about 1%. What will happen if they pause today? We'll look at that and some of the biggest movers of the day after the break.
Yeah, I feel, buddy. I am too. I'm just waiting myself. You know, I don't think it's going to be that crazy because we kind of know what to expect. But we got to see what he says. You know, if he says, hey, higher for longer, this and that. Okay, well, where's the 25 basis points? Why are you not giving us a raise? Like, how long do you want to wait? I don't know. They could pause and date, like... They could pause these 2 times. Steve Leisman brought up a good point. But then again, at the same token, you know, who's to say they don't pause for 2, 3, 4 months, and then we get a kick up in inflation again, and they're like, okay, well, we're going to go another like 0.5% to 1% because we think inflation's starting again, and they do it 25 basis points out of, or like, you know, they give us like a 50 or something. I don't know. So we'll just have to see. Well, we're going to have to see with, you know, things aren't good. So I don't know. We just got to see what he says, see what questions are being asked. Today's Wednesday, so we'll also get, I don't know when it comes out. I'll have to do some research on that and find out when it comes out, but we get this today or tomorrow. We'll see if the banks increase their needs for liquidity or not. Right? This thing's really just going up and up and up and up. That's telling you they're running low on deposits. Right? That's ultimately what this is telling you, because if they weren't running low on deposits, the banks wouldn't have to go to the Fed for more money. Right? And they're running low on deposits because people don't have extra income. Yeah, the labor market's really tight, but there's not money in the bank, and the banking system also has a lot to do with businesses, right? A lot of businesses go there. So who's to say that a lot of these venture capitalists, stuff like that, a lot of the money is left and went to money market accounts, savings accounts, right? They take out from their savings and say, you know what, you're not paying me 5-6%. And what I can get, it gets moved. So there's a lot of different factors here. I want to see how the market reacts. Like, I'm just waiting for a day when this thing just really
Bertha Coombs, the House of Representatives is scheduled to hold a vote today on whether to expel Congressman George Santos.
It's still going higher.
The Republican admitted to lying about his background and has been indicted on federal fraud charges.
You know, it can
Santos's New York colleagues backed the resolution, but they will need at least 2/3 of House lawmakers to support that effort.
But that's all. You know,
at least 320 foreign passport holders crossed from Gaza into Egypt during the first round of evacuations. Palestinian officials said the evacuees left Gaza today on 6 buses. About 500 foreigners and dual nationals have been cleared to leave the region, with more evacuations expected in the coming days. And drought at the Panama Canal is disrupting global trade.
Looks like a short here on KRE, guys,
enough water
on the daily.
To transport the ships through
it
the
is
canal.
Oversold,
Officials
but
have had to slash the number of ships allowed to pass. Shipping experts warn the problems could get worse. This could cause shipping costs to jump,
So it looks like
cut
you're getting
Panama's
resistance here
annual
off this previous
revenue,
pivot
and
low.
increase greenhouse
This
gas
could be a
emissions
trade
due
idea
to
that we could
longer
look at,
shipping
like,
routes.
going into the end
Tyler,
of the week or into
not to
next
mention
week.
the fact that we're already seeing the impact on produce here. Have you looked at blueberries lately? Like
So
$10
looks like
a
it's
pint in
rolling
some
over,
places?
right?
If you can even find them.
Yeah,
getting
no, it's
ready to
absolutely
roll
true.
itself over. Let it
Crazy.
bounce one more
All right,
time.
thanks, Bertha.
Get up to,
Yields
like,
a little bit
30
lower
and-
today, but the 10-year still hovering near multi-year highs, and that is sparking concern about the growing costs of
39.54-ish,
servicing the country's debt as the government continues to spend. Here's what Duquesne's Stan Druckenmiller told
that's
CNBC Squawk Box this
I feel,
morning.
man, we'll see if we change. I just don't know how volatile it's going to be.
We were
if it's-
spending 20%.
If it's going to be
the
that
federal
volatile,
government was
we'll see what
20% of
happens.
GDP in spending.
If the market goes
It's
higher,
now 25%
okay,
of GDP.
we're going to let it go higher, and then
as outlined in the Wall
because we're
Street
gonna
Journal
know that we
editorial this
have
morning,
the government
my
shut down.
father told
here
me,
in a
if you're
week,
in a hole,
2
stop
weeks.
digging, Stan.
Right? We still the
Well, that
stuff's
fight
not
over
done.
spending
we have
is what
earnings,
has America facing
we
the
have
threat of
Apple
a government
earnings,
shutdown
we
yet
have
again.
non-farm
And
payrolls.
joining us now to
we
discuss
have,
is Senator
we're
John
getting
Kennedy,
ready
Republican
to be
from
a week
Louisiana.
away
He serves
from,
on the committees
you know,
for
going into
appropriations,
next
budget,
week.
banking,
Next
and
week we'll be a
judiciary.
week
Welcome
away
back,
from a
Senator.
government
Good to have you.
shutdown.
Good to be here. I'm going to start, if I might, with
so
sort of the
there's
same
still a
question I
lot of
asked Representative
volatility to
Sherman
come
just a
down
few
the
moments
line.
ago. From where you sit, representing
This week
Louisiana,
I had
home of the new
it's
speaker,
been
by
really
the way.
good.
We'll get to
I
that
had
topic in just a moment.
me personally 100% trade on the Qs on Monday. I didn't trade yesterday, but Monday I gave out 2 trades. SoFi, I gave out SoFi short, and I didn't take it because I took the Qs instead. I noticed that the Qs were falling, and this was a good trade, man. It was a when I say some of these stocks after earnings give you beautiful setups, this is a prime example. It popped, and I said $7, guys, the low $7, $7 to $7.20, right? Look what we got. You had a break. Look at this setup, right? You have a little double top here. Not even worrying about pre-market, but we bounce. Right? Look at these tails getting put in. Then it fails to hold the initial morning high, right? It should pull back and then bounce again to go higher. Didn't do it. So like, all right, we came in the day short for SoFi. It's given us the short. Well, you have a bear flag here. It breaks below the initial morning low, right? It pulls back, bounces, breaks that level, and then what happens? Right there was the short that I gave out. I said it's testing the initial morning low, right? It's like a little double bottom, I guess, but it just tested this area. I'm like, guys, it's sitting right there at the low of the day, and now it's turning it into resistance. What else do you have? You have a beautiful bear flag right there, right? Beautiful bear flag. A break, on the 9 EMA, and I said our entry price is right there at the 9 EMA, right? Gave you plenty of opportunities. That was over 100% in down right down here. Just this move was 100%, and this is a 1 minute candle, bud. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes. You had 100%. But when this fell out of bed, so did the Qs, and I just took the Qs instead of SoFi. So it's been good, and I haven't made a trade since Monday morning, but I'm looking to do so. I am looking to do so. Today, I wanted to trade AMD short, and I said in the morning, I'm like, AMD is probably going to be a long. Pre-market right here. Right here is where I said I felt like it was going to hold that level and go higher. And I can't do it. I just can't do it. I can't do it. I don't know what Lisa Sue's doing, but I think she's making the wrong call here to go into fourth quarter. They didn't raise guidance. They kind of lowered it, which is good. But to say that they're going to have all this demand for that chip, and I said if we make this yesterday's high and that earnings call, we make that earnings call support that was resistance. We made it support, and there I was like, guys, this thing's going for a long. I can't do it. The trade I wanted was 95 or 100, 200-day moving average, and short down to like 94. Then look for the long. But it never happened. It just went and ran. I couldn't take it. I seen it running, It broke above the 200-day moving average and pulled back into it, but I personally couldn't take it. I just personally couldn't do it. You know, it broke above it. On look at all that volume. It held the 200-day, and I'm like, if you guys want to take long, do it. I just can't do it, you know. But the trading has been good. I haven't given anything back. I got a 100% trade on the Qs, and I haven't done anything since then. Tesla short, that was an idea that I missed. I was talking on the live stream today. Right here, I missed, you know, just a small trade right there. I missed that entry point to make the initial morning double bottom a resistance, right? Right here, boop, boop, right there's your double bottom. I guess you could call it a double bottom, right? Right there. It pulls back, hits it, and that's a failed break higher. And right there was the entry, and that would have been the trade. Small scalp to start the day, but I missed it. You know, I looked back after I got done talking. I'm like, oh man, it bounced. Because I talked about it here. As it was pulling back, I'm like, I would love to get a bounce back up to the initial morning lows and see if it will reject. Get up there, turn it into resistance, and get short. It's still a possibility. You could still get it here, but it just feels like it doesn't have much momentum. This Tesla trade's actually a pretty good setup. If you look here, look at this low here, right? We can pull up a 5-minute chart, whatever. And what did we do, right? We made Thursday and Friday, or Wednesday and Thursday lows. Wednesday, Thursday, broke it Friday. You came back up to test it this morning, made it resistance. You could probably wait and see if it gets up to like 206, but that area I would watch. If we reclaim it, then you might have some upside. We'll see though. We'll see. Maybe it's trying to work its way to the 200-day moving average. I'm not sure what Tesla wants to do right yet. I would give that thing just a little bit to figure out if it's going to give us like a continuation, right? It just seems to be like consolidating and not knowing what it wants to do the past few months. So that's that. Oh, Meta was the other one. Meta I gave out this morning right here. Look at remember when we did it with Tesla? You have the 50-day moving average and the 100-day moving average coming in, and this thing is getting stuck in between it, and it's got to make a move one way or the other. It made a really nice move out of it today. It didn't really do it how Tesla did it, but let's see what happens. I said this thing could break out and give us like a failed breakout and come back down to the downside. And maybe it actually gives us like some downside, like a trading range for like a week or two, like to the downside or the upside. Not the upside, but just like the downside, because I think you get a failed breakout attempt, or it's just going to continue to sit here. I feel like Meta's just been sitting here for 6 months now, and it's not, giving us directional movement, right? I mean, you had this breakout here, and then it was a failed breakout. It got taken back. Now you're back up into that area. You're trying to break out again to get back up above this resistance level, and it's just like it just can't. Right? The buyers aren't stepping up. So when do sellers step up? Right? When do sellers step up to see if we can get Meta back down to decent prices to get some dip buyers? Even if we can get Meta to just do something like pull back to this gap fill, like get down to like 250, 230, and that would give us a 2-week-long trade. So we'll see what happens, I'm waiting for like some of these stocks to actually start making trends. Because if you notice, Microsoft, Tesla, like Meta, right? Look at Meta, all right? Let's look at Microsoft. Microsoft just started to break out today. MSF, come on. All right, MSFT. If we notice, dude. Give me an hourly chart. You know what? Give me a daily chart. Fuck it. They're just consolidating. We're not going anywhere. You've broken out on Microsoft. Now that's another failed break attempt. So we're just sitting in a range, consolidating, right? Amazon, AMZN. What are we doing? Same thing. Since we've been at this price range since June, July. It's almost December now, right? So it's literally been 6 months. Wow, look at Amazon, actually. It is actually breaking out. It has been strong. Wow, I missed this one today. It consolidated yesterday, and today was the day 2 continuation. Wow, I missed that. Google's still sitting back at its earnings gap up. So I kind of just want to see if we can start to get some of these stocks to start moving, right? Tesla was consolidating, and now it's like, is it going to give us a continuation? It's got a nice setup on the daily chart to go to the down. Like, I want to get Tesla down to 180, right? That's the move I'm looking for. I would like to see it get down to like just like have a trend on the daily chart down to 180, but it's just not doing it. I don't know if it needs to test that 200-day or what, right? But you can see here, Tesla just, once it picks a direction, it goes. Then it consolidates, picks a direction, goes. Consolidates. Let me get this up so you can see it. But, you know, like here, you know, it come on, man. You know, direction, picks it, it goes, it consolidates, breaks down, picks that direction, it goes, consolidates, bang, right? Consolidates a little bit, goes, consolidates, goes, consolidated. It isn't doing anything now, right? It fell, and then now it just feels like it's stuck. But on this daily chart, look, we drop, big gap down, you get your bounce, right? Rejects, pulls back, tries to bounce, and then bounces lower. And then what are we doing? We're going up, and are we rejecting this area here at 205? That's what I'm looking for. Or does it want to try to reclaim this level and get back up and start stepping its way up to the 200-day and go down? I don't know. It's just some of these charts are ugly. Where we're at right now, everything is ugly. I don't really like some of the things that I'm seeing because there's no real clear like setups. Like Amazon's a good one. It had a very strong week last week, and I forgot to pay attention to it. So what I'm going to do is just continue to wait for these earnings, right? Roku. I know people don't like to trade some of those names, but I'm telling you guys, like on earnings, just specifically for earnings, the spreads won't be as wide as they usually are because there's going to be volume there. But they will give you really nice patterns. They'll give you really nice setups. I think we traded this, Chris, didn't we, last earnings? I think we both traded this, and I know you. I thought one of you guys caught the downside. It was you or Bingo. You guys caught this downside here, and then remember we got the pop and we shorted the pop here. There was news, and we were like, "Yep, got to be short." And I remember it was like here. It was like here somewhere where you got to bounce up and you took it short. I remember that. Yeah, it was like you were Bingo. We were talking about being short, and it was just like it just continued. Like, and I didn't expect this. I didn't see this coming. But what are you going to do? So I will look for, you know, and we can always watch AMD tomorrow, today. I'm going to watch PayPal, Roku. I'm just going to trade these. Well, more so like, look, like Palantir. That was the other one. Palantir, Shopify, DraftKings, right? Carvana. Fortinet's going to be a little Moderna can be nice, right? So Thursday and into Friday is going to be the day where like Palantir, Shopify, you know, Roku. I don't know about PayPal. I know it can give you a nice setup, but like SoFi, I was excited about SoFi because it was a cheap stock, and I know that it can give you a really nice clean setup. CRM is actually another name. When it gives earnings, pay attention to CRM like the day after earnings, and you'll start seeing that like the setups that it'll like the way it trades, it'll, you know, kind of give you like some easy setups where like I just showed you with SoFi. You have like a low, like an initial morning low or initial morning high, and it'll break it and it pulls back to test it, take that entry, and then it gives you the continuation, right? Stress free, easy setups. Like I keep those names in the back of my pocket because I've seen it over and over and over and over again. And I'm like, nothing's changed, so I'm not going to change. I'm going to stick to some of those names people don't like to look at, and look for them to give us the nice setups day after, 2 days after earnings. I'm going to watch the SPY. So the SPY, right? Look at this. Monday, we're in an uptrend. I don't care what, we can look at it however we want, but we're in an uptrend. It's been taking a little bit. Oh no. No. Undo, edit. So, if you noticed, Monday and Tuesday, right? Monday, you had this pullback and then a little bit of resistance chop here, and you bounced out. What happened Tuesday morning? You pulled back right into the belly, right? Bang. I said this morning, if we pull back into here, I'm a buyer. What do we do pre-market? You pulled right into it, and then you went lift off. Keep an eye on that. You pull back, you put in some resistance, and you break out. Look for that entry. I'm looking for this area to be an entry now. Now do I got to step it up? That's why I put the buy point there. Like now, what am I doing? Am I waiting for, like, is it going to give me this 417 area? It's what I want. Or yesterday's high. Like, I'm going to be looking in here. This is where I want to look to see if we get some buying. And this, you know what? Let me go back and look at FOMC minutes because I want to see if we have a day where we rallied. I forgot to do that, guys. I'm sorry. Let me go back through all the Fed meeting charts real quick, and let's see if we have a day where we rallied our ass off like this in the morning. I can't remember if we do. Because then we'll get an idea of how to trade this. Let me pull up the minutes and stuff like that. Give me 1 minute. But yeah, that Roku trade, I remember that. That was back in like August, like end of July, August. All right, something's going on. There's some news that came across, guys. ATGL, is that it? ATGL? No. Hold on.
disinflationary for the marketplace to continue doing the Fed's work. The Fed's in a good place.
And so the Fed chief is probably happy that bond yields are higher.
Yes, yes.
He's quite content with that.
He likes the fact the market's not fighting him anymore.
All right, folks, we're going to have you all stick around as we get ready now for the decision from the Fed. Widely thought that there will be no change. Widely thought that, well, the door might be left open. Let's go to Steve.
Unchanged. Federal Reserve leaving the interest rate unchanged at 5.25%, 5.5%. It's the second meeting in a row. The Fed has been on hold. First time it's done so since early 2022. The Fed, however, is still, quote, determining the extent of additional policy firming, suggesting that there is still a hiking bias.
I gotta find it, guys. Give me one
among
second.
the committee
I don't know
members.
why
the
I
committee
always
saying
have
it remains
trouble with
highly
this. I don't
attentive
know
to the
why I
inflation
do.
risk language precisely from the prior
doing this shit for years, and I
statement,
still...
as well as saying that inflation remains elevated. The economy was upgraded just a bit, saying it's now it grew at a strong pace in the third quarter compared to a solid pace in the previous statement. Job gains were also upgraded just a bit, saying they moderated instead of slowed in the prior statement. The statement also now mentions tighter financial and credit conditions, adding the word financial likely will weigh on the economy. That perhaps is a mention for the rise in the 10-year yield and other yields that have affected the economy. The decision was unanimous, and now we have a question. By the way, very, very similar statement, only a few words tweaked. Does the upgrade to the economy now perhaps put additional rate hikes on the table, or is the idea that this statement is so similar to the other one that led the Fed to pause? Does it lead you again to think, well, you know what? They're teeing up another pause here. I guess we may have to wait for the press conference to find out.
Fascinating.
Yeah.
Well, there's some of the market reaction. Steve, stick around as we bring our panel
Guys,
back
sorry,
in.
my
and
stuff
Bob
froze.
Pisani
My
and Rick
stuff froze
Santelli
up on
also
me.
join us. Rick, I'll start with you as it looks like we're seeing yields move lower.
Yes, we're moving lower, whether it's 2-year, whether it's 10-year. From 3-year all the way out to 30, we have double-digit drops in yield. But the real key is, why are yields dropping? Now, as we look towards today, obviously at 8:30 Eastern, we had a whopping $2 trillion less in the refunding package of 3s, 10s, and 30s, and I truly doubt whether that $2 billion less is going to make that much difference. But there was a psychological issue there, and I do think that we have brought in many buyers over the last couple of days with respect to treasuries. They had a failure to launch in 10-year with a close above 5%. And now it's a neon sign. Many are moving towards the long end and looking at what they consider juicy yields. But I think that the Fed has a real problem here. I continue to go back to the notion that we spent $5 trillion during and post-COVID. That money isn't all spent, and it's going to continue to potentially give us a sugar buzz, which makes the Fed's job that much more complicated, because we all know sugar buzz growth doesn't lead necessarily to organic growth, which is sustainable. And I'll leave with one final thought, that we now have $307 trillion of global debt. Okay, that's per the Institute of International Finance. CNBC did a great write-up about that. That's as of mid-2023. To me, that's an issue. We can have global slowing. Put the U.S. aside. Just look at Germany. Just look at all the global metrics. We are definitely slowing. And with regard to inflation, hey, let's say that it's peaked. But one area that's going to remain sticky is going to be electricity and energy, whether you're in Europe, whether you're in Germany, or whether in the U.S. That transition is always out there. So we're going to have some inflation, lots of energy inflation. We're not going to have disinflation, as Tyler always brings up, bringing us prices back to where they were, and $307 trillion of global debt. To me, it's going to be an issue that continues to keep interest rates mostly higher, even though right now it seems to me that if we close under 4 3/4 and 10s anytime this week, I think we can go down another 30 or 40 basis points. But in the grand scheme of things, I'm still looking for much higher rates.
All right, let's go to Bob Pisani and see how equities are reacting to this decision by the Fed. Bob.
modest move up in the S&P, 4 or 5 points here. Not much of a change in the statement. It says job gains have moderated. It said job gains have slowed in the prior meeting comments. I see here Fed's still determining the extent of additional policy firming. So a modest hawkish bias. I think the problem for the market now is it's basically positioned in a dovish way. It's assuming that rate hikes are essentially done and the Fed's going to start cutting in the middle of next year. So the pain trade that would cause the most difficulty for the most participants is that all of that is wrong, that we are not going to get close enough to the Fed's 2% target goal for them to be enabled to essentially stop raising rates and to start cutting in the middle of next year. And that's sort of the problem the market's got right now. It's potentially wrong here. We did have some good news today on the ISM manufacturing, supportive of generally somewhat weaker economy. So you've got to have that, the ability to show that the economy is slowing down here. So I think Powell's probably going to continue to reiterate the economy is resilient. Pricing pressure is still very prevalent, and they're prepared to raise if the evidence does not indicate they are getting closer to their 2% target. That's the risk right now, and I can't help but think he's got to maintain that position.
Yeah,
that a rate hike is still very much
probably
on
is,
the table,
but
guys.
I think it's
Jim. You have been the one who probably among this group feels
I don't
that
blame
the
you
Fed
there,
may
right?
be more
Just,
aggressive.
You know,
Is there any? Do you agree with what Bob just said? That
right? Whether it's
another rate
earnings,
hike
whether
is
it's
very
FOMC,
much on the table?
and just find
makes it
do what you live your life, do what you don't have to sit here and look at the charts and stuff like that. But
look, I mean, the risk in the market
I think
is that the Fed
I
continues
think
to hike interest
it's
rates.
just like all the time. It's unless something changes, which it hasn't. Wait for Powell. I'm telling you right now, there's a lot going on, and I still think Powell's going to say, guys, you guys aren't understanding that. I'm letting you know now that if inflation continues to rise over this Christmas time, January, February, March, like I will continue to raise rates. I'm going to keep them here. Inflation is not rising, so I'm not rising, right? If something happens in the future, we start seeing data come in hotter than usual, then I will continue to raise rates. That's what he's going to say. You know, I don't know how if he says something about wars and like the monetary, like their balance sheet. So unless he says something, I think the volatility is going to be when he talks, though. And the amount of volatility, I don't know how much volatility you're going to get. So I agree with you, Chris. I would just relax, you know, and wait for earnings setups, or wait, you know, if you want to see if he says something or they ask him something to send this markets down. Government shutdown, right? That's still a possibility.
In 12 months. Let's bring Steve Leisman back in as he's been combing through the statement.
What I mean is them asking a question like that. What does he do in case of a government shutdown? This and that. They're not going to be able to get the data if there's a government shutdown. The government's not open to give their, you know, to do the work that they need to do to get the data.
I think that the story
stuff like
here
that.
is
So we'll just see what happens. I think the real volatility is when Powell speaks.
It wasn't a prospective
But
comment.
again, it
And
may
so to
not
the extent
be
that Bob Pisani just talked
much
about
of anything
good
today. We'll
news,
see.
and I don't
We'll
like
see what
using
happens.
that phrase when it comes to weaker economic
If I
data,
see
but
you,
it was
if
good
you're out of
news
here,
for
buddy,
those
I
who are
will see
concerned
you,
about
Chris.
the
I
Fed,
appreciate you
in
stopping
the
by, man.
ISM
It's always good to
manufacturing,
talk to
also
you.
a step down in the ADP numbers, then that tends to rule out an additional rate hike. So I think we are indeed data dependent here when it comes to what the Fed is going to do next. And if that forecast for a weakening economy is the right one, which is the one again on the street, then I think we may have a third month of holding here.
So, David, let me ask you: is there anything in here? And you heard what Steve just said. Is there anything in
For
here
some
that
reason, I
changes your
can't
view that
find
the
it.
Fed is done?
It's being a pain
No,
in the
actually, I
ass.
think it confirms my view. I think the two things. One, they didn't have to say that job gains were moderating because, frankly, we added 336,000 payroll jobs in the last print. That's not moderate at all. And so the fact that they said moderating suggests a little dovishness, but much more important, this slight nod to the fact that financial conditions have tightened with those higher interest rates. It's kind of like that's the last additional rate hike they might have done, or it's in the place of that. So to me, it says we acknowledge that, looking backwards, the economy's been strong, labor market's been strong, but we acknowledge that there's even more pressure in the economy coming from these higher rates. They're not willing to claim any progress in inflation yet. I think they'll see some more progress in the months ahead. But overall, this makes me feel more likely I think it's more likely the Fed is in fact done and they won't have an excuse to tighten further.
Kristen, is this the hawkish pause you were expecting, or is it a more dovish one?
I think the way the market is reacting right now is a little more dovish, but we will see when we get to the press conference. I think ultimately, though, when we're talking about this question of whether there's going to be one more 25 basis point hike, Chair Powell always said it was a question of how fast, how high, and for how long. And I think the key question is really the how long question. And so what we're going to look to in terms of the press conference is really to any type of signals around how they're viewing inflation. Because when you look at how inflation is breaking down, yes, you may have, it's tough to see that path to 2%. I think you can see a path to 2.5%. But really, when you look at the underlying components, everyone's focused on services.
So what I'm going to do is, just like I've done, I'll go over it on the watch list tonight because I'm feeling better. I should be able to get a watch list out tonight.
So you're around 2.8%. All of the other components are actually 2% or below, and you have that owner's equivalent rents with a lag. So there is an argument that the composition of inflation is getting you to a trajectory where you can see a path.
You know, we're probably going to go in that direction.
Not quite at the Fed's target.
I just don't like how we made
that we
this.
want to hear more commentary about.
I don't like
Paul
that.
McCulley, bring us across the finish line.
I agree with a lot of what's been said here, that the Fed did make an acknowledgement that financial conditions have tightened, so that's what we've all been talking about.
Bright.
They also acknowledge that the economy has been stronger than expected. So you put those two things together, and effectively it says they're on hold. They also still have the bias to another hike. But I'm with David Kelly. They're not going to do it. But the bias itself serves a purpose because it keeps us talking about
vigilant.
It keeps us from wanting to have a big rally in risk assets. So I think just the bias
Yeah, I think
itself
that's the,
is useful. And it reminds me of 60 years ago when my dad would say, "Don't make me pull over this car."
I think that's, you know, we got to see his reaction and what he says and the questions
and do another hike.
They did cite that. So last statement they had cited tighter credit conditions. This time they cited tighter credit and financial conditions. What does that tell you? The inclusion of that language.
It says that
for some reason, I don't know why I can't find it unless
of tighter monetary
they
policy.
didn't.
Remember, they just control the rate.
I mean, I
and
found
then
the
it's
statement.
transmitted
I
to
think
financial conditions, whether it's in the banking
I found
system
the statement, the
or in
press
the financial
release,
markets. So they're
November 1st,
getting
released at 2
better
p.m.
transmission.
But I thought it was
and I think
different than
that's
this.
hugely important. If you can get the same degree of tightness in the marketplace and the banking system with an unchanged Fed funds rate, then hallelujah, you're getting what you want, which is tighter financial conditions, and the bias keeps the market from wanting to front run the Fed on the dovish side.
Steve, maybe this betrays my naivete on this, but is there any surprise in the fact that there is nowhere in this statement are geopolitics or world conditions or the Israel-Hamas war mentioned whatsoever? Would have been way out there to have included a reference
So this
to
year
it?
will continue reducing its holdings.
It's not a surprise in that all of my reporting, and
That
I think
is
probably
the
the
balance
guests that
sheet,
you've been interviewing
which
as
is
well,
liquidity.
Tyler, at the moment have a hard time drawing a line from the
That could also
tragedies
cause
and the
rates to go higher if we don't have
hostilities
enough
taking
bond
place in the Middle
buyers.
East to the U.S.
That in and of
economy
itself.
right now. Ukraine has been going on for a long
Because there's
time.
got to
That
be a
level of
point where the
violence
person
remains
that's buying
what
it
it's been. What's happening
has
in
to get
Israel
paid
and
for that
Gaza is
risk.
new,
And what do they
but
want to
it
get paid?
hasn't
It's
had a
ultimately
market
up to
effect
them.
on oil prices. So
right?
to be
That in and of
completely
itself
clinical
could send
about
rates
awful
higher.
human dramas, there is not a line. I did want to mention, Tyler, what's been happening in the Fed funds futures market, which is pretty interesting. A very slight bid, now a 33,
Well, and the thing is,
34%
too, that they're going
probability
to
now of
just
that
let it
rate hike
roll
in
off.
March. So what they did is they took their
They
anxiety
didn't
about
say
January,
sell.
possibly like,
Reducing
and
its holdings of
maintaining-
Treasury securities.
This could be just a hedge,
As
but it
described
is
in its
something of a bid out
previously
there.
announced
But more
plans.
interesting what's happened
I
here
have to.
is that
I mean,
they
they,
took what
man,
was
I
sort of
must.
a 50%
I need
probability
to.
of a
I need
cut in
to.
June, and now they kind of skipped June, they skipped July.
I should have
and
seen
now
that.
it's
Nobody's
September.
talking about the balance sheet like they should be, because I'm pretty sure they haven't made the decision to start selling. I mean, correct me if I'm wrong, if you guys know this or not. They haven't made the decision to start selling, I don't think. They're just letting it run off.
You'd add?
No, I agree with much of what's said, but I think as I look at the markets, here's what I see. I see virtually unchanged on a 10-year.
I'm going to grab a
maybe
burger real
basis
quick.
point
I'll be
lower
right
on
back.
twos. which means that the Treasury complex pretty much ignored or didn't see anything new to worry about.
Oh, that's so funny.
Equity
Wait till you see
markets
what he
are
says
darn
here in just a
close within
second.
10
That's
points,
hilarious.
Dow
Oh my
Jones.
God.
So what I see is that there are many, and I know this was discussed earlier, there's many who the tightening Fed doesn't affect. There's a lot of boomers out there that don't need credit. They don't have a mortgage. They're most likely not going to look for a mortgage. So we can't even get at that crowd. And I think that all the rest that are affected are going to continue to be consumers that don't necessarily participate. I do think that retail sales is going to start to slow down a bit. And I think some of the metrics for GDP were distorted by inflation. I think the Fed has done a pretty good job as of late. And I also do agree they're done. And I guess I'm a glutton for punishment, Steve, because I'll bet you another tranche of cheeseburgers that they don't have another hike in the cycle.
David Kelly, why don't you wrap it up for us here? Are you now persuaded that, well, they are done, you've said that before, but that higher for longer is the regime?
Yeah, I mean, if they follow their normal playbook, they're going to wait too long to cut rates. But that's how it works. So I think, you know, we at some stage next year we might see some economic weakness. We may trip into recession. The economy is going to be growing slowly anyway. But my guess is that when they cut, people are going to say, "You waited too long to cut."
Yeah, I remember you saying this 2 years ago, David. You said what happens here is they wait too long to start, they go too far and keep it there, and they stay too long before they pull away the regime. David Kelly.
Out of sync.
Yeah, David Kelly, Chris and Bitterly.
Market seems a little bit
Karen,
weak.
Thank you very much. And we are minutes away, and Stephen and Rick as well. Minutes away from comments from Fed Chair Jay Powell. We'll get some more analysis after a quick break.
$85.55.
Welcome back. The Fed leaving interest rate unchanged for the second straight time, saying inflation remains elevated and they've got their eyes on it. Let's get some reaction from Dennis Lockhart, former president of the Atlanta Fed. Paul McCulley, former PIMCO chief economist, still with us to participate in our conversation. Mr. Lockhart, welcome. Good to have you with us. What do you think?
Well, I've been listening to the commentary up until this moment in this half hour, and I think people have it mostly right. David Kelly thinks they're done. I would put this nuanced spin on it. They're done if conditions allow them to be done, conditions that we really cannot predict very well for the coming months. But if their current outlook holds, there's a good chance they are done. But they're not done because they've made a decision to be done. I think Powell and company will keep their options open. And in the coming press conference, I doubt you'll see much of a signal about what they'll do in December.
We've had, Paul, this setup before where market is almost unchanged after the statement. Then the press conference begins. He says something relatively hawkish, and off we go, for that day or sometimes for the next several weeks. Now, last time was a little bit of a break from that pattern, but point being, what should we be on the lookout for in terms of his remarks when he starts in about 10 minutes?
I think a lot of the questioning is going to be on this whole issue of how close are you to sufficiently restrictive, because that's magic language in Fed speak, that they want to get to sufficiently restrictive, and then they want to hold there. So it's really a two-pronged sort of issue, is are you sufficiently restrictive? And I think he will fudge on that one. And then the issue is, how long do you plan to stay there? And I think, as Dennis was saying, is we're going to stay there until we get evidence that we don't need to be here anymore. So I think that, essentially he's going to try to encourage the marketplace to hold the back end of the curve up in anticipation that long is long.
Mr. Lockhart, why has the economy remained so resilient in the face of what have been very aggressive and steep interest rate hikes? Why hasn't it seemed to slow it down, even though there are signs now that maybe it is in fact slowing?
Well, I think the basic dynamic is one of consumer spending being held up by good employment outlook on the part of households. As long as people feel they're going to be employed and they have some income security, the American consumer will consume. And I think when the outlook changes and there's a little bit more to worry about in terms of employment, maybe we'll see a slowdown in
It's
spending.
like these
But
charts
it's being driven
just aren't
by spending, and the
It's
American
not
household
great.
has both
Right?
perhaps
It's not
the
great. Like this was
balance
nice,
sheet, the
right? Get
savings
this
to
bounce,
continue
support,
spending
resistance, support,
still,
resistance. Get a
as
rally.
well as
We
a
hold.
positive outlook in
Right?
terms of,
We hold.
of
It
income.
breaks. Come back up. Make this area
so
resistance.
just to stay on this point, Dennis,
This
for a moment,
breaks.
then,
Bang. Retest
do you
it.
think
Bang.
that they can convince the
Now it's
markets to
like-
stay up here at sufficiently restrictive
What?
for a pretty long period of time,
What?
or does it still depend on things like the
Here we
jobs
go. We
report
going to
Friday morning and how
355?
that evolves?
I need my bounce
You know,
back,
in my-
guys.
my
That's all. I just need to
experience,
pull back,
it's very
and I'm going to
hard
get
for the
long.
committee
I'll
to
get like Friday
shape
contracts to
market
like
outcomes. I think the
like,
committee is
let
more
me see here. Let's go.
of a mind to simply set policy where
Let's
at
go
the-
to a
at the
3-minute
policy
chart here.
stance they
If I
think
can
is
just get a
correct,
pullback
and
into
hope
like
the markets are aligned and hope the markets will help. But the idea
pulled
that
back
they can
into
say
this pre-market,
something in a
believe it or
press
not. No, we did not on the
conference or in a
Qs.
speech or in a statement that actually produces an outcome
This might be
in
the
terms of bond pricing
might
in the
start the
markets,
rally,
I just don't
guys.
think they have confidence they can reliably do that on an ongoing basis.
Paul, if you could ask President Lockhart one question, and now's your chance. I might even give you a second question if it's a good question. What would you ask him? You can talk right to him. Talk right to him. There he is.
I would follow up on the comment that he just made.
I don't know why
when,
that sounded like South
the committee
Park.
itself
Something like
can't
Cartman or
manage
something
forward
Or
expectations
just
on
something
Wall
South
Street
Park would
very
say.
well.
Go
I
ahead.
would certainly
Go
agree
ahead.
with that.
Go
but
ahead.
my question
It's
is,
right there.
can
Say
the
it. Say it.
chairman
Go ahead.
do
Say
that?
it.
Can the chairman do that?
I think the chairman can certainly have a big influence. The chairman speaks for the committee. When the chairman speaks, it's entirely different than, for example, when the presidents speak. But at the same time, we live in a world in which markets are influenced by all kinds of things that may not be anticipated in what the chairman has to say. So I think there is a limit to how much confidence the chairman and the committee have.
All right, I need a pullback,
in
guys.
trying to
I need a
actually
pullback to like the low
produce a market
350s.
response or market outcome.
How soon, Dennis, do you think it will be before we get to that 2% inflation threshold that the Fed keeps talking about?
Well, I've noticed in at least the September SEPs that the committee appears to be pretty patient and that it's in in the out year that they get close to the 2% target. So I don't think it's anytime soon, and I am prepared to believe that the last mile, as it's called, is in fact
Yeah,
going to be
350.
difficult.
About
One of
350.
the earlier commentators
About
spoke about
350.
getting to
That's what we need.
2.5%, but getting
I'm
from
gonna look
2.5
for.
to reliably around
And this
2%
volume is
could be a really long pull.
pretty garbage.
You know, so
right?
far, I think the
Look at the
committee's
volume.
prepared to
It's decreasing as we're going
be
higher,
patient,
which isn't
and
surprising.
not over tighten
And
in
look,
order
look,
to get
look
there
at the
sooner.
selling. It increased as you went down.
All right.
Right?
Dennis Lockhart,
Look
thank you
at
very
it.
much.
It
We
increased. It's
appreciate
so
your
funny.
time. As always, it's great to see you. Paul, you're going to stick around. You behaved yourself very
Again,
nicely.
that's
You
just
get to
the,
stick around till
morning
the
candle.
chairman
It's-
comes on.
I'm
We're just a
kidding.
couple
It's
minutes
not
away
like
from
it
that event. Chair Jay
was
Powell's
something
press
that you
conference
should pay
begins half
attention
past
to.
the hour.
Like,
We'll
man,
take
the
you there as
selling
soon
got
as it
bigger and
begins.
bigger on the
More
way
of our
down. We're
special on the
going
Fed
lower.
decision after a break.
So, yeah, let's go back to regular charts here. I need to set this back to default because I don't know if it's my monitor or what. I'd like to fit more time on this. I wonder if I change the candles. It might help if I change the candles. The candle structure. Support. So we are sitting. So look, we're making this area now. There we go. So now we can see it. Look what I have here. What do we have here, huh? What do we have hiding there, huh? Look, what do we have hiding here? Nothing. Let me make sure we don't have anything else hiding. I'll take it right back, guys. Sorry, I just want to make sure we don't have anything else hiding. So yeah, we're making this area resistance. Where'd it go? So yeah, it looks like these pivot lows are starting to become resistance, right? This is a boom, boom, we break it, pull it back. Let's see if we make it resistance. Let's see if we turn that area into resistance now. I was thinking more so up here. I was thinking the gap fill, guys. Right? I was thinking the gap fill was like 355 was the area. And look at this gap fill here, right? At 358. And where does this double top at? Right here. 357.50. Pivot highs, 357.58. So there's a gap here, gap here. So this is your line in the sand. You have a gap there.
Welcome back as we await Fed Chair Powell. Let's get some final thoughts from Paul McCulley before we let you go. I just want to mention that we haven't really talked about QT
so it looks
yet,
like
and not that that's a big part of the statement or anything, but he might get some questions about it in the press conference.
Let's see.
And
I will
the extent to
end
which them
up
shrinking the
taking a
balance sheet is
short. If we get
contributing
up
to higher
here,
interest rates.
we'll see. Let's go to
Pretty sure he's going to
Thinkorswim,
get some questions about that
and
at
then
the
we'll
press conference. And
come up with our game plan.
so.
We have a few minutes.
QT's
Oh, we have 1
running
minute.
in the background.
Let's,
They've
I'm
said
going to
that
turn
many,
Powell
many
on, guys.
times. But essentially, QT leads the Treasury to have to issue more duration to the marketplace. And everyone's been
they're saying Powell's starting, but yeah, this is not cool. This is behind, bruh. I don't like that. Dude, no.
Good
It's
afternoon,
behind,
everyone.
guys.
Welcome.
They've got it
My
behind.
colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people.
What's up, Bake?
We
Basic?
understand the hardship that high inflation is causing.
How you doing,
and
buddy?
we remain strongly committed
It's
to
good to
bringing
see you, bro.
inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone.
Good
In
deal.
particular,
I've seen small
without price
caps are starting to
stability,
pop
we will
off.
not achieve a sustained period of
I'm gonna
strong
try and find
labor
Powell
market
real
conditions
quick.
that
Something
benefit
that's
all.
actually live and
Since
not
early
behind.
last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restricted. Tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks we face, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier expectations. In the third quarter, real GDP is estimated to have risen an outsized
There you go. I
annual
know what
rate
that's
of
like, bro.
4.9%.
And I don't blame you.
Boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting. But supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.8%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years, and immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs-to-workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September. Excluding the volatile food and energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable.
Guys, if you guys want that, I can give it to you, but it is way too behind. It's so behind, it's not even funny.
It's a big world to explore, from our first foods to our first steps. So what we eat should be the best. Stunnyfield Yo Baby, made perfect for tiny tummies.
In energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor, evidence of growth persistently above potential, or that tightness in the labor market is.
Can you guys hear him? Just want to make sure it's not too loud or not.
At risk and could warrant further tightening of monetary policy.
Basic Black, you know what I'm talking about, because
Financial
it's like,
conditions have tightened significantly.
if it's too loud, you're gonna be like, "Yo, bro, you need to turn that thing down, boy."
Bond yields, among other factors.
Just don't know if it's too loud, if
Because
it's good.
persistent changes in financial conditions can have implications for the path of monetary policy. We monitor financial developments closely. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting.
I'd like to do a podcast too with some of you guys, Chris, Basic Black Trading. If you guys want to do a podcast or even like a Skype and talk markets and stuff, we'll have to set something up like that.
Policy firming that may be appropriate to return inflation to 2% over time.
All right, thanks,
the committee
man.
will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below potential growth.
Yeah, we'll
and
talk
some
about
softening
that.
of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run.
He's already answering questions.
To conclude,
Just so you,
we
if
understand
anybody's
that our
out there and this
actions
is all they have, I'm
affect
letting you guys know
families,
this is
and
behind.
businesses across the
I
country.
can't really find anything
Everything we do
that
is in service
isn't
to our
behind.
public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard Schneider with Reuters. Action by the Fed at this meeting.
Confident yet that we have achieved such a stance. So that is the broader context into which the strong economy and all the things I said, that's the context in which we're looking at this question of rates. So obviously we're monitoring, we're attentive to the increase in longer term yields, and which have contributed to a tightening of broader financial conditions since the summer.
Oh, this is on point.
As I mentioned,
Thank you,
persistent
Bloomberg.
changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like
Yeah,
the stronger
we'll talk
dollar
about it, guys,
and lower
after
equity
this.
prices could matter for future rate decisions.
We'll set it
as long
up.
as two conditions are satisfied. The first is that the tighter conditions would need to be persistent, and that is something that remains to be seen. But that's critical. If things are fluctuating back and forth, that's not what we're looking for. With financial conditions, we're looking for persistent changes that are material. The second thing is that the longer-term rates that have moved up, they can't simply be a reflection of expected policy moves from us. That we would then, that if we didn't follow through on them, then the rates would come back down. So, and I would say on that, it does not appear that an expectation of higher near-term policy rates is causing the increase in longer-term rates. So in the meantime, though, perhaps the most important thing is that these higher Treasury yields are showing through to higher borrowing costs for households and businesses, and those higher costs are going to weigh on economic activity to the extent this tightening persists. And, the mind's eye goes to the 8%, near 8% mortgage rate, which could have, pretty significant effect on housing. So that's how I would answer your question.
Just as a quick follow-on to be
See,
clear
he's
on
answered
this,
a question
in your
now. Look at the
opening statement
markets.
Just now, you seem to imply that you are
Like, my
not yet
TV is ahead of this, but I still
that
think the
financial
meeting
conditions
is
are restrictive enough
even
to
more
finish
so
the fight.
ahead.
Is that true?
I got like 4 pals going on.
Yes, that's exactly right.
But my TV is the closest.
To say it a different way, we haven't made any decisions about future meetings. We have not made a determination, and I will say that we're not confident at this time that we've reached such a stance. We're not confident that we haven't. We're not confident that we have. And that is the way we're going to be going into these future meetings, is to be, just determining the extent of any additional further policy tightening that may be appropriate to return inflation to 2% over time.
Gina.
Hi, Chair Powell. Thank you so much for taking our questions. I wonder, if you don't raise interest rates in December, would the presumption be that at that point that we should expect that rates are at their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
That's a nice increase in volume to the sell side, guys.
Let me start by saying we haven't made a decision about September. You're asking a hypothetical there, but we're going into the December meeting. We'll get.
It came suddenly.
Of course.
A financial storm no one knew was coming. That's why the wise investor turns to one of the most secure investments on Wall Street, or any street. Assured Guaranty, the proven leader in municipal bond insurance.
They would do that.
I would say, though, that the idea that if you the idea that you would be difficult to raise again after stopping for a meeting or two is just not right. I mean, the committee will always do what it thinks is appropriate at the time. And again, we haven't made any decisions at all about December. We didn't talk about making a decision in December today. Really, it was a decision for this meeting.
Notice how we did not break out of the recent
things.
high. Let's see if we break the low of the day. This is why I do this box. That's why I do the box. If we break it, we pull back
Chair
to
Powell,
it.
did the Fed staff put a recession
I'll explain
back
it
into
as
the
I trade
baseline
it.
forecast in the materials for today's meeting? And how much does this tightening in financial conditions substitute for rate hikes if the tightening is persistent? You had said it was worth maybe a quarter point when we had the bank failures in the spring. What is it here on something that's presumably more straightforward and more familiar to simulate?
So I guess I don't want to answer your question about the recession, but the answer is no. I think I have to answer it since we did publicly say in the minutes. You'll know anyway in the minutes. The staff did not put a recession back in. I mean, it would be hard to see how you would do that if you look at the activity we've seen recently, which is not really indicative of a recession in the near term. In terms of how to think about translation into rate hikes, I think it's just too early to be doing that. And the main reason is we just don't know how persistent this will be. You can see how volatile it is. Different kinds of news will affect the level of rates. And I think any kind of an estimate that was, precise would hang out there and have a great chance of looking wrong very quickly. So I think what we can say is that financial conditions have clearly tightened, and you can see that in the rates that consumers and households and businesses are paying now. And over time, that will have an effect. We just don't know how persistent it's going to be, and it's tough to try to translate that in a way that I'd be comfortable communicating into how many rate hikes that is.
Yeah, we had that level there, too, marked out right here. It's funny.
What makes you confident that tighter financial conditions will slow above trend growth when 500 basis points of rate hikes, QT, and a minor banking crisis have not thus far?
Well, that's the way our policy works is, and sometimes it works with lags, of course, which can be long and variable. But ultimately, if you raise raise interest rates, you do see those effects, and you see those effects in the economy now. You see what's happening in the housing market. You're seeing that now. You'll see, if you look at surveys of people, it's not a good time, they think, to buy durable goods of various kinds because rates are so high now. I mentioned again, we're getting reports from housing that the effects of this could be quite significant. But you're right. This has been a resilient economy, and it's, I think, been surprising in its resilience. And there are a number of possible reasons why that may be. Our job is to achieve maximum employment and price stability, and so we take the economy as it comes. It has been resilient, so we take it as it is.
We haven't given it enough time. Okay, let's just be clear. Enough time hasn't.
Thank you.
passed.
Colby Smith with the Financial Times. In terms of the thresholds that you've laid out of what could warrant further tightening, the additional evidence of persistently above trend growth or some kind of reversal in the recent
There's that
easing
VWAP
of labor
test
market
that you
tightness,
said. Yep.
that seems to suggest something more powerful than just one more quarter point rate hike would be necessary. And I'm just curious if that's how the committee sees it.
So we've identified those factors. Those were not meant to be the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture.
Let's see what happens
and,
right here.
What's happening with our progress
tries to
toward
break
the
back out if we
2%
just stay
inflation
flat or
goal.
not here.
Is the labor market continuing to broadly cool off and achieve a better balance? We'll be looking at that. Growth, we look at growth insofar as it has implications for our 2 mandate goals. We look at that. And we look at broader financial conditions. So we'll be looking at all of those things as we reach a judgment.
Yeah, it has. Yep.
Whether we need to further tighten policy. And if we do reach that judgment, then we will further tighten policy.
And
I'll have
just
to
in
see
terms
where I
of the
got this
tightening
level
of financial
from, but we got
conditions,
that level.
if that is having some kind of offsetting effect in terms of the need to potentially, again, raise rates, what then is the potential impact on the trajectory of rate cuts? Could we see those maybe pulled forward or have to see more than what the September SEP indicated?
So the fact is, the committee is not thinking about rate cuts right now at all. We're not talking about rate cuts. We're still very focused on the first question, which is, have we achieved a stance of monetary policy that's sufficiently restrictive to bring inflation down to 2% over time, sustainably? That is the question.
Look at the 2
we're
tails
focusing
there,
on.
guys.
The
That's
next
another
question,
rejection
as you know,
of
will be
422.
for how
That's
long
the second
will
time we
remain
rejected.
restrictive.
If we
Will
get back
policy
up
remain
there,
restrictive?
I'll probably
And what we
take this
said
short
there
because
is
I'm
that
only going to,
we'll keep policy
my stop
restrictive
loss will
until
be
we're
pretty
confident
tight.
that
I
inflation
don't know if it'll give
is
us
on
that
a
chance,
sustainable path down to 2%. That'll be the next question. But honestly, right
Depending
now,
on what
we're
he
really
says.
tightly focused on the first question. The question of rates cuts just doesn't come up because I think the first, it's so important to get that
I
first
just think
question.
Then again, if we
as-
get
as
that
close to
pullback,
right as you
I
can.
want to bounce back because I want to get short again. I think buyers are still waiting for this area down here, 417.
Steve Leisman,
416,
CNBC.
15.
Mr. Chairman,
Or
I guess I had
416,
assumed that there
50.
was a tightening bias in the committee. You say in the statement you're looking to assess the appropriate stance of monetary policy, the extent to which you may need to hike additionally. You didn't say earlier that you were sufficiently restrictive. There were forecasts for 2 rate hikes among most members of the committee. But then you just said that, we haven't made a determination. Would you say the bias right now is neutral, that there is no disposition to hike again, and that the committee largely has moved off of this forecast for 2 hikes?
No,
additional hike.
Steve,
He's
we're
talking about
just
one
saying if
additional.
inflation
I
comes
wouldn't say
up
that at
higher
all. I
down
would
the
say, I
road,
mean,
then
the
we'll
language,
raise. We'll have to raise then.
Looking at it here, in determining the extent of additional policy firming that may be appropriate to return inflation 2% over time, that's the question we're asking.
So is it right to think of that as a hiking bias is still in the committee here?
We haven't used that term, but it's fair to say that's the question we're asking: is should we hike more? It's not, and that is the question. And you're right that in September we wrote down 1 additional rate hike.
I mean, there's a lot of money that they've spent. There's still money to come in
December.
2028, 2025, or 2028 and 2030.
Thank you, Chris Rugaber
Right?
at
Still
Associated
a ton
Press.
of money the government's going to have.
Well, since the last meeting, the auto workers' strike has finished. Oil prices have leveled off. And yet, on the other hand, you have the outbreak of war between Israel and Hamas. How do you see all those factors taken together affecting the economy going forward? How are you thinking about those?
So I'm going to focus in
So
and think
there-
about
there
the
are significant
longer
issues out
trade,
there, as you
tomorrow
point out,
into Friday
global geopolitical tensions are
I've been
certainly
scrambling
elevated,
around. I haven't really
and
listened
that goes
to
for
him.
the war in Ukraine. It
And I
goes
think
for the
that's been
war
messing
between
me up.
Israel and Hamas. We're monitoring
haven't
that. Our job is to
taken a
monitor those
trade
things
the
for
past
their
few meetings
economic
because
implications.
of hosting this stream, but it's
so
all good. I'm not
the
worried about
UAW strike, as you point out, is appears to be coming to an end. Oil prices have flattened out; they haven't gone down, but I guess they've gone down a little bit from their earlier peak. Another one is the possibility of government shutdown.
Bullish
We don't know
stance
about
is
that one.
no rate hike.
So there's plenty of risk out there. But I would go back to the bigger picture
I don't know
from our
why the
standpoint.
market would go up or go down.
I
mean, I don't know why the market would go down, is what I mean. I could see it going
making
up.
progress on the labor market, making progress on inflation, and we're very focused on
and I'm not talking about
getting confident that we have
government
achieved stance
shutdown. I'm
monetary
talking about like
policy
just today,
that is
right
sufficiently
now, in
restrictive.
general.
That's really our focus.
Great.
I
And just
think
one
the
quick
market
thing.
can
You
bounce.
last month had gone to York, Pennsylvania, where you talked to a lot of, last month, where you talked to a lot of small business
I
owners.
just think we need to get down
Just
to
curious,
like
what sentiments did you hear from them, or
416.50?
what did you
Need
pick
to
up
get down
on?
here.
And what was there anything that surprised you the most in terms of what they talked about?
I wouldn't say I was terribly surprised. I was very impressed by York as a town with a real strategy, and I would say it's very impressive what the people there have put together in the face of some difficult longer run trends about offshoring of manufacturing and that kind of thing. They've done a great job as a city, I think. What you hear, and is consistent there, which is people are really suffering under high inflation. You were there. We talked to some people who, were feeling that in their businesses, and other people who were feeling it in their home lives as well. It's painful for people, particularly people who don't have a lot of extra financial resources, who are spending most of their income on the essentials of life. So we know that wasn't new. But that did come through very clearly in the conversations we had in New York. And, I walked away from that even, just thinking that we really, the best thing we can do for the U.S. is to restore price stability,
That is
fully
the
restore
truth,
price
Powell.
stability and
I
not
think
fail
you
in
need
that
to do a little
task
bit
and do
more.
it as quickly as possible, but
$9
also
trillion
with the least
versus
damage
the great financial crisis
can.
at $800 billion. Come on, man. I think you guys do. Like, let's do it. Let's get it over with.
Hi, Chair Powell. Rachel
Bring
Siegel
some
from the
pain.
Washington Post. Thanks for taking
Let's
our
pull
questions.
it back.
You've
and
spoken
have the next 10,
before
15 years of
about
growth
the pain that would likely be
have a
coming for
pullback
the
later down
economy
the
in
road
order
and
to
keep-
get inflation
keep things
down.
going, man.
But since the economy has not responded to rate hikes in ways that would normally be expected, have you changed your views on that at all, on how necessary
check
or
it out.
inevitable that kind of pain would be, say, for the labor market or overall growth?
Well, I think everyone has been very gratified to see that we've been able to achieve, pretty significant progress on inflation without seeing the kind of increase in unemployment that has been very typical of rate hiking cycles like this one. So that's a historically unusual and very welcome result. And the same is true of growth. We've been saying that we need to see below potential growth, and growth has been strong, but yet we're still seeing this. I think
If I go
still
long,
believe,
guys,
and my
here I'm
colleagues,
thinking about it.
for the most
425
part,
is going
I
to
think
be
still
my
believe
target.
that it is likely to be true. It is still
425
likely
is
to be
gonna
true,
be my
not a
target.
certainty, but likely that we will need to see some slower growth and some softening in the labor market, in labor market conditions to get to fully restore price stability. So, but it's only a good thing that we haven't seen it, and I think we know why. Since we lifted off, we have understood that there are really two processes at work here. One of which is the unwinding of the distortions to both supply and demand from the pandemic and the response to the pandemic, and the other is restrictive monetary policy, which is moderating demand and giving the supply side time to recover, time and space to recover. So you see those two forces now working together to bring down inflation. But it's that first one can bring down inflation without the need for higher unemployment or slower growth. It's supply side improvements like shortages and bottlenecks and that kind of thing going away. It's getting,
What's
a
that,
significant increase
425?
in the size
Yeah,
of the labor
I don't mean
market
like
now,
just
both
today,
from
but if
labor
we
force
do get a
participation
rally,
and from
get
immigration.
us a gap up
That's
tomorrow,
a big supply side.
we'll be there before you know it.
Gain.
Because
that is
you don't
really
have
helping
anything.
the
Now you're in the
economy. It's
middle.
Part of why,
You're at the
part
range.
of why GDP is so high.
The
is
low
because
end
we're
of the
getting
prior
that
range was
supply.
425,
so
420.
we welcome that.
Right?
But I think
we're only up
those
on the
things will run their
SPY.
course.
I mean, if you're
and we're
talking about
probably
the
still going to be
SPY
left,
Oh,
we
wait,
think,
hold
and I
on.
think,
I don't-
we'll still be left
feel like
with
it was a pretty nice
some
day
ground to
tomorrow.
cover to get back to full price stability And that's where monetary policy and what we do with demand is still going to be important.
It's not much. I mean, you've seen
Against
how much
that
the
backdrop,
market's
if you've
moved
gotten
today,
any clarity on
and
lags, if
we're
you
up
have an economy
0.5
that's
of a
been so
percent.
resilient to high rate
Of course, we
increases,
came in with the
does that
gap
suggest to you
down,
that there
but-
isn't necessarily this huge wave of tightening that's still coming through the pipeline and that
Telling
it
you, man,
may
I
have
know
already
my-
come into
I know my
effect?
index.
You know, I continue to think it's very hard to say. So
It's not gonna
it's
be
been
no
1
problem to
year
get up into this
at this
200-day
meeting.
moving
1 year
average.
ago, this was the fourth of our 75 basis
425
points
right here. You
hikes.
have nothing
So that's a
here.
full year since then.
Right. Well,
I
once
think
you
we
get
are
into
seeing
this
the
range,
effects
if we
of
reclaim
all the hiking we
421
did last year and
and hold
this year.
421,
We're seeing it.
you have
It's
nothing
very hard to
stopping
know
us to get
exactly
to
what that might be. But you could,
424.
for example, an example where
424,
you wouldn't have
425.
felt this yet is debt that had been termed out. But it's going to come due
I hope
and
it
have to get
does.
rolled
I
over
hope it
next
does,
year or the
bro.
year after. So, and
I'm
there are little
rooting for
things
that
like that
because
where the
I'm
effects are
with you
just
there. Look
taking
at these
time to
tails
get
up
into
here.
the
It doesn't
economy.
wanna
So
break.
I don't.
I
think
still
we have
think this
to
is where it needs to go. It
make
needs to pull
monetary
down to
policy
that,
under
that
great
area.
uncertainty about how long the lags are. I think trying to make a
think it
clear,
needs to
get
get
a
down
clear
here.
answer and say, I'm just going to assume this
Look, it still
is
needs-
really not a good way to do it. And this is one of the reasons why we have
416,
slowed the process
99,
down this year,
417.
was to give monetary policy
20
time
day-
to
where
get
is
into
it?
the economy.
That's that green line
And it
there.
takes time, we know that, and you can't rush it. So
I have that up on mine, too.
slowing
It's
down
that
is
green
giving us,
line.
I think, a better sense of how much more we need to do if we need to do more.
What time frame were you looking at on it?
Michael McKee from Bloomberg Television and Radio. I'm trying to connect the dots here. One quick clarification I want to ask about
I mean, you got volume
Rachel's
on your
question.
side,
You said
right?
you
5
need
minute volume
slower
there,
growth.
that's
You
sell-off.
had always said before
That last
a period
sell-off
of
really-
lower than trend growth. Has that changed? And two, it sounds to me like you're basically saying here that the kind of the dot plots out the window, that every meeting is live with the possibility of
On
a
the
rate
daily? You
increase
said
for right
20-day
now. It
moving
doesn't matter
average?
about the turn of the
Is that an
year.
exponential
and
or-
that there's not an
'Cause
objective
mine is
way
up
to
here.
determine whether or not you've got enough
Maybe I'm reading
tightening
it-
in the
maybe I'm
system.
reading it wrong.
It's
It's at
just going to be a
525, yeah, 20-day moving
subjective
average.
judgment meeting by meeting.
That's what that is.
Well,
I
so
have it right
let's
here,
talk about the dot plot
425.
first. So the dot plot is a a picture in time of what the people on the committee thinks is likely to be a more
Oh, you
appropriate
did say
monetary
425
policy
is the 20-day
in light of
moving
their own
average. Yeah,
personal
that's what. Yep.
economic
We have our
forecast.
200-day
In
we gotta get
principle,
through first
when
there.
things change,
But
it's
like
not
you
that's
say,
not like
this
a
is-
plan that anybody's agreed to or
Right,
that we will
couldn't
do. That's a
hold,
forecast that would
breaks
change,
down.
for example. I mean, many things could change
make
that
this
would cause people to
resistance again.
say, I wouldn't write down that dot,
at
6
the
weeks later. Think
volume.
of the number of things that could change your mind on that. So I think the efficacy of the dot plot probably decays over the 3-month period between that meeting and the next meeting. But nonetheless, it's out there, and we do personally
been a Fed day,
update
we
our
still
forecast, but
haven't
we don't
matched.
formally update the dot plot.
Got a
So,
little decent
I
volume,
think
but-
we try to be as transparent as we can about the way we're thinking about these things. We're
Let's see.
laying out
Let's see
there
what happens.
our thinking, and as we approach the meeting, we'll all be, my colleagues and I will be talking about how we're processing that data. In terms of
Maybe-
we're not really
another
changing the way in
opportunity.
terms of growth.
To the short
What I said was
side.
below potential. So what you have here recently
would be
is
careful.
growth that is temporarily
careful. Just
potential
keep your stops
growth
tight, just in
is
case
elevated
it does
for a
decide
year
to
or
go
two
and then
right
give you
now
a gap down
over
tomorrow,
its trend
in
level.
case it tries
so
to
the
break
right way
out
to
to
think
the
about it is
200-day
what's
moving
potential
average,
growth this year.
or tries to
Right,
go to
People
423.
think trend growth over a long period of
But
time
I-
is
you got
a little
enough
bit less than
selling
2%,
volume up
or
here.
I would say
You
just
should
around
help back you
2%.
up.
But what we've had is with the improvement in the size of the labor force, as I
Or just
mentioned,
watch
through
level
both
2 and see what you got,
participation and
level 2.
immigration.
That'll give you a
and
hint
with
at what you got going on up
the
here.
better functioning in the labor market, and with the unwinding of the supply chain and shortages and those kinds of things, you're seeing actually elevated potential growth. There's catch-up growth that can happen in potential, and that means that if you could be growing at 2% this year and still be growing below the increase in the potential output of the economy. I hope that's clear. That's really what's going on. That's why I would say it as below potential.
But if you could clarify what I asked about the meeting by meeting, are we essentially now supposed to assume that it's a meeting by meeting, live meeting with a chance of a rate increase that will be decided on
Nice. Good job, bro.
subjective
Just take profits when you
criteria
get 'em.
rather than objective
Nice double
at
top
each
up
meeting?
here.
I mean, I don't know that I want to just accept anybody's characterization of it. I'll tell you how we're doing this. So we're going meeting by meeting. we're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at. And then we've come very far with this rate hiking cycle, very far. And you saw the spread at the September meeting of, it's a relatively small spread of people think 1 or 2 additional hikes. So you're close to the end of the cycle. That was an impression a belief as of September. It's not a promise or a plan of the future. And so we're going into these meetings one by one. We're looking at the data.
I knew it.
As I mentioned,
you're going to get people to try and go short, and it's going to break out on keep
We're
your stop
proceeding
short.
carefully
I fucking knew
because
it.
we can proceed carefully at this time. Monetary policy is restrictive. We see its effects, particularly in interest-sensitive spending and other channels. So
you're going to get people to try and go short here, and the market is going to go higher. I told you. I told you that's what's going to happen. It's going to break out. I told you.
Long-term yields we've
because
seen
you
the last
broke
several
down,
weeks,
and you had a failed breakdown. You weren't going
your
down.
asset runoff program.
Look at the volume.
And if there were a judgment that the higher term premium was endangering the dual mandate goals, would that be reason to think about slowing or suspending QT, or should we think of that as more of a technical question around reserves?
So. Committee is not
you're going to get
considering
people to go short
changing
right
the pace
here.
of balance
It's
sheet
not
runoff.
going to break
something we're
down.
talking about
They're
or
not going to
considering.
keep the stop sight. This thing's going to rip on them. I knew it.
I know there are many candidate explanations for why rates have been going up, and QT is certainly on that list. It may be playing a relatively small effect, although I would say at $3.3 trillion in reserves, it's not. I think it's hard to make a case that reserves are even close to scarce at this point. So that's not something that we're looking at right now.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask about the Basel III endgame capital proposal. You've gotten a lot of pushback from people on different aspects of the proposal, and you yourself expressed some reservations. And I'm just curious, could you accept finalizing that proposal without significant changes?
So that proposal is out for comment, and we expect a lot of comment. We won't get those comments until the end of, well into next year. We've extended the deadline, and we'll take them seriously. We'll read them. I'll say what I do expect is that we will come to we're a consensus-driven organization. We'll come to a package that has broad support on the board.
So does broad support mean more support than the proposal had?
It means broad
I'm still
support.
holding. Like I'm not in anything. I'm waiting. I'm not taking a long here. If I get a pullback. Did they just say timeout?
Marte with Bloomberg. I
got it.
In addition to persistence,
I think you're
when
getting
you look
that
at
now.
long-term treasury yields, what else are you watching to evaluate how those tighter financial conditions are hitting the economy, and if it will lessen the need for further tightening? Also, do you think that those higher yields could affect
I was saying, I hope you guys had
stress?
it tight. I had a feeling that was going to happen.
So what do we look at? we look at a very wide range of financial conditions. And in fact, as you'll know,
you were going to get people to go short.
Different organizations publish different financial conditions indexes, which can have
could tell the way that
7
it
or 8
acted
variables,
up here.
or they can have 100
I'm like, you're just going to get a bounce out of it.
There's a very rich
rip people out of those
environment, and we tend to look at a few of them. I'm not going to give you the names, but they're a few of the common ones that people look at.
Yeah, it did hold
and
this
so they're
level
looking
really
at things like the
nicely.
level of the dollar, the level of equity prices, the level of rates, the credit spreads. Sometimes they're pulling in credit availability and things like that. So it isn't any one thing. We would never look at, for example, long-term treasury rates in isolation. Nor will we ignore them, but we would look at them as part of a broader picture. And they do play a role, of course, in many of the major standard financial condition indexes.
I mean, we're going higher.
Your second
just
question
can't.
was?
I just can't. I should have taken it down here.
Banking stress.
I was doing something.
It's something we're watching. As you know, we did have there were issues with interest rate risk.
I guess
and also funding.
This year I knew was
in the March, the things we went through in March and thereafter. And so we've been working a lot with financial institutions to make sure that they have good funding plans and
this pullback
and that they have a plan
because it's
for
not
how to deal
hesitating
with,
to go down lower.
The kind of portfolio
it's not
unrealized losses that they have. We do think the banking system is quite resilient. We had a handful of bank failures, but so that's what we're out there doing, and We don't have any reason to think that these rate hikes are materially changing that picture, which is one of a strong banking system and one where there's a strong focus by banks and by supervisors on liquidity, on funding, and those sorts of things.
Thanks, Mr. Chairman. Scott Horsley from NPR. Last week, you and your colleagues put forward a proposal to lower the cap on debit card swipe fees for comment. Could you just talk a little about the considerations there, what it would mean for merchants, for banks, for consumers, and also just what y'all are seeing in terms of the use of both debit and credit cards in the payment system?
You know, so you're right. We put a proposal out for comment is what we did. And, you know, this is a job that Congress assigned us, as you of course know, in Dodd-Frank, and all we can really do is faithfully implement the statute. That's all we're trying to do. What else can we really do? It's a 90-day comment period. We typically don't comment on these things once they're out for comment, and we do hope that stakeholders, and we know that they will use this opportunity to explain.
When the world of business is constantly changing, you need to stay ahead. So what about AI to generate new possibilities? Machine learning to predict.
Edward Lawrence with Fox Business. So over the last 3 months, the year-over-year PCE inflation was at 3.4%, core well over 3%. You've said in the past 2% remains the Federal Reserve target, but with no rate increase today, how long would you be okay then with a 3% or 3% plus overall inflation?
You know, the progress is probably going to come in lumps and be bumpy, but we're making progress. You know, I think the core PCE came down by almost 60 basis points in the third quarter.
Yeah, some of these questions
so
they ask are just
the best thing I
ridiculous.
could point you to
because
would be
the longer you go, you know,
September SEP,
unemployment's
where,
going to start picking up.
You know, the expectation
there
was
are
that,
lag
that
effects
inflation
to rates being higher as well.
by the end of next year on a 12-month trailing basis
and
would
the lag
be well
effect,
into
like,
the twos.
Some of
and
these
the year
questions
after
they
that,
ask, I'm
further
like, yo,
into the twos.
how did
so
these people
that's,
get there?
That's if you look
Seriously.
historically, that's sort of consistent with the way inflation comes down. It
See
does
what
take
happens
some
here
time.
if you struggle and you can't
And
get
as you
through
get,
the highs.
You know, as you get
See what
further
happens
and
up
further
here,
from those
guys,
highs, it may
like
actually
I
take
said,
a longer
coming in
time.
that 423
good
area
news
is going
is
to be
we're,
tough.
you know, we're making progress,
coming into the
and
200-day
monetary
moving
policy is
average.
restrictive, and we feel like we're on a path to make more progress, and it's essential that we do.
Well, you've said in the past that doing too little on interest rates could take years to fix, but the cost of doing too much could be easily fixed. How robust was the debate about this pause on the doing too little side?
That's always the question we're asking ourselves, and we know that if we fail to restore price stability, the risk is that
Chris,
expectations of higher inflation get entrenched in the economy.
Yeah, absolutely, because I'm going to come in
that's
tomorrow
really bad
prepared
for people.
and focused.
Inflation will be both more high,
watching
both
these
higher
earnings
and more
plays,
volatile.
see if we get an A and B
That's
continuation
a prescription
and stuff
for
like that.
misery.
You have a good rest of your day.
So we're really committed to not letting that happen. You know, for the first year or so of our tightening cycle, the risk was all on the side of not doing enough. We've come far enough that the risks are, have gotten more two-sided. You can't identify that
like
with
I said, I
a lot of
have
precision,
the,
but it does
camera on
feel
and
like
stuff
the risks
tomorrow.
are more two-sided now.
I just didn't feel.
But we're committed to getting inflation back down to our target over time,
Getting
and we will.
myself half decent and stuff. Simon. Just getting over this cold.
Simon Rabinovich with The Economist. Quick follow-up to the question about banking stresses. You talked about how the banking system is resilient. Of course, part of the resilience of the past year stems from the Bank Term Funding Program that you launched in March.
He's talking about it.
Given that
This
bond
can move the
prices have not
markets.
recovered, that unrealized losses are probably mounting, how likely is it that you might have to extend that program in March next year?
Good
Here it
question.
is.
We haven't
See,
really,
even
we haven't
Powell
really been
said,
thinking
good
about
question.
that yet.
It's right here. It's talking about this right here.
It's November 1, and that's a decision we'll be making in the first quarter
And
of next year.
inflation expectations is up
Sorry,
next.
quick
Wow.
second question about inflation expectations. The Michigan
My boy on it.
Sentiment
This is
Survey
what we
showed a
need.
big jump
People
in
like
one-year
him.
ahead inflation expectations last month.
He's here
from
for the traders.
3.2 to 4.2. Last year, you said that particular survey was a really decisive factor in one of your rate hike decisions.
All right, here we go.
If
It's
it
getting ready to
stays
break out
elevated
again.
next time
Spy
around,
might
how
get
big
ready
of an
to break
input
out
will that
again.
be into your December thinking?
Yeah, we look at a range of things. I think the thing got blown out of proportion a little bit. It was actually a preliminary estimate that got revised away, and I said it was preliminary, but that didn't
breaks
get picked
out.
up.
It's
So,
going to just you're going to just see
we look
bid,
at many
boom,
things. I mean,
boom,
so
boom,
really
boom.
look across the
It's gonna
broad
go right up and
array
into the
of surveys and also
average.
market-based
It might bust
estimates, and
because you're going to get short
and we do
covering,
that
guys.
really
Remember how
carefully
many
at every
people are
meeting and
short.
between meetings, and
they've got
it's just clear
$20,
that
$30 on the
inflation
table there for
expectations
profit.
are in a good place. The public does believe that inflation will get back down to 2% over time, and it will. They're right. So, and there's no real crack in that armor. You can always find one reading that is a little bit out of whack, but honestly, the bulk of them are just very clear that the public believes that inflation will come down, and that's, of course, we believe that's critical in winning the battle.
Hi, Chair Powell. Megan Casella with Barron's. Thanks for taking our questions. I wanted to see if you could talk about the neutral rate. You mentioned today that you're still debating whether rates are sufficiently restrictive, and you've recently said that evidence is suggesting policy is not too tight right now. So I was curious if you could elaborate on that at all and whether that means the neutral rate, in your view, has risen.
Yeah.
It's stalling a bit up here, though, which is good.
First thing to say is that it's very important. It's a very important variable in the way we think about monetary policy, but you can't identify it with any precision in real time, and we know that. So you have to just take that. You have to take your estimate of it with a grain of salt. What we know now is, within a range of estimates of the neutral rate, policy is restrictive. And it's therefore putting downward pressure on economic activity, hiring, and inflation. So we do talk about this. There's not any debate or attempt to sort of agree as a group on whether R-star has moved or not. Some people think it has. Some people haven't said that don't think it has. Ultimately, it's unknowable, and so really, again, what we're focused on is looking at the data and giving ourselves a little more time now to look carefully at the data by being careful in our moves. Does it feel like monetary policy is restrictive enough to bring inflation down to 2% over time? That's the question we're asking ourselves. I think years from now, economists will be revising their estimates of R-star as it existed on November 1, 2023. We can't really wait for that in making policy. We have to we have to have those models and look at them and think about them, but ultimately we've got to look at the effects of that policy's having,
I'm thinking
accounting
about
for the lags, which makes it difficult.
Some cues here.
If I could follow up on a wages point earlier, you talked about the inflation outlook, but I'm curious if you have any concerns whether wage inflation at its current level could risk pushing up overall inflation or reacceleration.
And no,
so if you look at
the
broad range of wages,
I'll let you guys know what I do.
Wage increases have really come down significantly over the course of the last 18 months to a level where they're substantially closer to that level that would be consistent with 2% inflation over time, making standard assumptions about productivity over time. So it's much closer than it was.
I think here we go. We should
and that's
start to pull
true
it back.
of the ECI, which is the one one that we got this week. It's true of average hourly earnings and compensation per hour too. So, and all of them are kind of saying that, which is great. And you have to look at a group of them because any one of them can be idiosyncratic in any given reading. So that's what you see. And so what you saw with the ECI reading was, if you look back it comes out 4 times a year. If you look back a couple of quarters, you'll see it was much higher, and then it came down substantially in June. And then the September reading was more or less at the same level as the June reading. So in a way, it's just validating that decline. And it was very close to our expectations internally, too. So I think we feel good about that. Also, I would say it isn't, in my thinking, it's not the case that wages have been the principal driver of inflation so far. Although I do think it's fair to say that as we go forward, as monetary policy becomes
you're going to have a lot of people
more
being
important
short,
relative
a lot of
to
people
the supply side
long.
issues I talked about and
Just be
the
careful
unwinding
out
of
there.
the pandemic effects, it may be that the labor market becomes more important over time too.
Nancy.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, are you now as concerned about overshooting and raising interest rates too much as you are about getting inflation down to the 2% target?
So as I mentioned, I think for much of the last year and a half, the concern was not doing too much, not doing enough. It was not getting rates high enough in time to avoid
Get that bounce back,
having
then take
inflation
short.
expectations, higher inflation expectations become entrenched. So that was the concern. I think we've reached now more than 18 months into this. You can see by the fact that we have slowed down, although we're still trying to gain confidence in what the appropriate stance is. But you can see that we think, and I think, that the risks are getting more balanced. I'll just
Watch
say
us
that
end
they're
up
getting more
right
balanced.
back, right down
the risk
here
of
to
doing
like
too much versus the risk of doing too little are getting closer to balance, because policy is clear. I think clearly restrictive at 5.25% to 5.5%. That range. If you take off a mainstream estimate of the
take that 420. I'm going to wait on a
expected
pop-up. I
inflation,
got it.
take 1 year inflation, you're going to see that a real policy rate that is well above mainstream estimates of a neutral policy rate. Now that's arithmetic. It doesn't really. What the proof is really in how the economy reacts. But I would say that we're in a place where those risks are getting closer to being in balance.
Volatility is going to be up a lot higher too.
How the economy
keep
reacts.
that in
What
mind.
are you looking at to
Don't
be
hold
sure
these
you're not
overnight because the
overshooting?
volatility.
Well, I think what we're looking at is are we still is inflation still
put it that way. It's not going to help
broadly cooling? Is it sort of validating the path we saw over the summer, where inflation was clearly cooling and coming down? Now we've seen periods like that before, and there hasn't been follow through. The data have bounced back. So what are we seeing? Are we seeing, is inflation still coming down? So that's the first thing. Second thing is, in the labor market, what we've seen is a very positive rebalancing of supply and demand, partly through just much more supply coming online, and with labor demand still clearly remaining very strong. When you have the kind of job growth we've had over the last quarter, it's still very strong demand. So, and you see wage increases coming down, as we discussed, but coming down, in a kind of gradual way. I think that's what we want to see, that whole set of processes continue.
Brian. Thank you. Brian Mena, CNN. Do you think that has been any structural change in either consumption or in the job market that's pushing up consumption? You obviously saw the third quarter GDP figures, which were strong, and some economists have expected revenge spending to have fizzled out by now. So I'm kind of wondering if there's been any structural change in consumption.
I wouldn't say there's been a structural change in consumption. I would say it's certainly been strong. And so a couple of things. We may have underestimated the balance sheet strength of households and small businesses, and that may be part of it. There may be, we've been, like everyone else, trying to estimate the amount of savings that households have from the pandemic when they couldn't spend on services really at all, or in-person services. And that's a good point. There can still be more of that than we think. Although at a certain point we're going to be getting back to pre-pandemic levels of savings. We may not be there yet. So clearly people are still spending. The dynamic has been really strong job creation, with now wages that are higher than inflation in the aggregate anyway. And that raises real disposable income, and that raises spending, which continues to drive more hiring. And so you've had that whole dynamic has been, and also at the same time, the pandemic effects are wearing off, so that goods availability, automobile availability is better, or was better.
Tight.
I think it still is. And from a business standpoint, there are more people to hire. And there's more labor supply. So the whole thing has led to more growth, more spending.
You're at 80 cents
and that kind of thing. And it's been, it's been good. And the thing is, we've been achieving progress on inflation.
Volume
in the
is
middle of this.
decreasing, so I'm going to hold off.
It's been dynamic. The question is, how long can that continue?
And I got to get my
I just think the existence of this second set of factors
I would be
at this time, which is the unwinding of the
wait,
pandemic
man, because
effects, that's what makes this
I don't trust,
cycle unique, I think.
I don't trust
and
anything right
we're
now.
still
the only
learning.
reason I don't. Because I still think we have upside.
Took longer for that process to begin than we thought, and we're still learning about how it plays out. That's all we can do.
Usually he's done by 3:15 or so. Usually he's done by now.
Thank you, Chair Powell. Daniel Avis from Agence France Presse. Just a quick question following up on an earlier one. With regards to the Israel-Hamas conflict, the Fed's financial stability report said the Israel-Hamas conflict and the conflict in Ukraine pose important risks to global economic activity, including the possibility of sustained disruptions to regional trade in food, energy, and other commodities. You've had organizations like the World Bank warning of a possible, surge in oil prices if the war spreads to other countries in the region. I'm just wondering how the Fed is monitoring these developments in the Middle East. You mentioned they are, and just what the potential economic impact could be if the conflict does spread to other countries in the region. Thank you.
I wouldn't want to speculate too much.
What
but
I'm saying is I want to try for another breakout, and then
really
be able to
get
it on
does the war spread
higher,
more widely,
right?
and does it start to do things like affect oil prices?
See if I can get
in particular, since this is the Middle East we're talking about. The price of oil has really not reacted very much so far to this. As the Fed, as the Federal Open Market Committee, our job is really to talk about, to understand the economy and the economic effects. And it isn't clear at this point that the conflict in the Middle East
I paid 80 cents for that.
Is on track to have significant economic effects. That doesn't mean it isn't incredibly important and something for people
I might have to stop
to take really important notice of. But it may or may not turn out to be something that matters for the Federal Open Market Committee as an economic body.
Don't try to step in front of
what the Financial Stability Report does is it calls out risks, and that's what it's doing, is calling out a risk of that. And the war in Ukraine, the same. The war in Ukraine, did have immediately very significant macroeconomic implications because of the connection to commodities. So, thank you.
Thank you.
Thanks very much.
That was Fed Chair Jay Powell speaking for almost an hour, 50 minutes. This is the Fed Decides on Bloomberg Television, on Bloomberg Radio. Tom Keene, Jonathan Farrell, Lisa Abramowitz, John off today. And really, I've got to just go straight to the markets. What the Fed said is we don't have any decisions about any further rate hikes. What the market heard is you're done, and you could see a rally in bonds. You're seeing a rally in stocks extending to session highs on the S&P, up more than 1%. The Nasdaq gains of 1.6%. The two-year yield firmly below 5%, Tom. That caught my attention at a time when the Fed is trying to parse through nuance, and the market only hears one thing.
As soon as I get close to break even, I'll probably stop out in this trade.
Including oil, West Texas Intermediate almost getting down to a 79 handle, which the chairman alluded to in the final question on the war in the Eastern Mediterranean. But in the bond market, Lisa, what's so important here is these moves are so large, I have to go to a standard deviation analysis. Conventional financial TV doesn't capture the magnitude of the vote you're seeing. David Rosenberg always brilliant out of Toronto, making clear this is a Fed that is done, and yet the singular point was Leisman of CNBC and McKee of Bloomberg, where he stopped in the middle of his conversation to say we stand ready to be hawkish against this entire arc of
you don't know where the top's going to be.
Whether or not they've lost some credibility, because he could say we're prepared to hike again. We've made no decisions. We're going to have a consensus on the Federal Reserve. The market again really is starting to price out further rate hikes more materially. I will just say this in terms of whether the market is doing the work for them. He speculated that it was really persistent changes in financial conditions, and it's too soon to say. Everything was hedged. Everything was going back to the notes. Everything was very rote. He did as much as he could, as little as possible.
Because I didn't take mine.
I'll go with that. And I like the idea that everything was hedged in the sense of we didn't hear data dependency much, which surprised me. I thought we'd say, okay, the jobs report, maybe we finally see a crack in an economy coming off 4.x% real GDP. I think that
It's not breaking
this
down.
was taken by the markets, which is really what I would focus on. The Dow up 250 points, 1.6% move. NASDAQ at 117 basis points of soft landing in the 10-year yield. The market is speaking volumes.
I'm looking to get out
what they heard.
Somewhat.
And this is going to, of course, be due to revision with time. And we've known that the knee-jerk reaction is not always the one that sticks. But Tom, to me, the fact that the market is jumping on this and that earlier in the day you saw yields tick lower because of their funding announcement, then even lower, particularly at the long end after economic data that came in weaker than expected, and then Chair Powell coming in and pushing them that much further lower as people expect them to be done.
Yeah, it's going to be interesting to see, to say the least. We'll continue to monitor the markets, and we have a stellar group of people to drive the conversation forward. Let's drive the conversation forward right now, almost quoting off Star Wars. He was very far away. A question from Michael McKee. Let us listen to the chairman here
just give me the
on what is
to break
out
out,
there.
like even. Like, I'm just trying to get out of
We're
this
going
thing
meeting by
somewhat
meeting.
even, and I didn't
We're
take
asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive
down 25%.
to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at. And then we've come very far with this rate hiking cycle, very far.
Yeah, I'm not even going to see that's
Who
that's
nailed
the
this?
thing I'm afraid
the
of.
very
I'm not
far
even going
of
to be able
it
to
was
get out
William
break even
Dudley, out of Berkeley for years,
this
of
goes
course,
on.
at Goldman
And look,
Sachs,
now
and the
we're back
former New
here.
York Federal
It was
Reserve
giving me
president.
75. Now they're
Huge
71.
value
So
at
you
Bloomberg
guys,
Economics and a
this is what you
senior
guys don't
advisor
need
in
to do.
economics for
We don't know
all
how
of
options
Bloomberg.
work.
Bill
So we
Dudley,
have
you and
not
I were
closed
in the
above that
lofty,
level
cool
just
climes
yet.
of
That's a
Marrakesh a
3-minute
few
chart.
weeks ago as the international community
They stop everybody
confronted
out.
a
It's still holding
unique
that level.
American experiment,
Come
a
on, baby.
dynamic fiscal inducement, a fiscal stimulus to where we are now. Your essay in the last 2 hours for Bloomberg makes clear you have immense concern that the
filmed me on a
Fed,
fucked
given
up
the
price,
cards
man.
dealt, could get
You
this
gotta be
wrong.
fucking kidding
What
me,
did the
bro.
chairman not address
I
in
could
this press
fucking
conference?
just. Oh my God.
I think that he's quite confident that policy is restrictive enough to slow the
I didn't
economy
want to get
down.
out there. I
And
went
I think
back
the fact
because
that
it was
we
trying to
just
give
had a
me
growth
an
quarter
order
of
that I didn't
nearly
want.
5%.
You gotta be fucking
calls that a
kidding
little
me,
bit
bro.
into question. Also, the notion that financial conditions are truly tight to slow enough to slow the economy down, I think is also pretty questionable because if you look at most financial condition indexes,
if I can get down,
the biggest
matter now,
impulse
I'm
towards
out. So I
restraint
just got
really happened
dicked.
last year.
Got picked out of that
not
market
right
because I
now.
accidentally
So I
hit the
think
order.
that
That's
you know
why
maybe they have done enough,
really
maybe they
hate
haven't.
having
But I
my
think one
orders
reason why
up.
markets are hearing this so confidently
I just
is
accidentally
he
hit
feels
it.
very
I hit
confident the Fed has done a lot.
I accidentally hit
He
it.
feels policy is restrictive.
So I filled an order.
And so I think
right. It wanted to fill me at a ridiculous price. So I went back.
And obviously,
I accidentally
that
hit
depends
it.
on how the economy
And I
evolves,
accidentally
what
hit
happens
the
to
button
inflation, what
again,
happens to the
and it
labor
bounced
market.
back
And
on
the
the
other
fill. And
thing that the market's
well,
taking
it
a lot
said
of,
it said
a positive signal
oh
from
my
is
price was
he talked about how
75.
all these
It was like 74.50.
pandemic effects are
And then when the order cleared, it cleared at
in a good way.
72 cents.
So the labor market is becoming
I'm like,
much more
what?
in balance. Labor force growth.
So you're telling me you're filling my order at 75, but then it comes back 72.50. That's fucking 20. That's 10, 15% lower than what I had.
Chair Powell also didn't seem to think that there was any casualty in pausing, letting time go on, and then restarting rate hikes. He said that
when it hit
wasn't
75, I
at all.
didn't
Do you
feel bad.
disagree?
I'm like, whatever. But then it came
Obviously,
back
if
and
it
it's
turns out that
72.50. What?
They need to do more. They're probably going to have to do more than just 1 quarter point move. You know, if you've taken a break
back
for
here, guys.
let's say
I'm
6
telling you,
months,
we're pulling back.
and the
You're hitting the
evidence
200 day.
accumulates
I'm
that
telling
monetary
you, we
policy
should
is not
pull
as
back
tight
to
as you
highs
think
a
it
day.
is,
High a
and
day.
inflation expectations
We have
are
not
starting to
tested
become
the
an
high a
anchor.
day just
Labor
yet.
market's not
We
loosening.
broke out of the
wages are
high
still
day.
getting,
We should pull it back.
4.5%. Then it's
going to
unlikely
just probably
that one
hang tight
quarter
right
point
here.
move
I can't
is gonna
believe
be
that. Now I
sufficient
got
to
some
do the
making
job.
up to do.
So I think it's either
I
zero
really do.
or
I got
multiple
some
rate
making up
hikes.
to do.
Which is the reason why
That's
probably
crazy.
some people are looking at this like yourself and saying they could be on the brink of an error. There was a question about how financial.
Man. Unbelievable. It's not like one trade's going to ruin me, but it just. Like, what? Like, that's like a pretty big separation between 74 cents and 72 cents. So we have Jeffrey Gunlock on.
that if the assets,
if I get into something else, I'll let you guys know.
Bigger than the assets.
See, I'm going to be looking to get long pullbacks, but I need a big pullback for me to get long this market.
It would mean that all of the obligations that we've made, we can't even, if we
I
sold
get into something, I'll let you guys know.
at today's prices,
AMD doing,
we can just barely cover them right now. It's almost like we're the equity holder back before the global financial crisis.
Tesla's back in that area. It might be a nice short for Tesla.
Financing scheme that
if it can't break through, your stop would be pretty tight,
we
right?
need interest rates
your
to
stop
come
loss
down,
is
or
right
we need
there,
the deficit to
up
come
around
down,
this
and
area.
neither of those
are
happening with the Fed higher for
This would be my stop
and
loss,
with
right?
these wars that
my
we
stop
are
loss would
intent
be
on
right
funding.
Above.
I hear the words blank check. We're on a collision
close
course with this DEFCON going to
above
DEFCON
that level
2,
right there.
And I believe that
my
we've
stop would be
started
at
a bond rally here.
206.22.
I think we've had such
just
a
above
brutal
that
increase. I think the Fed is sounding the right tone. I do think
can
rates
try
are
to
going
wait
fall
for an
as
entry.
we move into a recession
right?
in the first
but that
part
would be
of next
this would
year.
be my stop
And I
loss. So
also
say if I
think
entered it
that
right
based
now,
on
it's
our
204
inflation
or
model,
56.
that the CPI
So I'm giving it
is
$2.
likely to come down on a headline basis anyway.
Giving it
if
$2
we
to
have the
make.
current commodity and energy structure in place,
Well, there's
which
4
seems
there.
to be relatively stable. It
That's
should
2
come
to
down
4.
to about 2.5% by, say, spring or early summer of next year. So I think rates can fall.
That might be
in
a
the
good
backdrop
trade.
Of
You might get it
inflation
on a
being
gap down
calm
tomorrow if the SPY and Qs can't
the
go
economy
higher.
weakening. Rates
I
can
can't
fall,
believe
but
that,
then I
man.
think the
You had so
response, and
many,
this
I
is
had so many
my bigger
opportunities
picture
to
view,
kind of get out
which is
with
extremely
a small
important. I think
loss,
we're going to get,
and then it
started a
fucks
bond
me on a
rally.
fill.
But once the reaction
oh my
comes
God, man, that's so
to
sickening, bro.
The recession, we're
that
going to
makes
have
me
an
so
absolute
fucking sick.
DEFCON
I hate cussing, I'm
2,
sorry, but
maybe had a
that
DEFCON 1 situation
really frustrates me.
on our interest expense, because I think interest rates are going to start going up because of the inflationary response that will be put in place to combat the next recession. Go ahead, I'm sorry, Judge.
No, it's okay, because you, in some respects, echo the likes of the legendary investor Stan Druckenmiller, who was on the network this morning, who most recently said that he had bought a massive position in the 2-year and was talking about exactly the types of things that you're looking at. The longer term charts of funding the deficit, in his words, were downright scary. So he seems to be aligned with your point of view. And I'm going to come back to you, and I'm going to come back to Stan in a moment. But I want to get to Steve Leisman, Jeffrey, who's come out of the room. Steve, the biggest surprise to you was what? It's clear to everybody, and he was explicit in his own words, Jay Powell was, in this move in interest rates, what the bond market has done that he doesn't have to do. I mentioned where rates were on the last meeting, 434.
That's a $200
We've been talking
loss.
4.9 of late. So that's had a dramatic
impact.
It
could have been something small, like 80 to like 120.
And I want to go back to what I said on your show at noon, which is I
just
thought there was a risk that Chair Powell would use this
We're
meeting
struggling
to
up here.
redirect the market.
We could probably get a pullback tomorrow. Probably get a
rate
gap
hike.
down.
He chose, I think, not
let's look at
to.
futures
He said
and
there's
see if
still
we
a
can
bias
see
to hike,
what's
but he
playing
didn't
out.
sound incredibly excited about that bias. He seemed willing to sort of say, you know what,
I don't
yeah,
think
we're
I'll
still
have
thinking about
enough
whether or not we
room
ought
on
to
a
hike
5
again,
minute.
so that's where the bias is.
It's not going to be
but
clear
he didn't
enough.
rely, as he has in the past, on the September forecast that called for an additional hike this year beyond what they've already done. And I think it's really interesting what Mr. Gunlock is saying right there.
Yeah,
because where we are right
guys,
now on the 10-year,
I still
Scott,
feel
is
like we need to pull it
kind of
back.
wiped out the increase
I still feel
in
like
yields that we
421,
had
420
since the
on
very important
421
moment on
on
October
the
17th,
ES needs to be
when we had
tested
that
as
really
support.
strong retail sales
You have not
report.
made it
So
support
at least
yet.
in the 10-year, that's gone.
And here
And
we
I
are
think
struggling
where
at the
we're
200-day
the idea
moving
that Jeff
average.
is saying that this is a possibility of a bond rally. What I think one of the things the bond market has been waiting
Maybe I
for
should have got a
is
week
an
out or so
all-clear
and then
signal
just
from the Fed
held
that at
on to
least
that
there's not
position.
gonna be
But
additional hikes.
my
And
thought
we can get
process
into
is
Jeff's
you guys
very
got to
interesting
understand
comments
what's
about
on the
whether or
other
not the
side of
Fed
this
actually needs
trade.
to cut because of the
Right?
deficit reasons. But I
What's
will
on the
say
other
the
side
Fed
of this
will
trade?
at first not do any
Look
of
at
that
that.
stuff until it feels secure on
Right?
inflation.
Even just
But
right
that
there,
being said,
right? What
the
is
idea
this?
that the
In this area,
bond market has rallied
439,
to this
440,
point where it doesn't
and we
have
went
quite a
down
green light,
to
but it's
412.
not like
Call it 410
afraid
area.
of an instant or all
From
of a sudden
440,
red light
guys.
anymore. It's
Do you
really
understand
yellow
how
going to
much
green
money
when it
was
comes
made
to
on this
getting
short
off
of the
go
break?
signal from the
Right
Fed
here is where
that
everybody
at
got
least there
got
isn't
short.
this very strong bias
Right
to hike
there.
again. I think that was was an important
right there.
change
The break,
in the
you
chair's
brought it
tone
back up, and everybody and their mother
Steve,
got
it's
short.
striking
Look
to
at the
me
volume.
that here we are,
right?
some
Look
18
at all,
months
and it's
into
1, 2,
this
3, 4
regime
bars
of
consistency.
hiking
Look how high they are, because you had the break
historic
and the
move,
rejection.
525 basis points in nearly 18 months.
437 to 412. Guys, there's so many people that are short that are going to start covering. This is a big downside move. And it's not huge. It's huge. It's big. But in 1, 2, 3, 4, 5, 6, 7 days, guys, 6 trading days.
Yeah, I mean, Scott, they're trying to thread a needle here. They're trying to do
it's a lot. So the reason that you may not pull back to a support a resistance area is because of the people that are getting short. These levels are hitting and they're covering because it's just going higher and higher and higher. And then you have people on top of them buying and buying and buying to not let the shorts get their covers. That's why I said earlier during the Fed meeting that you're going to probably see the SPY not pull back, and people are going to get short up at those highs, and it's not going to pull back. It's actually going to rip higher and stop them all out, and that's exactly what happened.
Green signal
because you just got to remember to think about
the coupon curve there. The 2-year note
what's going on right now. Shorts are probably covering their positions. People are setting up long to go into the end of the year.
Curve is right now in terms of
the
10-year
it was just a pullback.
But I don't
we'll get maybe we get another pullback if they don't get an agreement. But we're talking about right now. What's going on right now? People short-minded are looking to get long because of a few different reasons, right? Shorts taking profits. We should just look for that bounce back to the 200-day.
Jeff, do you want to react to what
and stuff
Steve
like
Leisman
that.
just told us?
It's just.
Yeah, I think he's
just
right on.
doing this for so long.
I think that somehow the tone seems
get
to
a
have
real
changed.
good understanding of
there's a good
things
probability
that happen.
in December when we get dot plots. I have a feeling.
I don't know why I didn't go long
as
here.
The current dot plot.
I knew it. I knew they were going to jam the markets down their throats, and I feel bad, man. But
we have an absolute flat as a pancake yield curve.
Just like here.
We had that inverted yield curve of 108 basis points.
They fucking jammed it down my throat by not giving me the order they said I was going to get filled at.
This is the classic action that one gets prior to recessions. You get a yield curve that inverts, and people talk a lot about it, and like it's very inverted, but it hangs out there for a long time. One point that I've been trying to mentor the young people in the investment business is everything takes much longer than you think it's going to. The yield curve inverts, and everybody says, oh, we're on recession watch. No, you're not. It has to be inverted for like a year and a half. But that's
what I
happened.
said.
And then it has to de-invert.
That's what
and
I
that
said.
has now happened. We also have the unemployment rate. While
1 year
is
after
now
the last rate hike.
Noticeably trending higher, and it's above its 12-month moving average, and it's about to go above its 3-year moving average in the first half of next year. That's very recessionary. We also have consumer confidence, and that has started to deteriorate in terms of people's view of the present, and that's starting to close the gap between the always cautious view of the future and the view of the present. These are very recessionary signals, and so I really believe that layoffs are coming. I think we've seen hours come down, we've seen hiring freezes, and now we're starting to see layoff announcements, not en masse. And not on but they're out there in financial firms and technology firms, and I believe that's going to spread. Mm-hmm. So I really believe that we're going to get this bond rally. I think the short end is going to come down, and I hope it happens sooner rather than later, because we can't afford this government that we're running at today's interest rate level. So, it's completely unsustainable. And I always seem to agree with Stan. We seem to have that same sort of Eeyore mentality about analyzing the government's finances.
I mean, you've used words like exciting of late when talking about what it's like to be a bond investor, that you can, quote, buy a T-bill and chill. Now, you have liked the longer end at periods not that long ago, right? The 30-year. But are you saying that the best way to play this now is to buy the short end?
I think you can buy the entire yield curve at this point. I think the belly will outperform. I think the long end will do very well on a price basis, but it might not have as many basis points of a decline. But where the excitement really is in the bond market is in 2- and 3-year lived credit, where if we buy consumer receivables like credit card receivables, or we buy certain commercial real estate, say hotels and hospitality and leisure, forget about office. We're talking about getting yields of 7.5%, 8%, even 8.5% without really any concern about defaults, because the short end is so high, and you're pricing these on a spread above the two-year Treasury, which is up at 5%. And so if you can get a spread of 200 basis points, which is doable, you're talking about yields of 8% with very, very little risk.
I'll go into it on the watch list, but my short-term thoughts are a bounce higher. I want to look for the Qs to get up to the 20-day moving average up at like 360.
On a risk-adjusted basis in a mix of credit
buy
on the short
pullbacks.
end
We've broken back up into that support zone. So what do we look for?
Some recession protection.
This is my game plan for the Qs.
That will come in
handy.
handy,
Look for
I
the
think,
pullback
next year by owning the long
into
end. So
355, 354. See if we can't start making our march up into the 50-day moving average, which they should meet right around here, and this is 1116. Oh, isn't that funny? 1116, 1114, I think, is when the budget is up, guys. Isn't that funny? 13%. What should be there? The 50-day moving average should help meet us there. As we go higher, it's going to come lower.
The prices of a lot of these credits that are in these closed-end funds are down.
So let's see if we can get that pullback and head along. Looks like it's trying to pull back now.
So even if you get a recession and you have defaults, who cares? If you buy
That's my game plan for the SPY or for the Qs.
You've got to worry about credit defaults. But if that bond, due to interest rate increases, is trading at 65 cents on the dollar, who cares if 30% of them default and return nothing in terms of a recovery value? You'll still get 70 on your cost of 65. So you're getting carry of double digits with very high probability of profits over a multi-quarter time frame.
I'm almost hearing you also suggest, I'm sorry to interrupt you, Jeffrey, that, that the equity market can do well in the reasonably near term, because if rates are going to come down, recession's still pushed off far enough. As you said, things take a while to happen. The Fed may not go again anytime soon, if at all. Do you have a view on the equity market?
Well, I've been negative on the equity market for several months, but just a couple of days ago, I observed that the S&P 500 has fallen all the way down to its trend line from the low in 2020 up through the low between now and then. If you just connect those low points. And the S&P 500 came down and met that trend line this week, and we're sitting right on it. So with this relaxation in bond yields, which has obviously been a problem for the stock market, and this trade location on the S&P 500, I certainly think that this would be a poor trade location to be a seller.
Interesting. Josh Brown, sitting next to me, has to advise his clients on what the best strategies are. He has a question for you, Jeffrey.
Hey, Jeff, thanks so much for all your commentary today. I appreciate it. Wanted to ask you, given that in the post-pandemic period, so many surprising things have happened, so many outcomes that nobody could have predicted because of how unique this environment is, what if higher for longer ends up serving actually as stimulus for the 20% of wealthy households that are now earning tons of money on their cash, don't really care what a mortgage rate is because they own their home? Is that a situation where the wealthy continue to spend, thereby negating what would normally happen with higher for longer?
This afternoon, guys, I'm going to go through, and I'm going to go through a bunch of stocks. I'm going to get my whole game plan going. We still have Apple earnings tomorrow night.
How great that would be for all of the
but all for the Fed meeting,
who have been dying based on all of these salary increases and minimum wage hikes.
I gotta get that get back.
Couldn't we have this
today,
situation where actually higher for longer is better?
I got screwed on that.
Higher unemployment
I was
is
making
healthier,
really good headway to start the week. I'm not letting this week happen again.
And not ending it.
So
I don't know, Josh. I mean, there's some logic to that.
See, the thing is the volatility is really high right now, and since I've already taken that small loss,
they have savings. They have
or not a small
loss,
loss. It was supposed to be smaller.
And so them getting a higher interest rate of 6% instead of 2%. I'm not really sure that motivates spending.
What I'm saying is I haven't earned the right to take the risk on going short overnight.
I just think that all of those unusual things that happened that you correctly point out.
I haven't earned the right to take the risk to go short tonight.
When you drop $4.5 trillion of free money into an economy, one should not be careful about predicting that's going to have outsized consequences. So what I think everybody missed here is what we had initially with all that stimulus was a massive boom in consumption of durables and that sort of the manufacturing part of the economy. And then what people missed is it then turned into a services economy because there was all this pent-up demand for services and travel and leisure and all that stuff. And I feel like that's wearing off at this point in time. And so I'm not really sure that those conditions are going to endure much longer. And again, I say higher for longer. I'm going to go back to my number one point that I started this segment on. And that is higher for longer means we have a massive interest expense problem. A massive interest expense problem in this country that is going to be, I believe, the next financial crisis. And so that's what I'm more focused on rather than some Scrooge McDuck having more money in his vault.
What about the idea of cash being king? I've had people come on, the network this week and suggest that is actually the best place to be. That's where the lowest amount of risk is right now. What amount of cash would you have in a portfolio now?
I don't like cash because I think that your interest rate, which is very attractive presently, may decline quite substantially next year. So I would rather be in something that's about 2 to 3 years. So at least you're getting that yield that I talked about around 8%. At least you're going to get that for more than 6 months. T-bill and chill, you can buy the 6-month T-bill and get 5.5 and spend that way for a long time now. The rate is no longer going higher. It's now starting to potentially decline. So I don't think you want to be in cash. The shape of the yield curve suggests that the 2024 will see the Fed cut rates by about 50 or maybe 50 basis points or maybe 0.5%. That's the one thing that I think will not happen. I think that either there are going to be rates will stay high for longer, which is not my base case, but I acknowledge that's a possibility. But if the economy rolls over as I expect, the Fed is not going to cut rates 50 basis points. They're going to cut rates 200 basis points. And that's what's wrong with the cash strategy.
The other thing I heard the chair say today that I frankly don't recall him saying, certainly not at a meeting, was when he was addressing the idea of what the backup in rates has done, where financial conditions have gone. He said they're attentive to all of that. He did mention a stronger dollar being an influence on future rate decisions. And you know what else he said, Jeffrey, which sort of struck me at that moment? Lower equity prices. He actually brought that into the mix today as being a thing that could influence their future rate decisions, that if something happened in the stock market, that could be a powerful influence for the Fed. What's your take on that?
Well, what's new here? I mean, that's always the case. Remember 2018, where we had that bear market in the fourth quarter of 2018 because the Fed said that they were on autopilot for raising rates and doing quantitative tightening, and the stock market dropped 20% in like 4 or 5 weeks. The junk bond market seized up. There was no issuance for weeks on end, and suddenly the Fed started cutting rates and abandoned all of their rhetoric. So I believe deeply that when the recession comes, you're going to see a bond rally. It may be accompanied with a stock rally initially, but they're going to reverse because of the policies. And then we'll see what happens when the stock market starts to drop in earnest with what would be surprisingly potentially a weak economy with rising bond yields after their initial decline.
You also talked about oil prices being a, quote, real problem, that they would perhaps influence more hawkishly the Fed to react if they, obviously took off higher. Are you surprised by the stability in oil prices even as we have a major war in the Middle East?
I think everyone should be surprised that oil prices are down near 80. You would think that there would be significant, shock problems with that war danger, and it's obviously going to be expanding. But I think what you're seeing is the demand just isn't really that strong. Europe isn't doing all that well. The oil prices are down because the economy is slowing down. And so I do think that's a wild card. Oil could very definitely go higher on the wrong outcome in the Middle East. But for now, the commodity complex is completely asleep, oil included, where the Bloomberg Commodity Index continues to gently drift lower.
Listen to what he's saying,
still below
guys.
its 200-day
This is
moving average,
important.
which continues to decline. So that's just another indicator, I think, of less economic strength than we saw, say, in the GDP number that just came
Got
out. With
ISM manufacturing
handle. I
down.
noticed the GDP now today from the Atlanta Fed was cut from 2.3% to 1.2% for the current quarter because of the very bad ISM report that came out today that I think really is a further corroboration of this economic slowdown that I think is going to be building steam in the months ahead.
So let's look at the 10-year before I let you go. As we have this conversation here, 475 is where we are. Given your economic projection, what you think happens going forward with the Fed, if you think they're done, the end of next year, do we have a two-handle on the 10-year, the three-handle, two-handle? What is the 10-year at the end of next year, do you think?
That's way too far out to forecast, but I'm going to say that the 10-year Treasury will probably be not terribly different from where it is today at the end of next year. I think we'll go into a two-handle first, but then it's going to start rising. So this is an active situation. So for now, bonds, I think, are in a good spot. I think the 10-year will see below 450 before we see above 5%. And the 10-year Treasury has not closed above 5% in this cycle. It was right on it, but it never closed above it. I think we're headed to in the lower fours before we head back up to where we are, or a little bit higher than we are today at the end of next year. But don't hold me to that, Judge. I have to deal with the next 2 months here to close out this year before I worry about 2024.
You know, I was going to preface that question with, I know you hate this question, but we love the question, but I didn't feel like saying that, even though I knew you hated it. But it is what it is. I may ask you again sometime, but we're all good.
I bet you will.
I appreciate you. I appreciate you joining us as always, Jeffrey, exclusively here on Closing Bell, right after the Fed chair finishes. We'll see you next meeting.
You betcha. One more to go for 2023.
Yes,
good luck, everybody.
Right. Yep. You as well. That's Jeffrey Gunlock of Double Line. All right, Josh, I'll come back to you. The idea, look, he even says it himself. I wouldn't be a seller necessarily of stocks here, although he obviously favors, and he's a bond guy, and he has a specific trade and the best way to play it.
Yeah, and I don't think you have to choose. One of the things to keep in mind, in 2022, there was nowhere to hide. You lost money on cash relative to inflation. You got killed in bonds, down 17% in the highest quality bonds you could have bought, and you got crushed in the stock market, down like 18, 19%. In that environment, there was a lot of talk about, well, there's nowhere to hide. In this particular moment, it's the exact opposite. You can buy stocks at depressed multiples away from the Magnificent Seven. You can buy stocks at historically average multiples. Then you can also look at the bond market for the 40 portion of your portfolio or the 30, and you have a lot of choice. You can choose, do I want to take a little bit more credit risk? Jeff's talking about leverage closed-end funds. Great idea if you have the wherewithal. You can buy high quality, take no credit risk, all term risk. There are so many options right now. You can construct a portfolio depending on how you sleep at
all
night,
of you guys
which
joining
risks
us.
you want to take.
I love you all.
We didn't have these
sorry
choices even as recently as
some of the
1
performance wasn't
year
there,
ago.
and
I think from that
instinctively
standpoint,
feeling that
you may not
AMD
love
long
the
and
VIX
not
at
being able
18,
not to
19,
say, yo,
but you
this is
have
what
to
I'm
love
doing.
The forward-looking outlook. To Jeff's point, even if there is
what
a
I'm going to do
recession,
today
you
is
are
I'm going to
being
cover some of these
adequately
earnings. I'm
compensated
going to start going
in
over a lot of these
certain vehicles
levels,
right
and
now
I'm going to come out with a
for
watch
that
list and give you
risk,
guys some of
even
the
if defaults
names
tick
that I'm
up,
going
which,
to
by the
watch and
way,
give you my game
I'm
plan
still
for
waiting for it. Hasn't happened yet. So that's where we are.
Chris
and I totally agree with
just gave
his
us
premise from
Google.
that standpoint.
So are
Look
you,
at that.
Again, let's
That's
turn
nice.
our eyes ahead.
Look at that.
Tomorrow,
That is a nice
Apple earnings. Oh, yeah.
setup, guys. That's a really
Mega
nice
cap
setup.
is all rallying today. NASDAQ is by far the strongest area of
retest.
the market today. It's up 1.5%. You see all of those stocks, Tesla included, which has gotten crushed lately.
He was
what
right
are your
about that,
expectations
man.
here? Is the table now set
back,
for a mega
bang.
cap move because rates are coming down?
So I'm
Yeah,
usually
we'll
the
have a
guy
watch
that
list
pours
out
cold
tonight.
water on this idea
100%
that
for
any given
sure. I'm
earnings
getting ready to
report is
work on
going
it
to be
right
really
now.
important. I actually
Love you
think
guys.
this is going to be really.
See you guys tomorrow.
Apple is going to
See you
set
guys
the
tonight.
tone for whether or not we can have a meaningful large cap tech rally into year end. And if we don't get a meaningful large cap tech rally into year end, I don't think there's enough leadership elsewhere to really move the chains for the S&P 500. Apple Apple, importantly, this is the first real quarter where they'll be able to talk about the phone, pre-orders of the phone, actual sales of the phone. They also did something really interesting, the first ever primetime announcement of a new product lineup. It was more about the laptops, the MacBook, but so what? I think that the setup is nice for Apple. It's probably in a 10% drawdown right now from the all-time high. Not huge expectations. A lot of new products coming along. I like the trade into year-end here. I think you're going to be okay with Apple going in.
Yeah, we're looking forward to tomorrow. Obviously, you stay with us. We're now in the closing bell market zone as well. CNBC senior markets commentator Mike Santoli is with us to break down the crucial moments of the trading day. Christina Partsinevelos looking ahead to Qualcomm earnings. They are in OT. Mike, great to have you. Your thoughts?
You know, we spoke in the middle of the day, Scott, about the question on Powell's press conference was, is he going to be really strident about trying to put another hike in people's minds for December, and also very assertive about saying that we really have to wrestle economic growth to the ground to take care of inflation. He sidestepped almost every opportunity to be very dogmatic about either of those points. So December, they want to be done. They think they can be done. They can't say they're done, but he all but said, you know, let's just wait and see, and patience is a virtue at this level. That's fine. I think it was sort of the third thing this week, all these anticipated events that maybe the market was seeing as hazards, that it came out in a benign fashion, right? Both the Treasury announcements so far as well as this one. So yields finally down below 4.8 on the 10-year. That's a big deal. Never got below that last week. We'll see if it really does continue into a genuine breakdown in yields. And then, you know, the stock market was already finding a little bit of traction in the past couple of days, and now this was enough of a window to see if it can stick, to be a little more than a mechanical oversold bounce. And we'll see. Honestly, I mean, the S&P is only back to where it was last Tuesday. We're not breaking new ground. But the last meeting, when he was in September 20th Fed meeting, we're at 44.50 on the S&P. The VIX is 15. And 10-year Treasury was 50 basis points lower. So all those things meant, with tighter financial conditions now, he didn't really feel like he needed to put people in a worse mood.
The proceed carefully, right, which he's used now for a couple of meetings in a row, and he used those words multiple times. To me, that's code for we're done if the data allows us to be done.
Yeah, exactly. Prolonged pause, whatever you want to call it. Now, he did also say there's nothing stopping us from staying here and then hiking down the road, which of course is true.
Of course he's going to say.
And I think it's fine. I think everybody can live with that at this point if market Treasury yields don't start to fly.
Well, right. He doesn't want to pile on top of a significant move that you mentioned, 50 basis points since the last meeting. He doesn't want to pile on top of a big move in rates and cause undue harm where he doesn't have to do it.
That's right. Yeah, and that's where we are. I mean, look, it's not like all the economically cyclical stocks started to rip on this because the economy's off to the races. It is just the big NASDAQ names. It really is just the index.
I want you guys to think about this. If we gap up tomorrow,
reactions are now improving.
Think about the short
most of the quarter didn't matter
from
if
where
you
we
beat or
closed,
missed, you were getting punished.
because it would
That
leave
turn
you
with
for
Amazon,
a
how I feel about
nice
this,
down
AMD
day
yesterday, amazing
where you could get a
follow-through.
gap
So
up to
actually a miss on
424,
guidance.
425,
That's a better tone
and we pull
when
it
you
back
get
to
those
like
post-earnings
even
reactions.
just this area,
So everything kind of
and you're only
going to
be down,
I
don't know,
and yeah, so find some kind of equilibrium.
like a half
Just
of a
survive
percent.
this earnings season, I think, is the job.
Just like today.
As Pisani was saying today in his note that he sent out this morning, earnings estimates for the fourth quarter are coming down.
Yep.
60% of the companies that have reported thus far have had their estimates cut. Let's not lose sight of that as well.
It happens. It's been happening every quarter. So you're kind of going down 3 or 4 percentage points in growth, and guess what happens? We beat by 3 or 4 percentage points when you report. So I'm not saying this to be dismissed.
So this is the area I'm going to look for the buying.
But I do think that it's not
421
completely out of the realm
now,
of what we've seen as a pattern.
No, I only bring it up because part of the bullish story moving forward is that earnings estimates remain stout and strong, and you're all good.
You're all good. I mean, look, there's a lot riding on
again, I'm going to look at everything tonight and go back over.
All right, so I mentioned Apple's tomorrow.
Go back over my charts and actually do my research, but right there, probably be a buy area.
Yeah, well, global smartphone sales actually fell 8% in Q3, and that's the lowest level in a decade, according to Counterpoint Research. So that slowdown is expected to weigh on Qualcomm's latest earnings report, and why the stock has been down about 15.5% just over the last 3 months or so. Interest rates.
All right, have a great afternoon. I'll see you guys in just a couple hours.
Expected to hit over $5 billion in the quarter, helped by a contract from Apple in early September, We did learn that Qualcomm signed a 3-year deal to supply Apple with chips. That deal is really a testament to Qualcomm's product offering, if even Apple can't replicate the chips. However, Deutsche Bank analysts think this benefit is already priced into the stock. Much like we're seeing with PC sales, investors will be looking for signs of a smartphone bottom, along with details on demand strength from China, including any rush Android orders ahead of the holiday season. One area of concern, though, could be the auto segment, given the weakness we've seen from other chip makers like onsemi, who warned of an EV slowdown.